process right now. What started before April 2nd, though, was this allocation abroad to international equities. Is that just a moment in time or an ongoing story? How do you feel about European stocks right now following the agreement over the weekend?
I mean, we're relatively constructive because I think, well, first of all, from our perspective from our clients, nearly 40 million people who for many, many years have become very accustomed to just the U.S. dominant trend, really being the ruling trend, for good reason. But I think that when the international versus U.S. or, U.S. versus ex-U.S. argument is often talked about or discussed, it's framed in this context of all or nothing. And it's, just dump U.S. at the expense of everything else. And of course, that's never how this works for any kind of balanced portfolio. So it's really a matter of looking at what has become maybe a little bit of an improved opportunity set relative to what was. So if you're just looking at Europe, for example, relative to what was, clearly things have improved. Even the internals of the DAX, those have been much stronger this year relative to the S&P. At one point, you got to almost a third of members in that index making a new 52-week high. We have not gotten there on the S&P 500. So there are still relatively healthy internals when you compare it to the U.S., but I wouldn't look at it at all as some sort of all or nothing trade.
To be fair to people who have been long exclusive of the U.S. for the last decade, there have been many, many good reasons to have that trade on. I think they still face the same question. When I buy America, I know what I'm buying. When I buy Europe, what do I own? What am I buying?
Well, the sector bias, I think, is really important there. Because, when you're in the U.S., I mean, the tech-centric nature of this market now, not just tech, the sector, but tech and tech-adjacent parts of it. I mean, you're getting to half, and in some cases more than half of the index. Plus, tech has become more of this cyclical beast, in addition to being a growth beast as well. So I think that that's a really important, certainly has been an important driver of outperformance over the past several years. But when you compare that to Europe, if it's a little bit more financial centric in certain countries, or if it's a little bit more, auto and manufacturing centric, if you don't get that important cyclical upswing, then it's going to be really tough to outperform.
What is it you always say?
Luxury and weight loss.
That's right.
And right now, weight loss is kind of, on the back foot, evidently, with Novo. So
luxury too.
Exactly. So there you go. Yeah. Although it's different between Hermes and LVMH. It seems like a totally different situation.
What's gone wrong with luxury?
Yeah, you would know.
Well, it is bifurcated. I mean, I'm not a luxury analyst, but it's
in a way.
Yeah, I think that maybe I'll just leave it at that.
Okay.
I don't know.
Sensible. All right. Keep you out of trouble. Kevin, thank you. It's good to see you. Thank you, sir. Kevin Gordon there of Charles Schwab. Let's give you an update on stories worldwide with our Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. Blackstone confirmed one of its employees was among the victims of yesterday's deadly shooting in a Manhattan office tower. A gunman opened fire inside, killing 4 people before taking his own life. Authorities say he intended to target the NFL's a look at Stellantis shares. They are falling 3.5% in early trading. The automaker shared it expects to take a $1.4 billion hit from tariffs in the second half of this year. This after Stellantis recorded a near $350 million impact from tariffs and lost production in the first half. Shares have been struggling, down over 25% this year. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you very much. More from Yahara in about 30 minutes' time. Up next, the Morning Calls Plus. Zach Waring of CFRA saying retailers will have to share the cost of tariffs with the consumer. That conversation up next.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
One thing I think we're missing right now is part of what's driven, I think, the U.S. stock market return is the weakness in the dollar, right? DXY is down significantly. You look at European, stock markets, for a U.S. dollar investor, they're up significantly more because of that. So I think the weak dollar, if that starts reversing, that will actually put some pressure on U.S. stocks. I do think we're resilient. I think it's about the growth story.
Peter Schiff, Academy Securities, slightly constructive on a range of issues, but he thinks it's too soon to tell the impact of higher tariffs, and he's not alone. We'll have that conversation in just a moment. Equity futures positive by 0.2% on the S&P, on the Nasdaq 100 up by 0.45. That's the price action. Your morning calls look like this. First up, Bank of America raising its price target on AMD to 200, saying it has a comfortable average selling price premium over Intel. Next up, CFRA upgrading Alaska Air to buy, seeing upside potential in its 3-year strategic plan. And finally, RBC raising its price target on Tesla to 325, citing a better than expected robo-taxi launch. That's the latest on Tesla. That stock is up by, or rather down by 0.3%. Elsewhere, we turn to another read on the consumer on deck for 10 a.m. Eastern Time. Bloomberg's Michael McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, you take a look at that chart you just showed, and you can see that consumer confidence has been falling. The question is, what does that really tell us? We tend to watch what consumers do, not what they say. That's the old Alan Greenspan line, because there isn't a huge correlation between the two. Confidence and spending data only modestly correlated. The fundamentals will tell you pretty much the same thing as the data. The correlation has also weakened since the pandemic. If you're a statistics nerd, basically the R-squared is around 0.3 at this point. So there is some statistical validity, but not a whole lot of predictive power there. People thinking it is easy to get a job has been falling, and that's what really drives the Conference Board numbers. We'll see what that comes out with today. The problem, of course, is that the jobs report is on Friday, so these numbers come out a little too early for that. But the Conference Board does track buying intentions, and they have been very mixed. There's been little change in intentions to buy cars, but there are fewer people who say they want to buy homes, and more people who say they want to buy appliances. Kind of the interesting question for the numbers that come out today is last month, fewer people said they wanted to buy air conditioners after the heat wave we've seen. That may change in the numbers at 10 o'clock this morning.
Mike, before you go, and it's great to see a summary of what we're expecting, can you give us a sense of the quality of the data and the survey responses and how much there is an increasing estimation of what the numbers should be rather than actual measurement in the U.S. economy?
Well, the Conference Board, obviously, as is the University of Michigan, are private surveys. But in terms of the actual data we're getting these days, we're having more estimation, particularly for consumer prices, where the Bureau of Labor Statistics has to estimate prices in some categories because they don't have enough people now to do the actual surveys. The accuracy is still very strong, but it's not what it was, and they do their best to statistically adjust the numbers. It's just one more problem that the Fed and others face in trying to figure out what's going on with the economy.
Michael McKee, thank you, sir. We'll come back to you a little bit later. Mike, thank you. Let's stick with the consumer. Zach Waring of CFRA writing, the consumer is holding in as long as employment remains stable. Retail hasn't seen the full impact of tariffs yet. Zach joins us now for more. Zach, welcome to the program. Are you suggesting the tariff test is still ahead of us?
Yeah, thanks for having me. Yeah, we do see, kind of coming into results, creeping into results in the second half of the year. And you really haven't had any trade deals yet. So you really aren't sure what that, kind of final rate is going to be. You've got a couple of deals on the table, but nothing's really signed in stone yet. So, we really think you're going to start to see it at the end of the second half and into 2026.
How much, Zach, do you think that companies are prepared for this and have the pricing power to actually respond to this versus taking it on the margins like we're seeing in some places, particularly in travel, particularly with Procter & Gamble, with an increased estimate for what kind of tariff hit they were going to take this morning?
Yeah, I think it's going to be company by company based. I think companies that have strong brands that are performing well right now can pass on some of those costs to consumers. And then you have other brands that aren't doing so well, and the lower end consumer is not holding up as great. And those companies will probably have to eat some or most of those costs. It's not as simple as just, it's a 20% tariff coming out of this country. We're going to have to mark our products up 20%. That's not how the consumer operates. And economics is a little more, complicated than that.
How much Zach, how much are retail companies moving production back to the United States or moving production at all in response to some of these threats, given it's not clear what the rate is going to settle out at any given place in the world?
Yeah, I mean, you're not seeing it very often. I mean, you have companies that have manufacturing in the U.S. already that are, kind of reinvesting and, maybe bringing some more supply online here. But you're not seeing, like, for instance, apparel and footwear manufacturers haven't just picked up their manufacturing and moved it back to the U.S. And I don't think you'll see that, at least not in the near future. I think as soon as automation kind of catches up and companies are able to, bring production here at the same cost as they do in Asia, then you might see more manufacturing come to the United States. But you're just not seeing it for companies that have no exposure to the U.S.
Zach, some companies are better at managing inventory than others. And I'm thinking about some landmines that we've hit over the past few years, and Target comes up repeatedly. As we work our way through earnings season, are there a few companies that you've got your eye on that you're a little bit worried about?
Yeah, I think a lot of these companies have done well in recent years. Obviously, there are some that, have kind of blown up on themselves in recent years. But, I think overall, the retail industry has really done a good job of coming back from the COVID chaos and inventory there. We really think that, companies are going to probably bring a lot of inventory in quicker. So you might see some inventory issues creep in after the holidays. But I think, and that would just be from over ordering, to kind of beat some of the tariffs, potentially. But, currently, I don't see a lot of issues in the inventory situation.
Zach, are there some business models that just don't make sense anymore? And I'm thinking of some of these producers that were just relying on cheap labor abroad to make apparel and bring it over to the United States. And in my mind, I'm not sure that's a sustainable business model anymore.
No, you're right. I agree. It's going to be difficult now with the new tariff rates. You're just not going to have, I think it's really going to hurt the really low cost items. I think of some of the Chinese, $1, $5 brands that, have really come up in recent years. I think they're going to struggle because, 30% there makes a really big difference. Obviously, we don't know the rates out of China yet, but I think they'll probably be impacted the most.
Zach, who do you think the big winners are?
So we really like big, large global players. I think they have the ability to, they generate a lot of their revenues outside of the U.S. So, even if there is a big tariff impact, it'll be just on a small portion of their revenues. We like players that have negotiating power. So the larger players, again, have more negotiating power with suppliers. And then obviously the brands that have momentum. I kind of think of Hoka, On, some of those brands that have really done well in recent years. They have the ability to raise prices on consumers.
Over the past couple of years, there's been a theme where the strong keep on getting stronger, the big keep on getting bigger. And I'm talking about corporate America. I'm also talking about consumer balance sheets. Do you expect that to only continue and then some based on what an upper hand some of these bigger multinationals have?
Yes, we do. And retail, especially because of their negotiating power compared to, small businesses from the U.S. Someone who buys, 100,000 of a certain item have much less purchasing power than a Nike, who, buys millions and millions of, certain items and goods. So, we think this is going to make it worse.
Hey, Zach, appreciate the input. Thank you, sir. Zach Waring there of CFRA. The tariff test is still ahead of us, and there's going to be some losers. Some major losers, that's for sure.
And we're already seeing that on a stock-by-stock basis. Some companies coming out, giving forecasts, getting rewarded for it. Others, not so much. I'm thinking of Stellantis. Others withdrawing entirely. UPS, how much is this because it's a company that has a restructured business model versus the overall backdrop? But this is going to be an ongoing process of assessment, and people have different opinions about how great that will be.
Equities positive this morning. The opening bell about 65 minutes away. In just a moment, we'll get you some trade data. Mike McKee's going to break that down. Plus, we'll catch up with Stephen Stanley of Santander. Stephen Stanley is looking for zero on Friday. Payroll's Friday, and Stephen is looking for zero. We'll get into the wire in just a moment. From New York, you're watching Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
60 minutes away from the opening bell, equity futures positive by 0.2% on the S&P 500, up by 0.4 on the Nasdaq 100. In the bond market, 2-year, 10-year and 30-year yields are lower this morning, down by 2 or 3 basis points at the long end of the curve. On a 10-year, 438.39, on 30s, 492.45. A week full of bond auctions for Lisa, and economic data as well. So let's get you some economic data now with Mike McKee. Good morning, Mike.
Good morning, John. Well, we've got the trade balance narrower than anticipated. $86 billion is the total. That's down from $96.4 billion revised from the prior month. Imports fell by 4.2%, and exports also fell by 0.6%. These numbers basically telling us what we already knew, and I know you'll talk about this with Steve. It's going to be a little harder to untangle GDP tomorrow because of the trade impacts. We had a big pull forward in imports in the first quarter. Second quarter looks like definitely now a real rebound in that area, but that's not what is really going to be telling us what's going on in the economy. So the Fed's going to have to untangle it, as are we.
Are we getting more of a sense, though, Mike, of just what the ramifications from some of the tariffs and the trade tensions are how they're manifesting themselves in the economy?
Well, it's going to be interesting, Lisa. We get jolts today, the job openings numbers, and we have seen them hold steady, which has been kind of unusual. Quits rate actually went up a little bit the last month, and we get consumer confidence that we just talked about. But the thing that probably makes the most sense is the Fed looking past some of this data to the earnings numbers we're getting now. The P&G number out today, the idea that they're just giving you a broad guidance, and their chief financial officer says consumers are under stress. That's going to register with the Fed. And then UPS pulling its guidance for the year. They're all in the same position that the Fed is. And if the companies don't know what they're going to be doing, then the Fed is going to be sitting by and waiting to see what happens, especially once we get to tariff day on Friday.
Mike McKee, thank you, sir. With the latest, looking ahead to that Fed decision, that economic data just moments ago, the trade balance narrowing. At the end of March, that was negative $162 billion. We've basically halved that over the past few months. A lot of that was front-loading going into the second quarter, and now we're starting to unwind a whole bunch of it.
Yeah, which goes to the question of how much does a trade deficit end up really getting shrunk as a result of some of the tariffs? When do we get a sense of what the full read is on the new tariff regime at a time when a lot of people say we really haven't seen the ramifications?
We get some more data through the week. The big one on Friday, payrolls Friday, just around the corner. Check this out. It's not a typo. This is what the graphic is meant to look like. Stephen Stanley of Santander, with a bearish forecast for Friday, he is looking for 0 jobs to be added, citing a quote, a reversal of the outside increase in government education jobs in June, as well as tariff-related uncertainty and a soft market for college graduates and students. Stephen joins us now for more. Stephen, good morning.
Good morning.
If you could flip this week and payrolls Friday was Wednesday and the Fed was Friday, if they had that information and it was 0, would they be cutting?
Probably not this week, but I think it would certainly nudge them in that direction. As I mentioned, the biggest piece of the weakness for me is in the government sector, and I think that's something the Fed would probably want to look through. I mean, remember, government employment was up over 70,000 in June, so this is just kind of a reversal of that. But private sector, we were in the 70s in June. I have it at 55 in July. If you go back to last year, we had 14 consecutive months of payrolls being up at least 118,000 through May, and then June, July, and August were all double digits. And I think part of what's going on there is we have a very soft job market for college grads and college students looking for summer jobs. The seasonals assume a certain amount of hiring in the summer, and we're getting less. And so I think we're likely to see a repeat of that this year, with a little bit of weakness on the private side in the summer, and then hopefully normalizing again in the fall.
Can we just stay on government jobs? If we're supposedly meant to look through the weakness in government jobs, shouldn't we have looked through the strength as well?
Well, that's a good point, and I would say we that definitely wouldn't.
The reason I bring that up for obvious reasons, as you know.
Government employment was very strong for a long time, and then if you remember early this year, everybody was getting very upset about the possibility of huge layoffs in federal government jobs, which have kind of we've had negative numbers there, but it hasn't been enough to really move the needle a lot. At the end of the day, I think, the Fed is not ignoring the government sector when it comes to jobs, but it certainly gets a lesser weight than the private sector.
There's nothing inflationary in your projection. It doesn't feel like this labor market is predictive of some sort of inflationary spiral on the heels of tariffs. So why shouldn't the Fed be cutting to potentially provide a little bit more support, especially for entry-level students?
Yeah, well, I mean, the inflation concern has nothing to do with labor costs, for once, right? This is all about the possibility, from the Fed's perspective, that you get a one-off increase in prices from tariffs, and then that somehow morphs into a more sustained increase in prices. I understand the Fed's reticence to accept the textbook view that tariffs are a one-off, right? Because we had 2021, they said transitory, and it wasn't. And you can understand they're once burned, twice shy on that. But I think this is an unusual instance in which labor costs are really not a big factor in the inflation story.
Just to build on that, there is a theory that you can't get some sort of inflationary spiral unless consumers have the ability to pay for it. Unless they can absorb prices continuing to go up, you are going to see a one-time price shock. Is that transmission mechanism broken this time?
Well, I think that's the biggest difference between 2021 and 2025. I mean, in 2021, households were flush from all the money that had been distributed by the government during COVID. And I think that helped to kind of perpetuate that inflationary cycle. We don't have that this time around. A tariff increase, to the extent that it gets passed through to consumer prices, is a loss of purchasing power for households. So I do think we'll see relatively soft consumer spending as those price increases filter through.
What do you expect to hear from Chairman Powell tomorrow?
Well, I think it's a really interesting juncture for the Fed, because I think early in the year the tariff thing hit, and the story at the Fed was we're going to sit back and let's watch this play out. We're not going to do anything. We're not going to engage. The problem is that this was certainly my original thought, that the price increases and the economic impacts would cycle through within 3 or 4 months, and the Fed would be able to reengage. Now it looks like it's going to drag on for a long time. You've got Bostic and others at the Fed now saying these price increases aren't going to be fully in place until sometime next year. So the game plan is changing. And I think I'm very interested to hear exactly what the Fed is thinking in terms of what do they need to see. Because if they're just waiting for the tariff effects to be totally through, they're going to be sitting on their hands for a year. They can't do that, right? So I think it'll be, even though they're not going to move tomorrow, it's going to be a very interesting meeting.
How divided is this FOMC going to be by the time we get to September?
It could be very divided. I mean, look at the June dots. We had 9 FOMC participants who wanted to go twice this year, and 7 who wanted to go not at all, and a few, kind of in the middle. So that's pretty divided.
It's going to get messier too, because by the time we get to September, we might have a decent idea of who the Fed chair is going to be as well. So you face this odd situation where you have division on the committee, and maybe the forward guidance that Chairman Powell starts to offer for 2026 kind of becomes irrelevant, because you start focusing on a different character. What does that mean for market pricing, and who to listen to, who to ignore, and how we're going to be guided into 26?
Well, it's just, as you say, it's just a lot of uncertainty, right? So the longer the process drags out, and the closer we get to May of next year, I suspect, to the extent that we don't know who the next Fed chair is going to be, the markets are going to be speculating and going back and forth depending on who, the latest leak of who's in the running or whatever. If we get a name early, and the markets conclude, okay, this person is going to get passed through the Senate and everything, this is going to be the person, then it does create a little bit of uncertainty around, as you say, does forward guidance from the current FOMC matter? I mean, you've got 19 people on the committee. You're only talking about necessarily replacing 1. So maybe the committee, the nature of the debate changes, maybe it doesn't.
Just before you go, how much pushback have you had over the zero?
A lot of curiosity. I don't know that I would say there's been a lot of pushback, but as you can imagine, a lot of clients are very interested in getting some idea of the reasoning.
When that number drops at 8:30 on Friday, I think we'll all be thinking of you. Stephen
Stanley,
well,
my fingers crossed.
We hope you're right. We'll see. for your sake. I hope the economy's better than that for our sake, for the labour market.
Yeah, although how do we interpret this? If it's just government jobs that are overstated and then understated, how good is, 100K and how bad is 0K? It's really going to be the market kind of parsing through this, and that's the reason why people are so focused on the unemployment rate.
This might be the last time we have a Fed meeting without knowing who the next Fed chair is going to be. Now, this, of course, would mean they'd have to have a pretty accelerated interview process through the summer and into the September meeting. But when we go into the next Fed meeting knowing who the next Fed chair is going to be, or at least having a better idea of who it's going to be, things would be a whole lot messier.
Well, in the meantime, it's going to be he's running or she's running, and we're going to look at any kind of potential dissents, the first since 1993, and say, well, that's the audition slip.
That basically describes tomorrow afternoon. OK, before we get there, let's give you an update on stories worldwide with some of our top stories. Here's our Bloomberg Brief with Yahara. Hey, Yahara.
Hi, John. Blackstone confirmed one of its employees was among the victims of yesterday's deadly shooting in a Manhattan office tower. A gunman opened fire inside, killing 4 people before taking his own life. Authorities say he intended to target the NFL's headquarters, also in the building, but ended up on the wrong floor. Meanwhile, Union Pacific has agreed to purchase Norfolk Southern in an $85 billion cash and stock transaction. It's the largest deal to ever take place in the rail industry. The tie-up is poised to transform the North American rail market, uniting Union Pacific's network across the western U.S. with Norfolk's East Coast routes, of course, pending regulatory approval. And Novo Nordisk's shares are down nearly 20% after it lowered its financial forecast in an unscheduled update. The drug maker blaming slower demand for its key weight loss drug, Wegovy. Novo also gave another update saying its head of international operations, Maziar Mike Dutzstart, will become its new CEO. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with John Stolfus of Oppenheimer, boosting his S&P 500 year-end target to a street high. That conversation up next.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The main reason we're bullish, okay, is that the earnings revision breadth has exploded higher off of what was, a deep cyclical low that basically priced in a recession for the most part. So that revision breadth is guiding us to the performance that we've seen. You know the rolling recession call that we've kind of been talking about. Well, now it looks to us like we're having a rolling recovery, okay? And that will be further spurred by the Fed cutting rates at some point in the next year.
Mike Wilson of Morgan Stanley leaning into the bull case. In just a moment, we'll catch up with the biggest bull on Wall Street, John Stolfus. Look out for that conversation in a few minutes' time. As we count you down to the opening bell, let's get you some movers, your morning movers with Danny Berger. Hey, Danny.
Hey, John. A little over an hour ago, we had earnings from Boeing, a lot of earnings to sort through this morning, I should say. Better than expected. The cash outflow was just $200 million. The expectation was that it would be over $1 billion. It shows that Kelly Ortberg has been working on this turnaround. It's taking fruition. It also helps that a lot of the trade deals the U.S. has reached has involved Boeing orders, so those shares up 1.4%. We also heard from Royal Caribbean. Those shares are falling this morning 6.6%. A miss on their earnings. The issue for them were costs. Specifically, they have a new fancy cruise line that's supposed to be luxury, and it's going to be more expensive. The incremental cost that it's going to be to operate it daily is more than the additional yield that they will get from it. But the CEO saying that demand is still very strong for the cruises, so it does bode well for some of the other cruise operators. Finally, rounding things out this morning, we have Stellantis updating what they say is their hit to tariffs, $1.7 billion. Most of that is going to be coming in the second half of the year, so those shares falling 2.6%. Bernstein writing that, yes, they did give a full-year guidance finally, but it was more qualitative than quantitative, and that lack of precision is disappointing, John.
Danny, thank you. Thanks for the update. The opening bell, 43 minutes away as we count you down. Here's your trading diary for today and through the week. Today, US-China trade talks continue in Sweden at 10 a.m. JOLTS data and consumer confidence Wednesday. Fed rate decision, Chairman Powell news conference, plus earnings from Meta, Microsoft. Thursday, another round of jobless claims and results from Amazon and Apple. On Friday, the payrolls report and the president's self-imposed tariff deadline. Let's stick with trade. John Stolfus of Oppenheimer writing, we believe enough tariff hurdles have been overcome to reinstate our original price target for the S&P 500 to 7,100 by year end. He is the most bullish on the street, and John joins us now for more. John, good morning.
Good morning, John.
How well received has that forecast been?
Remarkably well received. For all that many still consider this one of the most hated bull markets of all time. At least I would say it's one of the most doubted and has most skeptics. But when it comes to it, there is a contingency that is appreciating what's going on. And I think it's intermediate to longer term investors who are supporting this.
Is it on the edge of speculative or not?
I don't think it's on the edge of speculative. I think the memes are the speculative area. And I would still think that, around all the many cryptocurrencies and all, I still I don't get a warm feeling when I look at that.
When we look at an anatomy of the John Stolfus call, you had 7,100 earlier this year. You withdrew it after the April 2nd announcement, and now you're reinstating it. What's giving you that clarity? Is it just the deals that have gotten announced so far?
It was in particular, it was Japan last week, over the weekend, the EU deal. And basically, we're not big fans of tariffs, Lisa, but what we do recognize is it certainly is a way to get everybody's attention into creating a new world order in terms of trade, which allows more favorable terms for the U.S. And we think that's a positive thing. And it has to do with, I think the reason why it's a powerful call is for decades now, the whole world has been building capacity in manufacturing while we've been exporting our services and we export our innovation, but we have reduced our capacity in terms of manufacturing. The U.S., we believe, is the best customer around. We think whether it's China, whether it's Europe or Japan or other countries, they can look for other people to replace the consumer of the U.S. or business. But our per capita income and the strength of our economy makes us a customer that's willing to pay better prices, whether it's for a lunchbox or a pencil sharpener or whether it's for an automobile.
You know, Lori Calvasina of RBC Capital has pointed to this pulling forward of expectations that's on a scale she's never seen before. The idea that so many different investors are looking at 2026 beyond 2025 before we even get the second half. Have we just brought forward the strength from next year and price that in? So after we get this third year of 20+% gains in the S&P, we're not going to get more years like that in your estimation.
I wouldn't venture to guess that yet at this point. I think I'm going to wait closer to December before, as I usually do. I'm very disciplined about that, and then I'll take a look because we've still got almost 6 months. You know, it's 5 months left on this thing. We're rolling, and there's a lot that can happen.
As we work our way through Q3, how forgiving are investors going to be of potentially weaker earnings and weaker data on the prospect of better earnings and better data in the future?
I think it's the quality of weaker data or
what
what's
do you mean
behind
by that?
it.
Explain
well,
that, John.
Exactly. If weaker data is shown to be something that is idiosyncratic related to a particular company, they'll be looking at what's the quality of management, what's the current, in this cycle, where do they stand? I'm thinking of a big tech company, for example.
Are there some landmines that you're anticipating in a few months? Are there any landmines that you're anticipating over the next few months?
Right now, no, but I'm always aware that a landmine can appear, so we want to be sure to take the minesweeper out. And whenever we go out every day, we're looking for where's the bearish call, how strong is it, and also look at the bullish call and consider, is it too overly enthusiastic? You know, values right now are not cheap, but we would have to say, you know, it's for the boomer generation. I think traditionally stocks are cheap at a 16 forward multiple, at a 22.5 or 23 around where we are right now. It looks high, but the composition of the investor today is decidedly different. We think a lot of that has to do, it's generationally from boomers to much younger generations, and the reality that Social Security will not be the same percentage of income in retirement for many people. And if people start early or if they continue in retirement to invest suitably with exposure to equities, they may be able to retain the quality and standard of living that they have.
A year ago, investors were talking about the equal weight rather than the S&P market cap weight, simply because they wanted more exposure to the rest of the index. They were anticipating the broadening out. Where are we in terms of that? Because so far we've seen big tech leading the charge up and not showing any signs of stopping.
It is, but you know, one thing that's often forgotten, and it's when you look at the sectors, it's industrials are leading, and industrials are leading in 2 out of the 3 ways that we look at it. We look at year to date, we look at from the peak, and we also look at from the lows. And only from the lows, I think, does industrials fail to be number 1. I think it's number 2 in there. But I think that is essentially is a clue to the fact that this market is certainly broadened since last year, and we were predicting that. We were one of the few who thought that it was going to happen. But we said it's not just about tech, because tech today, so deeply embedded in the lives of both business and consumer, helps both groups create greater efficiencies in negotiating with each other through all kinds of things. So I think I think AI is a watershed event on the timeline of technology.
Sure.
And we believe that this flows through all 11 sectors, from tech and communications themselves, where the tech is situated, but industrials, materials, energy, healthcare, financials, consumer discretionary. Everybody's on the upgrade cycle, whether we like it or not.
John, appreciate your time. Thank you, sir. The most bullish on the street, John Stolfus of Oppenheimer. Just got a statement from the President of the United States. I wanted to share that with you. I've been briefed on the tragic shooting that took place in Manhattan, a place that I know and love. I trust our law enforcement agencies to get to the bottom of why this crazy lunatic committed such a senseless act of violence. My heart is with the families of the 4 people who were killed, including the NYPD officer who made the ultimate sacrifice. God bless the New York Police Department and God bless New York. At the scene of the tragic shooting yesterday evening, our colleague Bloomberg's Miles Miller joins us now for more. Miles, good morning. Share with us the latest, if you have it, please.
Yeah, that's right. We are, of course, learning the identity of one of those victims, of course, Wesley LePanter, who worked here at Blackstone. And what we know about her is that she ran the firm's $53 billion real estate fund. She was one of several people who were shot yesterday. This is we're learning more about the suspect as well. Just got some information in from federal sources who say that this suspect had been previously arrested twice in the past. One of those arrests, we are told, happened in California for trespassing. The next arrest happened for throwing a substance at a vehicle with intent to cause good bodily harm. We know that the investigation is going to continue this morning, and the mayor saying the suspect intentionally killed himself in the way he did so that his brain could be studied for CTE.
Miles Miller, thank you, sir. Plenty of updates throughout this morning from Miles. To close out the show, I think offering our thoughts to all of the loved ones of those lost and to the whole team over at Blackstone. From New York City this morning, good morning.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
We could be in for a 7th consecutive record high on the S&P 500. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, earnings show a clearer picture for some industries, but uncertainty remains as President Trump's tariff deadline nears. A surprise move at Novo Nordisk. The pharma giant picks an insider to help reverse its Wegovy slump, and the biggest rail deal ever. Union Pacific buys Norfolk Southern for $85 billion. Katie, what are you watching?
I'm watching shares of those companies. That is a deal that we have known is coming, and maybe we're seeing a little bit of sell on the news because shares of both companies lower right now. But to talk about this tie-up, it's poised to transform the North American rail market, marrying together Union Pacific's network across the western U.S. with Norfolk's East Coast routes. But of course, regulatory approval remains a hurdle, Matt Miller.
All right, we're going to talk to Lee Klaskow about that in just a little bit. Right now, I'm watching shares of Novo Nordisk plunging, losing more than a fifth of its value today after the company unexpectedly cut its full-year guidance. Wegovy sales continue to struggle. That news also dragging down rival Eli Lilly. You can see Lilly off in the pre-market 3.7%. And, of course, we have some C-suite changes at Novo as well, Katie.
Let's talk about it all with Bloomberg Health reporter Damien Garde, who joins us at the desk. So let's talk about some numbers here when it comes to that slashed forecast for Novo. They see that this year's sales will grow 8% to 14%. Operating profit expands 10% to 16%. That compares to previous forecasts of 21% and 24%. So the new CEO that they just announced today, certainly a big job ahead of him.
Absolutely. And, as you mentioned, they basically are slashing in half their expected revenue growth for the year, which feels like a little bit pulling the Band-Aid off. We kind of knew where Wegovy, their banner GLP-1 product, was trending with respect to competition with Eli Lilly, but also there had been some concern about whether the ambitions the market had for the ultimate growth of those products was maybe a little overcooked. And we might be getting some confirmation of that now, which is probably why Lilly is trending down. But to your point, the new CEO has big shoes to fill in the form of his predecessor, who was forced out of the company just in May. But also, Novo is in a moment where they need to demonstrate to investors and to, frankly, like the nation of Denmark, where they are a banner company, that they can withstand these challenges and return to the kind of growth that they had previously forecast. I thought it was interesting. There was some analyst, I think, disappointment that Novo appointed an insider versus bringing someone from the outside, which I do understand where that comes from, but is maybe misunderstanding Novo as an organization, which is a very insular, might be too strong a term, but this is what they do.
Yeah. I mean, you think about the profile of the CEO who was forced out, Lars Froggaard Jorgensen. He had been at Novo for decades, too, I believe. Remember, he was forced out in May, and they pointed to the stock price declining 50% in a certain period in 12 months. But you take a look at shares this morning, down 21%. That looks even more dramatic.
Yeah, I mean, the stock rose exponentially under Lars Froggaard Jorgensen.
There you go.
We had to figure out a new name. Now, it's interesting that GLP-1s are kind of the problem for Novo Nordisk. Obviously, they were, also the savior of that company. But they're a problem as well for United Health. I see they say that GLP-1s are a $160 million headwind for the pharmacy unit. Overall, United Health declines to affirm long-term guidance. That's rough.
It's not what you want to see. I mean, speaking of ripping the Band-Aid off, United Health, in arguably a similar situation to Novo Nordisk, albeit at a greater scale, they today announced a long-term guidance that was below, or rather a full-year guidance that was below analyst expectations. And this is after they pulled their prior guidance, which was unprecedented for the company, and there's just been a series of superlative headlines in the negative direction for them all year long. What's interesting with United Health is that we're watching apparently this contagion spread across America's insurers, and that they are not alone. Their major peer companies have all similarly pulled guidance in recent years, citing basically changes to the Affordable Care Act, a crackdown in Medicaid spending, and just basically patients are demanding more care than they had previously anticipated, which is kind of an existential threat for these companies in that as insurers, they are supposed to see around corners and accurately price risk. Like that's literally their entire job. And we're finding out that time and again, they have failed to do so with these things that are driving them down.
Yeah, we've been devoting a lot of airtime to Centene and insurers
That's
in general.
true.
Damian Garde, great roundup. That, of course, is our Bloomberg News health reporter. And there are a lot of health headlines out today. You also have Merck making billions of dollars in cost cuts as it braces for competition from the loss of its Keytruda patent. Keytruda, remember, is the best-selling medicine in the world. The FDA says that patients who can walk are also allowed to take Sarepta's gene therapy. That's after the FDA requested that the company pause all shipments of the drug after 3 deaths. We've been following this story. Remember, shares of Sarepta plunged 36% on the 18th of July, and you can see they're up by that amount right now on that news.
Yeah, we'll continue to follow that for you, but I want to get to the big acquisition. Union Pacific is going to buy Norfolk Southern in a cash and stock transaction valued at $85 billion. That transforms the North American rail market. Bloomberg Intelligence senior logistics analyst Lee Klaskow joins us now. And Lee, this is just a huge deal. We saw it coming, didn't know all the details, and it isn't expected to close even until 2027, right? But what do we know so far?
Yeah, what we know so far is that Union Pacific and Norfolk Southern agreed on a transaction. The deal represents about a 25% premium over what the stock was trading at, Norfolk Southern was trading at. It's going to create the first single-line transcontinental network in the United States. This will bring with it a lot of operational benefits. And there's no doubt that, a single-line transcontinental network would be good not only for the railroad itself, but also probably good for shippers. But, they have to prove their case to the regulators, the Surface Transportation Board, that this is in the public interest. And, there are very high hurdles for large Class 1 railroad mergers to be approved. And the process is very, very timely for both rails. So that's why they're expecting, this deal to close maybe early 2027, assuming they get that regulatory approval by the STB and other regulators.
Yeah, it'll be interesting to see if they get that blessing from regulators. Of course, that has ramifications for other railroad M&A we could see as well. But Lee, I want to get your thoughts on UPS. Shares down about 3% pre-market. They reported this morning, didn't give a forecast, and it seems like they're being punished for that.
Yeah, I mean, the economic uncertainty, that's nothing new, right? We've been talking about economic uncertainty since the tariffs started coming about. And that's really impacting, their business, and not only their business, but their ability to kind of predict where things are going to go. The reduction or the removal of the de minimis exemption also negatively impacted the company. I guess the good news is that the company is doing what it can. They're continuing to restructure its network to deal with really the realities of its business, which is growth is going to come from e-commerce and business to consumer. Volumes tend to be lower margin business. So they really need to take costs out, realign their network. And that's kind of what they're doing. And then the slight miss this morning on their second quarter earnings was kind of driven by their domestic business. And that was slightly lower yields and slightly higher costs. And that kind of drove the miss this morning.
All right, great context as always, Lee. That is our Lee Klaskow from Bloomberg Intelligence. Let's get to an up arrow story. Another earnings story we're keeping an eye on this morning is JetBlue. Shares rising by about 4% before the bell. That's after the company said that it sees improving demand through the end of the year. For more, we're joined by Bloomberg's global aviation correspondent, Sid Phillip. And Sid, so it was still an adjusted loss, 16 cents a share, but that compares to a 33% average loss that was expected. And what's interesting is you think about the cadence of the second quarter, it got better as it went on.
It did, and so JetBlue's obviously scaled back. They sort of focused on their core markets of the Northeast and also the East Coast down to Florida, and that's what they sort of announced when they were strategically restructuring their business and focusing on just the profitable routes, and that's what they've been focusing on, and that's actually helped them reduce those losses and potentially get in a place where they're much more comfortable. And they've talked about how demand now is looking more bullish in the last 2 weeks. So they're talking about how things could actually be turning around there for them.
All right, speaking of turnarounds, Boeing's cash burn was exponentially better than had been anticipated, right? We were thinking they would lose multiples more than they did in terms of their cash burn.
Yeah, Boeing's actually a success story. I mean, they've actually managed to turn around in terms of just their deliveries. They managed to put a pin on their sort of losses that they'd been experiencing. They've been burning through lots of cash. I mean, they were expected to burn 1.8 billion. They only burned 200 million. And in terms of operating cash flow, they've actually made money. So, I mean, for Boeing, Kelly Ortberg, the new CEO, is sort of putting them through the sort of turnaround process, and they're trying to get them across the line in terms of ramping up deliveries and making sure quality is on track. And that's what Boeing's really been focused on. And so far, that's been paying off. And especially with President Donald Trump using aircraft sales as a pitch for trade deals, that's actually working in favor of Boeing at the moment.
All right, Sid, thanks very much. Sid Phillip there covering airlines for us. Now, the IMF's new global economic projections are out, and the organization is forecasting 3% global growth in 2025 and 3.1% in 2026. That's a bump higher compared to the report that it put out after Liberation Day.
Right.
It's actually down if you look at it compared to the expectation from before those Trump tariffs initially hit.
It's interesting to see this forecast from the IMF because it kind of mirrors what we're seeing from corporate America. You have some companies coming out with new guidance that's lower than their previous guidance, but they had previously pulled guidance. So it's higher than it was, but still lower than maybe we started the year with.
Yeah, absolutely. We're going to break that all down with the chief economist of the IMF, an interview you don't want to miss with Pierre-Olivier Gourinchas, and that is at 10:40 New York time, so just about an hour and a half from now.
Yeah, looking forward to that conversation. But let's take a quick look at the setup. We are less than 20 minutes away from that opening bell, on track for what could be a 7th record high. The S&P 500 up about 0.2%. You can see it's big tech that's leading the way. The NASDAQ 100 up by about 0.4%. It's the small caps that are in charge right now, though, Matt Miller. The Russell 2000 higher by about 0.6%.
All right, coming up, U.S. and Chinese officials are starting a second day of talks aimed at extending their tariff truce. We'll head to Sweden for the latest next. This is Open Interest.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Blackstone executive Wesley Lopatner was killed yesterday in the shootings at the firm's Manhattan headquarters. The gunman killed himself and 4 people in a shooting spree at 345 Park Avenue here in Manhattan. Let's go now live to the scene with Bloomberg's Miles Miller, who's been covering the story for us. Miles?
Yeah, and as you mentioned, Wesley was a rising star in real estate. She had spent quite a lot of time in that space, and here particularly at Blackstone, what we know is that she ran the REIT, the fund for wealthy investors, and focused on real estate. It appears as though she was shot as she was leaving the building here yesterday. We know that suspect rushed into the building after he parked his car in the middle of Park Avenue, pulled out an M4 rifle, and walked right into that building. He shot a cop in the lobby, he shot a security guard, shot Wesley, and another individual up on the floor where Rudin Management has an office. We are told that this all stems from his belief that he has CTE, which is degenerative disorder that a lot of football players have with close contact. He was actually targeting the NFL, but because there are multiple elevator banks here, he got on the wrong elevator. The NFL telling us this morning that one of their employees is among the people who were injured, but he's expected to survive.
All right, Miles, appreciate your reporting. That is Bloomberg's Miles Miller on the scene of yesterday's shooting. We will continue to follow that story throughout the day. But let's turn now to the trade talks underway in Stockholm. The U.S. and China are in their 3rd round of talks, with the two countries looking to extend the 90-day tariff truce that expires in 2 weeks. Joining us now from Stockholm is Bloomberg's Oliver Crook. So this is the 2nd day of the 3rd round of negotiations. We know that neither side spoke to reporters after the first day concluded yesterday, Ollie. So what do we know about what's on the agenda of today's talks?
Yeah, so we know that they spoke for about 5 hours yesterday. This is a delegation led on the U.S. side by Treasury Secretary Scott Bessent, flanked by also Jameson Greer, the U.S. Trade Representative. And on the Chinese side, the Vice Premier, who have been speaking yesterday for 5 hours, as I mentioned. They're entering now hour 5 of discussions today. What we know is on the agenda is the potential to extend that trade truce that is currently holding between the United States and China. Remember, that trade war escalated to a point where both sides had tariffs of 125% on either side. That has come down from the U.S. side, now only has 30% tariffs on China. And what they need to do is potentially extend that another 90 days, because as you say, it's going to expire on October the 12th if they do not get to a conclusion, in order to hammer out some of the bigger issues that they have between the U.S. and China. These are a great litany of different trade issues, whether it's the trade balance. Obviously, this has been a centerpiece of the Trump administration's election campaign to right the world of trade, and certainly with China as sort of enemy number one on the question of trade. There's also the question of fentanyl, but there are a great many other issues. The fact that China still buys a lot of crude oil, natural gas from Russia, from Iran, the fact that, TikTok is still for sale in the United States. Trump says there's a buyer. They need a nod from Beijing. So these are going to be some of the conversations that they're going to be having and laying the groundwork for ultimately a framework for a full trade deal with the United States and China. That being said, this is likely going to be a meeting where they kick the can down the road, and that could be still a very long road going forward, because many of these issues are going to be very difficult to negotiate, particularly at a time when you contrast what we saw with the European Union and the United States. The Europeans really want to be seen to be giving Trump more than they're giving. The Chinese are the opposite. They want to be seen to be giving less than they are. So those conversations will likely be going on for some time now.
All right, Oliver, thanks very much. Bloomberg's Oliver Crook reporting live from Stockholm. Let's get to high interest now. A look at what else is making headlines around the world. Baker Hughes is betting big on data center demand. It's agreeing to buy Chart Industries for about $9.6 billion in cash, further solidifying its position in U.S. LNG services. The sector is set to boom with exports of the fuel potentially doubling this decade. PayPal is boosting its earnings guidance for the year, but Wall Street analysts are disappointed with the company's slower payment volume and softer full-year outlook. TD Cowen says the results are healthy but show limited upside. And Spotify swung to a loss in the second quarter, missing analysts' estimates after the music streaming service recorded higher than expected expenses related to employee compensation. Spotify is trying to compete more directly with YouTube by including videos on the service.
And coming up, investors have a high bar for earnings this quarter, with some companies that beat estimates and raising guidance still falling in the stock market. Could that happen to the Mag 7 stocks this week? We'll discuss next. This is Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's possible that this quarter, Meta may have spent as much on talent as it did on chips. Between the investments to hire Alexander Wang and a couple of folks out of SSRI, they may have spent close to $20 billion this quarter, which will be probably right around where they spend on CapEx.
That was Gil Loria on the show yesterday ahead of Meta and Microsoft earnings tomorrow. Let's bring in Bloomberg Tech co-host Caroline Hyde. And it's not just Meta and Microsoft this week. We also have Amazon and Apple. We were discussing this with our own Ryan Vlastelica, who was telling us when you take a look at the outlook, the M's look good, but it's a mixed picture when it comes to the A's.
It is, and even though, putting into context, Amazon is likely to post $160 billion worth of revenue in one quarter alone, the fact that we're expecting a 10% growth rate on that sort of sheer scale of revenue does show that tariff headwinds perhaps haven't hit them as hard as expected, given that many people flock to Amazon because they're deemed still a cheaper alternative. AWS is going to be front and center. Can they rinse out once again about 16% growth for cloud? How are they investing? And I think that's going to be the question for the other M's as well. Microsoft and Meta, are they upping the ante in terms of CapEx? You saw Alphabet up by $10 billion. What will Meta be spending? They're churning out about $40 billion in terms of revenue for the quarter. That's a growth rate of about 14%. Microsoft's about 14% as well, and they're pinning in about $72 billion of revenue. But both of them are now basically focused on hyperscaling. And what are we going to hear from Azure growth? Is that going to be 34, 35% growth? Is that cloud really offsetting what has been really a scramble to win the generative AI prize, it feels like?
Right. I mean, I was struck by Gil Luria's point, which again bears repeating, right? Facebook is going to spend $20 billion just to hire
Hey,
AI
Snooze, how you
talent.
doing?
Those are just that's just the human
I'm just reading
capital. So
message boards
are we
for
gonna see,
some stocks I'm looking
the
at.
revenues match up to those kind of CapEx expenditures?
You going short?
Now, or
You going
is
short,
that expected
Snooze?
to come later?
Well, this is the Superintelligence Labs bet that they
Are you
need to
short now?
win at Superintelligence. Why? Why does Meta
Taking
need
out
to see its advertising business model be enhanced by generative AI and win that race? Well, because they think in the context of the next few years, when generative
Break
AI
even?
takes over our landscape of content creation, you and I are going to need more connection. We with the generative AI avatar.
What's wrong with the car?
Each other, but they need to see the underlying model.
I just inspected my cars.
So it
I had
accentuates
tires I had to do,
Meta's
alignments.
done a great job at showing how Gen AI does drive
My
their
Jeep,
advertising business right now.
I had to buy tires, do an alignment.
Given them
Is-
that winning formula, and therefore we've actually seen the shares outperform.
What?
Meta and Microsoft have basically been the two key contributors.
What do you mean showing it was like pointed too high?
People have loved it. Can they continue to
Jesus
win on that?
Christ,
I
that's a
think Apple's gonna be the
ridiculous
key one they have to
inspection.
worry about. Look, they still bring in $90 billion worth of revenue per quarter.
Well, that can't be hard to fix.
Their growth rate is about 4%. We're worried about
That's
what
a crazy
Q4 means for
inspection.
the next fiscal quarter and where sales are going to be going in China in particular. Remember, they're closing one of their retail outlets there.
Yeah, Apple, one of the big problem
Jesus.
childs when it comes to the Magnificent
Yay.
Seven. Caroline,
Do they do
great to
smog?
preview it with you. That is Bloomberg Tech's Caroline.
Like
Hyde.
the
You can
small
catch her
part
every now and
worn
then, but don't
out
go
of
anywhere
front
because we have
driver's
the
side.
opening bell just 4 minutes away. You can see
Like in the steering?
on the screen. We'll begin the trading day with Katerina Simonetti of Morgan Stanley.
Oh, okay. They just mentioned it then. They just mentioned it might be a little high, blinding people. Yeah. Yeah. What part was it? Was it like a steering part or something? Oh, okay. Yeah. Inspections can be a pain in the ass, but you know, at the same time, you got to do it because you know people aren't going to fix anything unless they have to. A lot of people won't. You know, and you have a worn out part break and then all of a sudden you get hit or something crazy.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our
Like New
handbook.
York State, they're getting crazy.
When we went public,
Only passed first time once, and I've had a very they can get, like New York State. I live in North Carolina now, but New York State,
100 years out. And the IPO was one dot in 1 year on that.
you had to go back.
And we tried to orient the employees to this is a wonderful event, this IPO, but it's a moment in time on a very long.
What did they charge you?
This is a
Too
company
much?
that You want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah.
In New York, they got an inspection.
Particularly Wall Street investors.
Oh,
When they
okay,
say they are
yeah.
long-term investors,
In
that
New York,
means
they
they'll
got
keep
this
the stock
inspection station that you have to have. So if you're a shop,
where I did something
really, that's crazy. What was wrong with it? 5 years is not very old anymore for a
so bad
car.
about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we
My
were
Jeep?
not going to
Yeah.
the quarter. We were
Well, sometimes they try and find stuff and then they're like, well, we can fix it for this much money.
record. We're like a 4.0 student that is going to get a B for the first time. This is not good.
But in New York State, they make the garages have this inspection station.
At the end of a lesson in our app, we would show 2 ads instead.
Yeah, I think probably.
That by itself was good enough.
I'm sure that they do.
It's bad for the product. It's not good.
It's like the trucking industry here. It's like trucking in the United States. I think it's an industry just to give them fines and to hassle them. You know what I mean?
Every trading day, balance of power.
But these inspection stations, they make you buy in New York State. They got cameras on it so that Albany can watch you inspect the car. So you have to like pull it in front of the inspection station. The camera has to be on while the tech is doing the inspection. It is insane. Oh, here we go. We got a pop. It's 9:30. Your break even for the day? Oh, really? Yeah, the cameras are everywhere now, man. I think our whole lives are recorded if you're outside. I really don't like it, to be honest with you, man.
The stock actually down about 15% over the past 5 years because it came crashing down at the end of 2024. But their ticker is EVH, which is
got a pop
cool.
at the
At the
open.
NASDAQ, you see Salmon's Retirement Solutions.
It's probably going to be a light day for me. There's so much news.
Some kind of annuity that's brought them into some kind of index. I'm not really clear on that. But Katie, you're watching a shortage or a lack of orders at Wegovy pulling down Novo Nordisk.
Yeah,
There's news at 10 o'clock.
On what's going on
Imagine being a serial king. Yeah, I know. Yeah, everyone has a camera on their door, man. And I understand why, but
a new CEO from within the
I just like,
we were talking about this with Damien
fuck,
Garde,
man.
that
Do you gotta have everything fucking recorded? I guess you do. Well, they make it so easy to do, I guess.
21% at the opening bell, Matt Miller. Through yesterday's close, Novo shares were down about 43% year to date. So, boy, just
The cops can get into that stuff too. You know, all the Ring cameras. That's a network that the cops can enter. Like, they can go in and watch your whole neighborhood through the Ring cameras. Yeah, for fucking real. Yeah. They sure can. All that shit. Well, here they can. It's all shared with the cops.
It is, of course, subject to regulatory approval. They don't
And all
expect the deal to close until
the cameras on the
2027, but just a huge reshaping of
Oh, really? Was it?
transit in terms of ownership. Also,
Ring
Morgan
cameras
Stanley's Mike
everywhere.
Wilson is,
That was on
as
Shark
we told you
Tank, huh?
yesterday, leaning towards the bullish side of his call for the S&P 500.
Well, that dude is
His team
rich
believes
then,
the
because
S&P will hit
those fucking things are
7,200
everywhere. Yeah.
By mid-2026, he explained it this morning on Bloomberg Surveillance.
You could probably track most of your life on a goddamn Ring camera. I never owned one.
Has exploded higher off
And the
of
cameras,
a deep
they got
cyclical
cameras
low
on
in
every
the
light
recession
or
for the most
light
part.
pole,
So that revision
traffic
breath
light
is
here too.
guiding us to the performance that we've seen. You know the rolling recession call
In the
that
cities,
we've kind of
anyway.
been talking about. Well, now it looks to us like we're having a rolling recovery.
Yeah.
Okay, and that will be.
I don't know. I'm so old school. If I could travel in time and go back to like the early '60s, I'd probably live my life like
Wealth
that.
advisor and senior portfolio manager Katerina Simonetti joins us now. And Katerina, it doesn't appear that Mike Wilson and his team are at all deterred.
Like the height of humanity was like after World War II into like the early '80s, almost into the '90s.
Sort of consoled
Like
by the fact
I
that
miss the
uncertainty is
'90s, man.
dissipating. Is that how you see it?
I miss the '90s.
Well, Matt and Katie, thank you for having me on the show.
It's like you could make mistakes and fix them, and they weren't recorded and held against you your whole fucking life.
A lot of positives in the market.
You know, being a
and,
stupid kid.
belief, of course, seems to be that the tariff policy.
Hey, dude, I
is
gotta
going
make a
to be
sales call. I'll be
resolved.
right back.
But I would say that the better way
Hey, we
to
got news all
describe
morning,
this
man.
stance as cautiously
Let me go over it real
as
quick.
we definitely see some positive tailwinds that are helping the
Yeah,
economy.
job
And the fact
10
is the
o'clock
economy
job
has proven
openings,
to be
consumer
significantly
confidence.
more resilient
Boeing's at
than
10:30.
expected.
And we got
With
in
that
the
said,
7-year
there's
treasury.
certainly a
That's
lot
the
of
5 and 7-year have
but
been
there-
affecting the
there are a
market
lot of
lately.
uncertainties
So
still
I'd
on
just
the
be
table,
careful all
and
the
the
way through
tariff
this stuff.
policy
So we
is
got news coming up.
unresolved. So it is a bit
All right.
preemptive
Yeah,
to
I'm
call it
totally
victory,
waiting.
but we do
I'm way
think
waiting.
that, we're going to get some.
It'll probably look
and
like
the
yesterday
economy
where
is
I don't think I
positioned for
took a
growth,
trade until
specifically for 2026.
I hear what you're
12:30,
saying,
1 o'clock.
Katarina, that the economy has been resilient so far.
All right, I'll be
Certainly
back.
The index level on the S&P 500 hitting all-time high after all-time high. You're seeing that strength there. But then you take a look at some of the headlines that we're getting out of this earnings season. Just from today, UPS pulling its guidance, Whirlpool cutting its guidance, and then you have Stellantis also warning about that 1.5 billion euro toll that it's going to take. It seems like, okay, the index level, smooth sailing, but you look under the surface, you look at these individual names, it's a much different story.
It is a much different story, and the earnings revisions are certainly not broad, but this presents unique buying opportunities for investors. Market is hitting new highs, and investors are starting to worry whether they should worry about tariffs or missing the market growth. We think the actual growth is on the stock level, where we're looking for companies that are positioned for growth, where earnings are actually positive versus the ones that are not, that are showing competitive advantage, and in the areas like financials, like industrials, and infrastructure, and of course tech.
What are the sectors that you don't like right now, Katarina? Which ones are losing out?
Matt, we're certainly very cautious of healthcare right now, as they're subject to policy uncertainty. And this is not to say that there are not great buying opportunities in healthcare. Investors just need to give themselves a longer time horizon for things to play out. But this is where, once again, it's a stock picker's market, and we tell investors to be cautious. We're also expecting that there is a very strong potential that there might be a market pullback in the third quarter, which is natural after the gains in the rally that we're seeing right now. So buying opportunities are there, but as Katie said, we're seeing the appreciation and growth on the index level more so than on the individual level right now.
I want to talk about healthcare a little bit more, because as a sector, that's down 3% year to date. That is the worst performing sector of 11 on the S&P 500. We know that the insurers are a basket of snakes right now, and even the bright spots of the health industry, you think about the GLP-1 makers, also running into a wall here. Katarina, you mentioned you have a long timeline. You have to have a long timeline to be bullish on healthcare. It sounds like it's too long for you. How long is that timeline, though, if you're someone who is interested in healthcare?
Well, this is where it is important to be selective. And there is a difference between healthcare stocks like hospitals versus insurance providers versus the big pharma. And we have to focus on individual companies and make sure that we're making appropriate selections. When it comes to a time horizon, of course, we are so spoiled by the need to receive the returns within months. The horizon used to be in years, and now we're looking at 3 months, 6 months out. But I would say 12 months plus would be a reasonable expectation, for something that has a longer time horizon for sure.
Instant gratification. That's what I'm in the market for.
Yeah, me too.
Yeah. All right. That's why we're in live television.
Morgan Stanley Private Wealth Advisor and Senior Portfolio Manager Katarina Simonetti. Let's
talk about the index level. As we were saying with Katarina, it's been very resilient, and you can see that resilience today. The S&P 500 higher by about 0.2%. If that holds, that'll be the 7th straight day of record gains for this index, so keep your eyes trained there. We take a look at the setup right now, the breakdown of the individual names, and breadth looks pretty good at the moment. More than 300 names in the green, and it's the names that you need. NVIDIA leading the way here, higher by about 1.3%. You also have Microsoft higher ahead of its earnings, Broadcom higher as well. Then you take a look at the downside, and it gets very interesting. It's healthcare. We were just picking on the healthcare sector, and for good reason. Eli Lilly leading losses on the S&P 500 right now, falling in sympathy with Novo Nordisk. Of course, that is a Danish company. It's not in the S&P 500, but some worries there when it comes to GLP-1s. And that's what you're going to see on the sector breakdown as well. Pretty good breadth, not as strong as you might expect looking at the individual breakdown, but tech in charge, that sector up by more than 1%. You go down to the bottom, consumer discretionary materials and healthcare leading the way lower, down about 1.4% as a sector, Matt.
All right, very interesting moves in this market, and if it holds, of course, These gains will be a 7th consecutive record high for the S&P 500. Coming up, Boeing almost halted its cash burn in the second quarter, a signal its turnaround is paying off. We'll speak with Ron Epstein, B of A aerospace and defense analyst, about that next. This is Open Interest.
Welcome back to the circuit. This time, we're taking you to the frontier.
Where is
Do we
the
have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Open Interest. It's time now for top calls. Some of the analyst action in focus this morning. And first up, RBC Capital downgrading Domino's Pizza, saying it's at risk for slowing sales next year. Shares down a bit on that call. Next up, Sarepta, though, getting raised to a buy over at Oppenheimer. The biotech notching a major win yesterday after the FDA reversed course and recommended that some patients can resume taking the company's gene therapy. Remember that 2 weeks ago, regulators requested that the company pause all shipments of its drug after 3 deaths were linked to that treatment. Shares up 21% at the moment. And finally, we have Whirlpool getting cut to a sell over at Bank of America. The appliance maker slashed its full-year earnings forecast. Shares down about 9%. Meanwhile, let's turn our attention to the sky because Boeing reported negative free cash flow of $200 million. That is far better than the expected $1.8 billion. Let's discuss with Bank of America's senior aerospace and defense analyst, Ron Epstein. He has a buy rating on Boeing with a $260 price target. And Ron, we have to start with the cash burn, because I think that was one of the big surprises from that earnings report, that it was so much less than expected.
Yeah, good morning, and thank you for having me. Boeing's cash burn was far less than we were expecting, and I think the consensus was expecting. Minus $200 million is almost break even in the quarter, and as you mentioned, the street was expecting minus almost $2 billion, right? So, and we were looking for about negative $1.5 billion. So the cash burn was great, because it was almost negligible. It was driven by inventories coming down and some accounts payable. So, the working capital management seems to be going in the right direction. I think it is evidence that the company is beginning to turn the corner. I do appreciate that the company has come out and said, hey, you know what? This is just a first step in a process. We got a ways to go. So, they're not taking a big victory lap here. They're doing the right thing and saying, hey, we got a lot to do. There was other really good highlights in the quarter. If you look at 737, they've suggested that they're going to work with the FAA this upcoming quarter to try to get approval to go to 42 per month. They're currently capped at 38 per month. They have certain metrics that they have to share with the FAA, and once the FAA is comfortable with that, they'll go to 42 per month. That's a step in the right direction. I mean, ultimately, we're expecting them to be in the high 40s by the end of next year, and then ultimately get into somewhere in the mid 50s. Maybe 2 years down the road. It's going in the right direction. 787 deliveries in the quarter were good. They're saying 787 production rates are at almost 7 per month now. That's a great place to be. We're expecting that to get to 10, by sometime late next year. So the commercial business does seem to be tracking in the right direction. I mean, the only really negative thing that kind of came out was, Kelly Ortberg, told folks that the certification of the 737-7 and the -10, there are two variants that are kind of tied up in some engine icing certification issues that might slip into next year. I would imagine on their earnings call they'll probably talk a little bit more about that, but that does seem manageable. And then even on the defense business, things seem to be tracking okay. And in their services business, things seem to be tracking okay. So, this is probably one of the best quarters Boeing's had in a long time. But like I said, the company doesn't seem to be taking a victory lap. It's just a step, in the right direction, and they have more steps to take.
It's a tough company to analyze, I guess, a stock especially, right, Ron? Because if they have an issue with the 737, or if they have an issue, God forbid, with the 787, that's not anything that Kelly Ortberg has done now. That typically comes from, could be years in the past, and that will crater the stock. How do you deal with that kind of uncertainty?
Well, I mean, it's a very good question. We deal with that all the time. As an example, what happened with Air India, I mean, there was a lot of fear that, maybe there was something wrong with the 78. Turns out, at least the preliminary investigation suggests that there's not. But that is one of the risks that you deal with a company like Boeing. Not specific to Boeing, but, they have, a couple products that are pretty high profile. However, we are confident, and we're seeing it, that the culture in the company is changing. We've written a lot about the culture of Boeing and how it needed to change, and it does seem they're taking steps in the right direction there. And if the culture moves in the right direction, everything else will follow. Mm-hmm. If you asked me 15 years ago about this sort of stuff, I'd probably just be looking at the financials, but the culture matters so much, and the culture's going the right way.
Well, Ron, to that point on culture, let's talk about the workforce a little bit, because Boeing is facing another strike potentially next week. Remember, members of its Central U.S. Workers Union actually rejected a contract offer this past Sunday. How are you thinking about that as you read through these numbers?
Yeah, so, I mean, clearly it's a setback for their defense business. So it's the union in St. Louis and St. Charles, Missouri. Those are the machinists that work on, largely fighter aircraft, tactical aircraft. There's about 3,000 members in that union. The commercial strike that happened earlier in the year, that was, actually last year, that was 30,000. So it's, it's an order of magnitude smaller. I do expect that it will get resolved. And I don't see it as a big setback. However, they do have to work through it. I would imagine it gets resolved in a matter of weeks, not months. But we'll see, right? So it's something that has to get resolved. But I would imagine it would.
All right, Ron, really appreciate it. Ron Epstein there, Bank America, senior aerospace and defense analyst, talking to us about Boeing with a $260 price target.
Yeah.
33%.
Boeing's shares up 33% year to date. It's actually one of this year's winners, which is amazing. You think about what a rough stretch they had in 2024, falling about 32% last year. But if these gains hold through the end of the year, they'll end out just about even.
All right. Cutting away all the losses. That's great. Coming up, Stellantis feels the tariff squeeze. It already had a rough first half, and it's predicting more than $1 billion in losses due to tariffs in the second half. That's next. This is Open Interest.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a check on what stocks are doing right now. We're still looking at gains, but they're slight on the S&P 500. 0.1% to 6396, or just shy of 6,400. If we close higher today, it'll be the 7th consecutive day of record highs for the S&P 500. The NASDAQ gaining a little bit more here. We can see that NVIDIA is helping us out today, up more than 1% for a $4 trillion company. That really moves the needle. Meta is little changed, but down. We expect earnings from Meta, Microsoft, Amazon, and Apple all this week. UPS disappoints with a drop of 8%. Norfolk Southern making a deal for $72 billion, and investors don't like to see that kind of cash and equity spent necessarily. Boeing, we just talked about, actually down 2%, even though Ron Epstein is fairly positive on the stock. And then Stellantis, not moving by much, but the company warned that it expects the new higher tariff dynamic to hit it to the tune of $1.7 billion. That's in the second half after losing a couple billion in the first half. Let's get into the numbers right now with Bloomberg's autos reporter, Gabriella Coppola. Gabby, great to have you on the program. What do we know about this new tariff regime? Because on the one hand, it's going to hit them with 15% on everything they import to the U.S. from Europe. On the other hand, they don't have to pay 50% steel and aluminum taxes on those cars, or any kind of fentanyl taxes or USMCA issues. They just get to bring it in with a clean 15%.
Hey, Matt. I think, Stellantis is clearly still feeling a lot of tariff pain, and it is going to hurt them when they import cars from Europe. But also, they're not scot-free when it comes to Mexico and Canada. And I think a really critical example of that is the new Jeep Cherokee. This is a midsize SUV that has been out of the market for 2 years. When you want to understand why Stellantis is struggling to get its mojo back as much as it is, it's because there's so many product gaps in the lineup. The Jeep Cherokee, the previous CEO, Carlos Tavares, decided to move it from Illinois to Mexico. Then Trump got elected and he slapped a big tariff on Mexico. So the new CEO, Antonio Filosa, this was his debut kind of appearance on Wall Street talking to investors. He was asked specifically, how are you going to make money on the Jeep Cherokee when you're facing these tariffs in Mexico? And he said, we are working on the platform, trying to find new ways to take out costs so that we can launch this vehicle. And I cannot stress how critical this vehicle is for them getting back to growth in the U.S., which is their most important market.
Yeah, it's interesting. Last year or the year before even, they killed the Hemi, which is like the most Mopar thing that you could possibly ever buy. There were no more Chryslers for sale, like at all, after the 300 was done, right? And when Tavares left, they took forever to replace the CEO. Why did they take so long in doing all of this stuff and bringing back the 6.4 liter V8?
Yeah, I think, I think that Wall Street and perhaps the public have underestimated the damage that Tavares did. He just produced these boffo profits for so long, and Wall Street thought he was a genius. Meanwhile, he was doing lots of short-term things that long-term hurt the company. And when you retire the Hemi engine, you don't just flip a switch tomorrow and bring it back. Tim Kuniskis, who had left the company briefly, he's back. He was the head of Ram. Now he's in head of all brands in the U.S. So they're working very hard to bring back some of the stuff that their core American consumers love, bringing back the Hemi engine in the Ram truck. They had retired gas-powered Dodge muscle cars, the Dodge Charger and Challenger. Those are halo vehicles that just really define the brand. They have an electric one right now that's made in Canada that's selling, it's tough. EVs say it's expensive. EVs are not selling great. So it's just taking a long time for them to get these products back in the market. I do think that Trump's agenda in Washington of zeroing out fines for fuel economy, they talked about that. They do have more flexibility now to sell the cars that they make money on. But basically, it's very quick it's very fast. You can destroy your market share pretty quickly, and then it takes a long time to crawl back and get it back. And they're crawling, and I don't think people appreciate how long that takes.
Well, hopefully you get up and walk again soon. Gabriella Coppola talking about Stellantis. Thanks very much. We come back. The CEO of CalPERS, the largest public pension fund in the country, joins the show.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity, it's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. CBS News has learned about a motive in last night's mass shooting at a New York City office building. Correspondent Michael Wallace.
New York City Mayor Eric Adams told CBS Mornings Shane Tamura of Las Vegas killed 3 people in the lobby of 345 Park Avenue and planned to go up to the NFL's corporate offices.
He took the wrong elevator bank.
He wound up on the 33rd floor office of Rudin Management, where he killed another person before taking his own life. Tamura had a note on him saying he suffered from CTE.
He appeared to have blamed the NFL for his injury.
Tamura never played in the NFL. He did play high school football. Michael Wallace, CBS News, New York.
Among his victims, a city police officer and a senior managing director at the financial firm Blackstone, who was also a mother of 2. The NFL says a league employee who was wounded is in stable condition. The mayor has ordered flags to fly at half staff at city buildings. A key player in the Jeffrey Epstein case is making a new bid to get out of prison. Correspondent Scott McFarlane has the details.
Jeffrey Epstein's co-conspirator, Ghislaine Maxwell, is urging the Supreme Court to step in and overturn her sex trafficking conviction on grounds she was unlawfully prosecuted.
Maxwell's attorney issued a statement calling President Trump a deal maker. He appealed to him to recognize that his client has been scapegoated for Epstein's crimes. Speaking in Scotland yesterday, the president once again called the controversy a hoax. The heat could set records in parts of the Northeast today. Meteorologist Craig Allen.
Temperatures are going to be 15 to 20 degrees above average for this time of year, and heat-related illnesses are going to increase significantly.
It's expected to hit 98 degrees in New York and Philly. It'll feel like 115 in some parts of the Mississippi Valley. The Pope has weighed in on artificial intelligence. Sabina Castelfranco reports from Rome.
At the Vatican's first Mass for Catholic influencers in St. Peter's Basilica this morning, Pope Leo called on the world to protect human dignity online as it faces the challenge of AI. The Pope told Catholic social media figures that nothing that comes from man and his creativity should be used to undermine the dignity of others.
Put some more pep in your step. It could do your entire body good. CBS's Michael George explains.
A study published in the American Journal of Preventive Medicine found that walking fast for just 15 minutes a day boosts heart efficiency, lowers body weight, and lowers your risk of death by 20%. Researchers say the benefits are even greater among low-income and black communities.
The Dow is down 44 points in early trading. This is CBS News. A new tally of the cost of natural disasters.
The LA wildfires and severe spring thunderstorms in the U.S. are just a few of the natural disasters that have contributed to the more than $131 billion in global losses for the first half of this year. That's according to a new report from the insurance company Munich Re, which says it's lower than last year at this time, but above long-term averages. The analysis indicates $80 billion of the loss total was covered by insurance. A Munich Re climate scientist says climate change plays an increasing role in natural disasters.
All right, I'm back, guys. That was a long call. How we doing? Looks like we got a drop off the news. So, hey, Luther, Brian, how you doing, guys?
On charges of transportation to engage in prostitution.
Sorry, yeah, I had left it on the news because Snooze and I weren't going to make any moves till after the news, so I had left the news on, but now it's on the NQ. So we're watching the NQ. So just so you know, Luther, the NQ is the same chart as the MNQ. Oh, you made it. Did you get a piece of that down move?
Companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is
shit, dude.
down.
All right, be cool, man. Don't get into the chop. Don't chop it away.
People are just buying everything with tech.
That's a good move off news like that. Yeah, quit for the day. Yeah, go mow the lawn.
Tuesday morning from the Bloomberg Interactive studio in New York City.
Go mow the lawn. Take your car back to the inspection station. Yeah, so the NQ is basically the same chart as the MNQ. They're just different values, Luther. Yeah, touch grass. Do you know what I'm saying, Luther? So the MNQ is the micro, the NQ is the mini. Okay, you know that. Okay, so if you're working the MNQ, the NQ chart is valid. And the NQ chart is up right now. So our 10 o'clock news is out of the way. 10:30 we got Boeing's earning call. And then 1 o'clock we've got the 5-year Treasury yield. And so we're looking okay on news. So, all right, I got to clean a couple things up. I'm still waiting. I'm going to be probably another hour before I do anything. But I got to clean a couple things up with this transaction. I'll be back after a bit.
Trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. As you mentioned, Paul, the data, the June job openings, the hires and total separations changing little from the month before. And then the consumer confidence as measured by the Conference Board, higher than expected. Of course, we're going to break those down a little more in just a few minutes. S&P 500 right now hovering around 6,400. Any push higher today in the close would result in yet another record. It would be the, sixth. It would be the 7th if we close higher. Novo Nordisk naming its head of international operations as the chief executive officer. This after the slumping weight loss drug sales led to a profit warning. That profit warning wiped $93 billion off the company's market cap. Right now, shares of Novo Nordisk, these are the ADRs, down 20%. And Sarepta Therapeutics shares rising sharply. U.S. regulators reverse course. They recommended that patients who can walk be allowed to take its gene therapy, Elevidys, once again. And shares of Sarepta Therapeutics, they're up close to 25%. United Health Group, that's one of the reasons why the Dow is down right now, tumbling after warning its annual profit would be hit harder than Wall Street was expecting. Shares right now of United Health Group, they are down just about 4%. And as you mentioned, shares of Norfolk Southern, they are lower. I'm not sure why. Union Pacific agreeing to acquire Norfolk Southern in a cash and stock transaction valued at $85 billion. It would be a rail giant, the industry's largest deal ever. And regulatory approval does remain a hurdle in any rail merger. Shares right now, Norfolk Southern, they are down 2.8%. Overall, the S&P 500 up 9, 63.99. The Dow Jones Industrial Average down 28 points, and the Nasdaq 100 79 points higher. That is up 0.3%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Isabel and Paul.
John
Tucker, thank you so much. Isabel Lee joining us here on a busy, busy day. We've got news, we've got earnings, we've got big M&A deals, a lot going on in the marketplace, and plus economic data as well.
Definitely. It can set the tone for the rest of the year in terms of eco data and markets data. Tomorrow is going to be exciting. 4 of the 7, starting tomorrow, 4 of the 7 of the Magnificent 7 will start reporting.
Okay. All right. We'll pay attention to all that. We've got some economic data that came out today. Consumer confidence came in a little bit better than expected. Let's check in with Stephanie Gisha. She's a senior economist for the Conference Board. Stephanie, what did you make of the consumer confidence data that we saw today? I'm looking at the Consumer Confidence Board came in at 97.2. The consensus was 96, so a little bit better, and better than the revised 95.2 last month. So consumer confidence seems to be rebounding.
It's rebounded, but it's rebounded slightly. And to me, the main message is we have this kind of stabilization in consumer confidence after the roller coaster we saw in the past 9 months. So I think consumers are entering the summer on a kind of wait and mode, caution basis. And that, to me, that's the main message from these results.
Is there a certain level, like below 100 means something, above 100 means something? What's a normalized level for this consumer confidence data point?
No, so 100 doesn't mean anything. What we tend to focus are the changes, and also we compare to the past few years. So the current level at 97 is lower than what we've seen on average for the past 3 years. And so it's still kind of a solid confidence, but it's not as good as it was like a year ago or 2-3 years ago.
Which components of the report stood out to you? Like, how do you compare expectations and recent trends?
So expectation rebounded. So what it means is overall consumers are less pessimistic about the future. They are still in pessimism territory, but they are a bit less pessimistic. And this is true for the 3 components of the expectation index: income, jobs, and business condition. The assessment of the present situation was slightly down. And the component that is driving it down is the labor market differential. So, and this is something that's it's not new. We've seen this component declining for the past 7 months. And it means that, consumers are looking at what's happening on the labor market. And, if they know someone who's been looking for a job and they see it's more difficult, this is what is reflected in our index.
Stephanie, thanks so much for joining us. Appreciate your thoughts here. Stephanie Gisha, senior economist at the Conference Board, breaking down some of the consumer confidence data. Came in a little bit better than expected, but still, as Stephanie was mentioning, below where it's been over the last several years. So again, the market, consumers dealing with some of the uncertainties around some of this tariff information, which continues to unfold on a daily basis, it seems like. So we're looking at the markets here. We've got red and green on the tape. Let's take a look at some of the stocks that are moving today. I'm Paul Sweeney along with Isabel Lee, and we're joined by Bloomberg's Norma Linden. Nora, what are you looking at today?
Well, there's a few things I've got my eyes on. All of them are actually in the red today. I've got shares of Novo Nordisk, and of course, we're looking at the ADRs here. That's ticker NVO. We're seeing the company down as much as 22% today, and that is the most since 1987. So this is a really big slump here that we're seeing, but this is after the company slashed its financial forecast. Essentially, it's going to be predicting that this year's sales will grow 8 to 14%, and that was against what it had previously forecast of 21 and 24, excuse me, there. So that's definitely a big difference here, and you're starting to see the stock really taking a beating here in trading today and a few of its peers. But they also did name a new head of international operations as the CEO here. So that's also something that we already knew they were going to be naming a new CEO, but we're just finding out who it is today.
To see a company of this size have that kind of a change in forecast. I've been doing this for 35 years. You don't see that very often.
Absolutely.
So I guess that explains the big decline in the stock, because that's just a huge bad who's ever in charge of forecasting sales. I don't know. That's not a good one.
No, it seems like it was a bit far off here. So you're seeing the street really just trying to analyze what's going on here. But I'm also looking at another name that's in the healthcare space, and that's United Health Group. And we are looking at shares that are lower as well, falling as much as about 7% here. That's the most and lowest intraday performance since May. But we are seeing shares tumbling after the company warned its annual profit would be hit harder than Wall Street was expecting. This, of course, is the latest in a series of disappointments that we've been seeing from the insurer, which was once really renowned for its reliable growth and predictability. So lots going on here in the healthcare space.
I don't know. I mean, this is a big name, and it's down 46% this year. I mean, it just seems like every day this thing is weighing.
They're just getting
on.
hit and hit and hit. I mean, when you look at the performance here, it's just really interesting as we're thinking about right now. Everyone's really worried about forecasts right now. We're in a period of uncertainty. So when you see some big healthcare names like this is very alarming for a lot of investors here. But I did want to take a look at a name, Royal Caribbean here.
Good.
You know, had to keep it a little bit interesting. We're seeing shares down as well here. This is after the cruise operator forecast adjusted EPS for the third quarter that fell short of analyst estimates. We're hearing different people on the street, particularly Jeffrey, saying that they expect management to address the longer term outlook for 2026 and beyond, but they say that this is more critical to the long-term earnings cadence here.
Have you ever been on a cruise, Isabel?
No, but that's been one of my goals. Have you been, Nora?
I'll actually be going on a Royal Caribbean cruise in December to the Bahamas. It'll be my second one. I only had done Carnival, but you know,
Are they different?
In terms of
like just the experience?
the vibe, I've been told that Royal Caribbean, you know, can be less children, allegedly.
You can make a reporting trip out of it.
And what do you have against children?
No, yeah, right. Maybe I need to unpack that.
Yes, exactly.
No, but I'm. It should be good. But I think it's interesting because a lot of people think about these as being claustrophobic situations. So we'll just have to see how I fare for those few days.
So yeah, I don't know.
Well,
John, have you been?
Nora doesn't like children.
That's the takeaway.
my takeaway.
That's what we're taking from
We
this.
need Charlie Pellet. He's our cruise correspondent. All right, Nora, thank you so much. We appreciate that. Nora Melinda, covering all the equity markets and the cruise industry for Bloomberg. Get the latest news. I'm sorry, we can do that again. Coming up, we're going to have some more stuff coming up from Nora later on in the show. But we're just talking about these markets here, Isabel. A lot of tech earnings coming up here.
Definitely a lot of tech earnings. It's really going to be amazing. So this week, we're going to see $24 trillion of market cap reporting, 4 of 6 of the S&P 500 reporting, Microsoft, Apple, Amazon, Meta, and those companies alone contribute $11 trillion in market cap. And for context, last week, we saw overall $11 trillion in market cap reporting. But generally, these companies have been beating forecasts. Profits are up around 5.5%. 4.5% rather, from this time a year ago. So it's really going to be exciting to see. I feel like it's not enough to beat these days. You have to really impress and blow past expectations.
Yeah, and looking at a market that the S&P 500 index trading at about 22 times, maybe 22 and a half times, the earnings growth has to be there because I think the Federal Reserve, if you look at the work function, the market's only predicting maybe a couple of rate cuts this year. That's it.
Work function is the bane of my existence. I find it tough to read, but I feel like over the years, I will get better. But speaking of the Fed, we also are going to see a lot of eco data. And now we see the S&P 500 eking out slight gains. And a fun fact, if we close higher today, this will be the longest stretch since at least 2021. So really, a lot of bulls out there from UBS to other banks. They're just really maintaining their bullish outlook and saying if they see any pullback, it's a dip buying opportunity.
All right, so we heard from Nora Melinda with the Stock Movers, and for more conversations like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. S&P 500, as Nora was saying, just eking out a gain, up 8 points. The Dow's down 21. The Nasdaq's up 43 points. That's 0.2%. So a lot of red and green out there on the screen. Tom Keene's VIX solidly below 15. That is a quiescent reading of equity volatility expectations. This is Bloomberg.
All right, I'm back. Might be looking like a grind down day like yesterday. Got a nice little, got a full-on short forecast.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. After setting an all-time high in 6 straight days, the S&P 500 may be on course for another record close. Right now it is up 7 points. It's up 0.1%, 63.96. So we're hovering around 6,400 there. Anything in the green today would be a record close. Dow Jones Industrial Average 34 points lower right now, and you can chalk that
Yeah,
up.
I think we're,
United Health Group.
well, we still got a little news to trickle in. I'm going to give it a little more time, but I'm thinking,
United Health Group dropping right now,
because we are under the VWAP on the ES also, so we're in good shape. Like, if you really wanted to start looking for a trade now, you could.
Overall of this year that investors did find disappointing. Consumer products giant Procter & Gamble offering an annual earnings outlook that's below analyst projections. They also said they're going to raise prices on about a quarter of its products in the U.S., in part because of higher costs from the tariffs. I'm trying to think of the number of P&G products in my house. It's just like everything.
I feel like we just don't know it, but it's definitely P&G.
And Union Pacific, of course, this is the big deal. This would be the biggest deal of the year so far, as well as certainly ever in the industry. Union Pacific wanting to buy Norfolk Southern in an $85 billion deal. Norfolk Southern, those shares are down 2.6%. You got to ask the question, what's going to happen with the other rail companies? So anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Isabel and Paul.
John Tucker, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So go to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. Lots of eco data this week. ECO Go is the function on the Bloomberg terminal. It's just blowing up. There's so much stuff here. We had Jolt's numbers came in.
All right, let's figure out where we're at here. Let's kind of talk through the chart.
Of course, the big ones I think are later on this week. We're going to get some.
It's the first time I've really analyzed it today. All right, so if we're looking at our stochastics, we're oversold.
Bond market reacting here. We got yields coming in a little bit today. Let's check in with
So we got a fair value gap rate kind of above. Yeah, it's kind of above the VWAP that we need to look for in case it gets retested.
From the U.S. government.
So we're waiting for the rotation.
Because the Federal Reserve meeting
so
is,
right here,
tomorrow afternoon. We'll get the announcement.
Our A+ setup was earlier. So this would have been the A+ setup when the EMAs crossed.
Either confirm or suggest that there should have been a change.
But we were in the middle of news and it was too early.
Right? If we get a very low and weak.
So now we're looking for our B setup, which is either a continuation and then a short off the 20 EMA.
I think in this situation, the focus of the bond market right now is on tomorrow.
You're probably looking for something right here. You got a historic line of resistance. You got fair value gap up above. You got your VWAP here floating right above there. So I'd probably be looking, if I wanted to get in, I can't get in now because you're in no man's land. But we're waiting for the stochastics to roll back up, get overbought, kind of maybe play around in this zone. You might even wick up and challenge the fair value gap. And then when the stochastic rolls over, that might be our first short of the day. So that's kind of what I'm looking for right now.
Yeah, it is. And I
That's
think
not to
that's
say
one of the
that,
big things that's
you
keeping
see,
the
we're
Fed
kind of
funds rate
running
even
off this
more dovish.
historic
And
trend
you
line
know, when you
here.
look at a
That's
lot of
not
the
to
data,
say that
yes,
we
things are
couldn't
slowing
challenge
down, but
this
it's
fair
not
value
terrible. But
gap and this
if we
historic
have,
line of
plus
resistance
100,000 or
before,
150,000 again
but there's no
payrolls,
trade for
you know,
me
that
here
has to give
anyway.
some
There's no
comfort to the Federal
entry.
Reserve that
You
there's
know,
not
I can't,
an
there's no
urgency to
entry.
be cutting interest rates.
So I got to wait for the
You know,
entry.
the issue
And
is
then it'd be
the reason I
nice
say
if
that
we
the difference or has been a
if we
strength,
rolled
a
back
bit of the
up,
difference between
got into
private
the
and
zone
public
up here and
payrolls,
caught the
because
short
we
down
had
back
private
into
payrolls, for
the
example,
trend line or
just
all the way
month
back to challenge this fair value gap. That would
only
be a
growing
great
at
trade.
74,000. So if
But
that
that's kind of where
continues
we're
to
at right
fall,
now.
I think that the
I got
FOMC
leads coming
messaging
in.
would
I got to
suggest
kind
that,
of
hey,
clean these
you
up.
know, local governments
But I'm
are
with
going
you,
to
Brian. I'm
continue
looking
to
for the
grow, but they
short.
shouldn't be the
Man,
driver
this
of
is
growth.
kind of
And if you
strong
look
right
at
out of the
the
box, isn't
in the
it?
country, so if you have private payrolls continuing to moderate,
All right. When I come back, we'll go over
that will
news.
concern them. But it's also the wage side of things, right? When you look at wages and how wages are growing, those have slowed a bit, but have stabilized at reasonably decent levels, you know, 4-ish% year on year in terms of wage growth. So as long as that wage growth number kind of hovers there, that's fine. But if that starts to moderate further too, that will concern the Fed. And we got the JOLTS data just earlier, just a couple of minutes ago. I was looking at that actually before we went on air. And one of the things that you look at in the JOLTS data is the quits rate, and the quits rate has continued to be pretty modest here compared to where it was a couple of months ago, in large part because people aren't getting wages for switching jobs. So that's a sign that the economy is not running as hot as it had been, you know, a year or two ago for sure.
So, Ira, 10-year Treasury, we're coming in about 5 basis points today, sitting here at 4.35%. Where do you think the 10-year ends this year?
Yeah, so we have the 10-year ending just a little tiny bit below 4%, basically a little bit of a rally. And because we do think that the economy is going to be slowing a little bit quicker toward the end of the year, and that the market is going to be pricing for, if not a recession, then certainly something similar to a recession in 2026, where the Federal Reserve will be cutting interest rates quite aggressively. So, so we have 2-year yields going down much faster than 10-year yields, but 10-year yields still rallying another 35, 40 basis points from here.
All right, Ira, thank you so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, safely ensconced down in our Princeton, New Jersey offices here. Looking at the markets, red and green on the screen here. There's certainly plenty of things for this market to digest in terms of the economic data we were just mentioning with Ira. Lots of earnings. We get some big tech numbers from some of the big tech companies coming up in the next several days. Certainly have an impact on this market. But let's see where we can get a reset here as we look forward to the end of this year. Olalu Aganga joins us, U.S. Chief Investment Officer for Mercer. Olalu, thanks so much for joining us here. Pretty solid first half of the year. Earnings seem to be, I guess, okay to good. How are you thinking about risk assets at this stage of the year?
So it's funny you said pretty solid start of the year, because just a few months ago, and I know we all remember this, when we had the drawdown, we had the VIX north of 50, and now it's 15. So as we think about the rest of the year, it's very much in line with how we started. We knew there was going to be a lot of noise. There was a lot of uncertainty around tariffs, and that uncertainty caused volatility in the markets. But for us, it didn't change the sense of direction. We'd always believed in diversification with regards to our equity holding, so a lot more geographic exposure outside of the U.S. as well. So we have that. This morning, the IMF really raised the growth forecasts. So the impact of the tariffs that had been an overhang for some time has been dissipating with a lot of the trade deals coming into place. So it's actually very stable. And we're just really waiting to see how the Fed unfolds in these FOMC decisions.
When you say diversification, I'm curious where you see New Havens today, and how is that different versus 5 years ago?
5 years ago, goodness, when were rates? The rate environment, exactly. The rate environment has swung so dramatically. On one hand, it's a little challenging if you think of rates as the bellwether clearly for mortgages, and where a lot of Americans have their assets is in their homes, for sure. So rates, 30-year mortgage rates north of 6 is pretty tough. However, with rates where they are, it really does bring fixed income and rate-like products back in effect. So yield, income, coupon, having the cash on hand has been incredibly appealing. So you don't need to take as much risk to be able to get the yield in portfolios. So the bonds are back today theme has really been key.
You know, so stocks doing well, bonds doing fairly well. I can get my high yield indexes north of 5% year to date. How about alternatives, Olalu? How do you talk to your clients about alternatives? It seems like there's so many options for investors to get invested in alternative investment space, hedge funds, private equity, private credit. How do you think about that?
So when we start going through the alternative space, everything is around what role is it playing in the portfolio. So hedge funds, for example, we tend to talk to clients from the perspective of looking for uncorrelated assets. So if bonds go down, equities go down, and the correlation between equities and bonds, you know, that diversification has been breaking down over time. So we've seen an increase in hedge fund allocations across the portfolio. I think some of the data has been supporting that as well. So uncorrelated assets has been playing a role, which is great. Steady risers, we tend to fund that from fixed income. And then as we think of either private equity or private credit, it really is the same type of risk underlying it. So it's the company, but what you do have is the illiquidity premium, maybe not as much transparency on the company data. So there is a lot more focus on the due diligence of those companies and making sure that those investments, and more importantly, the time horizon, because you need that for it to pay off, is suitable for the client. So balancing the time horizon, the illiquidity, and what role you want it to play in the portfolio.
Just got a red headline crossing the Bloomberg terminal. JP Morgan nears deal to take over Apple's credit card. That's according to the Wall Street Journal. We'll have more reporting on that coming up.
And Olalu, you mentioned that it all depends on the Fed tomorrow. So how do you think the Fed will balance rising tariff-related inflation risks against really a weakening labor demand at the July FOMC meeting? Can they hold much longer, or will they be forced to act if trade-related inflation really creeps up?
Well, at Mercer, we have a view that we'll see maybe around we're in July, so 2 rate cuts this year. We do think the Fed will hold steady tomorrow. They have been very, very transparent in their signaling. We'd be surprised if they cut, maybe they will, but we actually think they'll hold steady tomorrow. But we think maybe in September, we will likely see a rate cut, given the fact that inflation has been moderated. The tariff announcement hasn't been as extreme as maybe some had thought originally. So it is holding steady. We do think there'll be a couple of rate cuts this year.
We got just about 30 seconds left, Alana. It looks like, Alana, we had the one big beautiful bill. Is that a net positive for this market, do you think?
The one big beautiful bill has a lot of implications. Some are good with regards to tax cuts, and we see those tax cuts playing out this year. The spending cuts will be a little bit back-end loaded. However, there are some direct impacts to some of the clients, frankly, that we have, especially around cuts to Medicaid that affect healthcare systems and hospitals, which are clients that we have. So those types of aspects within the one big beautiful bill could have an impact on uncompensated care for healthcare institutions, which means their costs could potentially rise. And the conversations that we're having with them is, if they have higher costs and operating needs, do they have to start looking at the investment portfolio? So there are positives around the tax cuts, which are front-end loaded, but then the spending cuts, we have to see how they play out. Net, though, the effect of the bill, we do think would add to the deficit. So that's one area that we are watching as well.
Okay, thank you so much, Olalu. We really appreciate getting some of your time. Olalu Aganga, she is the U.S. Chief Investment Officer for Mercer, joining us there. Coming up, we're going to check in with Lee Klaskow. He covers all the transport stocks, including the railroads, for Bloomberg Intelligence. Again, the blockbuster news in the world of U.S. and North American railroading. Union Pacific agreeing to buy Norfolk Southern, which would create the transatlantic railroad. We don't have a transatlantic railroad in this country. If this deal goes through, we will, but a lot of regulatory hurdles to overcome. We'll check in with Lee Klaskow coming up this evening.
All right, so we're about halfway through our rotation up. So I'm just going to wait for this to rotate back up and then kind of see what the condition of the chart is then. I'm going to grab something to eat. I'll be right back.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 poised to notch its 7th consecutive record, the longest such streak since 2021. It's paired some of the earlier gains. Right now up just 5 points, 63.95 on the index. Novo Nordisk falling by a record. The Danish drug maker named its head of international operations as the new CEO after slumping weight loss drug sales led to a profit warning. This is kind of a surprise choice for CEO, and it disappointed investors. They were looking for a high-profile outsider to lead a challenge to companies like Eli Lilly, which has been pulling ahead of Novo in the obesity drug market. And the ADRs of Novo Nordisk right now 21% lower. More on that story you mentioned before, Paul. JP Morgan Chase in advance talk to take over Apple's credit card program. This according to the Wall Street Journal. They would replace Goldman Sachs as the card partner. The agreement, any agreement, would be one of the biggest credit card deals ever. Right now, again, the S&P 500 up 6 points. The Dow down 99 points. NASDAQ 100 78 points higher. That is up 0.3%. You know, both Isabel and I were reading this story at the same time, unbeknownst to each other. Private equity-owned companies driving an increase in defaults. According to Moody's ratings, in the 3 months through June 21st, companies defaulted on more than $27 billion of debt. And they say credit conditions deteriorated in the wake of the tariff announcements. So take that for what it's worth. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
All right, John Tucker, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. One of my very first jobs on Wall Street back in the late 80s, I was a research assistant in the equity research department of Payne Webber covering the railroad and trucking industry. So I love the railroads, and today's a big, big deal. Union Pacific agrees to acquire Norfolk Southern for $72 billion. Now, the per share, it's cash and stock, works out to like $320. Yet Norfolk Southern is trading at a 13% discount, $279 where it's trading today. It's actually down $7 today. I don't know what's going on out there. I'm not doing this stuff for a living anymore. But Lee Klaskow is. He's a senior transport, logistics, and shipping analyst for Bloomberg Intelligence. Lee, I look at the stock price of Norfolk Southern, and it tells me a hefty level of skepticism out there in the marketplace that this just mega deal can actually get done. How do you view it?
Yeah, I think the whole speculation before the deal was formally announced about a possible consolidation, really fueled shares of Norfolk Southern previously. And I think people are just trying to take maybe a breather right now because there are some execution risks, right? This deal is not going to close, if it does close, until early 2027. It needs regulatory approval, which is not an easy thing to do. There were certain rules that were created at the Surface Transportation Board to make it very difficult for large Class 1 rail mergers to happen. That was because at one time in the 80s and 90s, those sorts of deals resulted in terrible service. I think that the rails today were much more cognizant of service as it relates to integration. And I don't really think, either company, once assuming a merger does happen, are going scorch earth in terms of, what they're going to do to their networks. They mentioned on the call that they had earlier today that they're really not going to lay off any, frontline workers. Most of the probably layoffs are going to happen, in the offices. So, that would just mean that services would prevail. And one of the reasons why they are doing this, from an outsider looking in, it does make complete sense. You're going to reduce interchanges. They mentioned on their call this morning that between the two of them, they interchange around 1 million carloads a day. And if they're just able to, if that carload is able to be on the same network, it's not only going to improve network fluidity, it'll actually lower the railroads, their costs. Let's hope they pass on some of that cost savings to their shippers. I think that's what shippers might be concerned about. And it'll provide probably a better service product that they can go out and compete against other modes such as trucks. And that's also a good thing because from an environmental standpoint, railroads are less fuel efficient. Trucking kind of deals with turnover issues and trucker availability issues. Right now, that's not an issue, but at times it can be. And so it is definitely a very interesting deal. It will create the first transcontinental railroad. But they do have their work cut out for them to get that regulatory approval.
So the deal is worth $85 billion. How do they plan to make money back? What are the financial wins, so to speak, to justify that hefty price tag?
Yeah, they laid out $2.75 billion in synergies. About 1.75 of that 2.75 is going to be from revenue. So what they're saying is that we can probably get more volume onto the network because it all of a sudden becomes a much more compelling service offering. And then about $1 billion in cost savings. And some of that, again, you don't need 2 CEOs, you don't need 2 CFOs, you don't need 2 corporate headquarters. They mentioned they are going to have their headquarters in Omaha, where Union Pacific is located, and keep I think they worded a major presence in Atlanta, where Norfolk is currently. But obviously they're not going to need as much space as they once have. And then there's technology benefits. So you're only investing money in technology once, not twice, to get those productivity improvements. So I think those are the major aspects of it. And they mentioned that they could be EPS accretive after year 2.
Lee, he mentioned a lot of regulatory agencies are going to weigh in here on this deal. I also think President Trump is likely to weigh in. Do we know anything about how he might view this deal or just consolidation in general? What's the view as to the Trump administration?
I mean, we don't. The language that management noted on the call is like they wouldn't have moved forward with this transaction if they felt that it was impossible to get regulatory approval. So whether that means they were talking to the administration, whether that means they were talking to the STB or the DOJ or everybody in between, that's kind of, if you read between the lines, is what they were saying. The fact that they're not going to lay off any union folks is probably a net positive for President Donald Trump to say, this is okay with me. So there's a lot of unknowns still. And again, this is going to take a long time. So we have a deal. It has to get Surface Transportation Board approval, which won't happen at least for a year and a half.
Could this spark more railroad mergers in the U.S.? And if it goes through, what will shipping look like in 5 to 10 years? You said absolutely. Please elaborate.
Yeah. So the other railroads in the U.S. are Burlington Northern, which is owned by Berkshire Hathaway. They may make their own bid for Norfolk Southern or decide, we're just going to go after CSX. Because if they do not merge, then they're going to be at a competitive disadvantage. Why would you want to send your freight across 2 railroads when you can send it across 1? So it just would make sense. And if there is regulatory appetite for this kind of a transaction, you could see a Berkshire Hathaway and CSX coming. And if their competitors were able to get a deal, there's no reason why you wouldn't get a deal done between the two. A lot of ifs and buts and candies and nuts, but we'll see what happens.
For an old real estate analyst like myself, today's a big day. I got to speak to 2 of my favorite railroad analysts on Wall Street. First, Tony Hatch this morning, and now Lee Klaskow, senior transport, logistics, and shipping analyst for Bloomberg Intelligence. Again, the big M&A trade of the year so far, and certainly the biggest one. Well, firstly, one I never thought I'd see. a transatlantic, a transcontinental railroad. Union Pacific reached to acquire Norfolk Southern, $72 billion. That's about $320 a share. That's in cash and stock. Would create North America or the U.S.'s first transcontinental railroad. That's a pretty cool thing. Looking at the market here, we've kind of got a mixed screen. The S&P 500's unched. The Dow's down 135, and the NASDAQ is up 27 points, so not a lot of movement there. We got a lot of earnings this week. This is cool.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Looking at Spotify here, Elizabeth, the stock's down almost 10% here, so some earnings were a little bit disappointing, I guess. I mean, holy cow, because this stock had been just ripping. Because that's how you kids consume music, right?
It is how I consume. I know some of my peers do Apple or some other, but I just go straight to Spotify. But they really saw a huge miss in estimates for the second quarter.
Stock down almost 10%. All right, let's check in with the expert here. I got a million media questions here. So we go to Geetha Raghunathan. She is a U.S. media analyst for Bloomberg Intelligence. Geetha, this stock, Spotify, that had been just a star performer. What happened here today?
Hey, Paul. So, yeah, they did miss on a few of the financial metrics today. So their subscriber growth actually was pretty strong. Their active account users were pretty strong. Really, the problem came in terms of both revenue, which, again, kind of expected, but I think the magnitude was a little bit more than what analysts were expecting. So this is, remember, Spotify is a company that reports in euros. And with the weakening US dollar, they had a lot of those FX related headwinds. And then you talked about the run up in their in their stock price. Unfortunately, they're a victim of their own success because, with share-based compensation, they had to pay higher payroll taxes because of that increase in their share price, and that is what actually weighed on their operating income. And so, if you kind of look at it optically, it looks like a little bit of a disappointing quarter. But if you just dig a little bit deeper, look at the fundamentals, they're stronger than ever, Paul.
Yeah, you wrote that disappointing financial results are short-term noise that shouldn't overshadow the tailwinds, like strong premium subscriber and monthly active user. I'm thinking, where does efficiency come from when scale is no longer the answer? Because you think about Spotify and Paramount Plus, they're just really massive companies now.
Oh, absolutely. And the thing with Spotify is they are very much like how Netflix has dominated the whole video streaming story. Spotify is the clear winner in audio streaming. So they have a 35% share of the market, both globally as well as, in the United States. And they have these stated goals. So right now they're at 700 active users, roughly 300 million subscribers. And you kind of look at the entire internet space. I would say that this is one of the stories that has the greatest user growth runway potential out there, because what we're kind of looking at ultimately in terms of a total addressable market for subscriptions is about 1 billion subscriptions. And again, Spotify has a long way to go. We're only at about 300 million. And then again, you're looking at active account users. We're looking at upwards of about 2 billion. So there's just a lot of upside, and scale will help them eventually when it comes to those efficiencies. We're already seeing that kind of play out with their gross margin story. Again, we're seeing a little bit of margin volatility right now, and I think that is kind of overshadowing their stronger fundamentals. But that's just because of, some investments that they're undertaking with their product. Again, we think that'll clear out over the next few quarters.
All right, Geetha, let's go back into my wheelhouse, some older media, if you will. Skydance finally got approval to buy Paramount, or as we refer to as Viacom back in the day. What is Skydance going to do here? What can they do? What do you think the future is of Paramount going forward?
I don't know, Paul. I think that's just the toughest question ever. Well, the one thing that we do know, however, is that the deal is definitely got all the okays after that settlement with President Trump. It's going to close on August 7th, but really the go-forward strategy, Paul, at this point is anybody's guess. So we know that they have a bunch of cable networks, think MTV or Comedy, Comedy Central, all of those, BET, which are really, really underperforming. It's more than 55 to 60% of Paramount's revenue comes in from the TV networks. We're seeing huge declines in advertising, or like 15% declines in advertising. We're seeing huge declines in affiliate revenue, something like 10, 11, 12%. So obviously this is very, very secularly challenged. So one of the things that, I think analysts and investors have kind of been thinking is, are they just going to get rid of the linear TV business altogether? Skydance, as you very well know, is really a film studio business. That is their bread and butter. I'm not so sure they want to keep holding on to the TV networks. But again, nothing is known at this point. So we really have to kind of wait and see what their go-forward strategy is.
All right. So we know some of the big media companies, most notably, I guess, Comcast, talking about splitting up their companies. We've seen plans from a couple of those companies. Where are we in spinning out the cable networks or splitting up the companies and all that kind of stuff?
So Comcast's spin-off of its cable networks is happening a little bit later this year. They're calling it Versant. Again, that's supposed to close. Yeah, very catchy. Supposed to close by the end of 2025. The real big one that we're watching for, and I think that has really kind of piqued the whole media investor community interest, is the one from Warner Brothers Discovery. Yep. So you have the Global Networks business, which by the way, they just announced new names. They're calling that Discovery. They're calling the studio and streaming business Warner. And that's going to happen. Yeah, that's going to happen in the middle of 2026. And obviously, the big expectation is that there's going to be some, permutation and combination of all of these different cable networks with Versant or the Comcast spinoff, because of having the lowest debt, potentially becoming a consolidator. Right. But again, it's playing out.
All right. So in my generation, we put these companies together. Your generation splitting them apart, and it just goes around. Geetha Ranganathan, thanks so much for joining us. Geetha, she is the media analyst for Bloomberg Intelligence, and she's one of the best on Wall Street, so we appreciate getting a few minutes of her time. Again, Spotify had some disappointing numbers, but she's saying, look through it. Look at the fundamentals, they're still pretty solid. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only digital audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence, well, it starts right now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
I'll tell you, a tough day in the healthcare world, and we're going to break it down with some smart folks here. We're going to start off, Mikey Shaw. He's Bloomberg Intelligence Senior Pharma and Biotech Analyst. What's going on in Novo Nordisk? Stock down big. The Wegovy stuff, the obesity stuff, I guess it's not as strong as maybe investors had thought, so we'll get the latest there. Glenn Losa, Bloomberg Intelligence Senior Healthcare Analyst. Going to talk to us about United Healthcare, another tough day for United Healthcare. That stock's down more than 40% this year alone. I don't understand that whole healthcare business, but maybe they can explain it to us. Ann Maletti, Head of Equity Investments and Chief Diversity Officer at Allspring Global Investments, one of the smartest investors out there. I've known her for 30 years. She's going to discuss her outlook on the market, and that's always fun. Brian Egger, Bloomberg Intelligence Senior Gaming and Lodging Analyst. Talk about Royal Caribbean. They're launching ships. They got some cost issues, so a little bit of a noise in their earnings result. We'll talk about the cruise business. And we'll get Charlie Pellet to weigh in as well. He is our go-to cruise director there. Speaking of Charlie Pellet, let's go get a Bloomberg Business Flash right now.
Thank you very much, and eagerly awaiting that conversation. We have got the Dow lower right now with the S&P, NASDAQ, both gaining. S&P, truth be told, fluctuating between gains and losses. We'll call it little change right now, holding it to 63.89. We've got the Dow down 133 now, drop there of 0.3%. NASDAQ also little changed on the day, up 11 right now, up by just under 0.1%. Bottom line here, traders are awaiting economic data and corporate earnings, and of course that Fed decision tomorrow, 2 p.m. Wall Street time. Yes, the news conference, Jay Powell's news conference. You'll be listening for every word right here on Bloomberg Radio. The 10-year ahead of all of this, 4.35%, but the 2-year, 3.89%. Gold is up $12 the ounce, 33.27, up now by about 0.4%. And we've got West Texas Intermediate crude up 1.3%, 67.54 right now on WTI. So Wall Street's divided attention definitely shifts to the Fed decision tomorrow afternoon. Nisha Patel is fixed income portfolio manager at Parametric Portfolio Associates, and she was a guest this morning on surveillance.
I think 2 cuts are still plausible, and I'm thinking, look, we can be in a scenario of where we were end of 23. So end of 23, we had a sharp rally at the end of the year.
Yep.
We had softening economic data. We had a Fed pivot. And so, look, no one's expecting the Fed to do anything tomorrow.
Okay.
But the main story being, we haven't given it enough time, right? We haven't maybe given it enough time for any of the cracks to possibly show up.
Nisha Patel of Parametric Portfolio Associates. The day's single biggest deal, Union Pacific agreeing to acquire Norfolk Southern. We did hear from Arlie Klasko on that. Right now, we have got shares of both companies right now. Shares of Norfolk Southern, they are down by 3.5%. Union Pacific down by 3.8%. Briefly, one other big deal today. Baker Hughes buying industrial equipment maker Chart Industries for about $9.6 billion in cash. Right now, Baker down 1.4%. Shares of Chart Industries, GTLS on the ticker, up 15.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. As Charlie was just mentioning, a little bit of a red on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Isabel Lee, and we're joined by Bloomberg's Denitza Sakova. Denise, what are you looking at today in the market?
Yeah, we talked about this yesterday, Brian. It's not a good day to trade right now. It's just not a good day. Right now, we're in no man's land. We're drifting down. We did have an opportunity up here, like when where I drew the entry zone. We did cross the 20. But 71. This was an opportunity here, maybe. But I'm not messing around, man. What happens here is when you start playing around like this and you don't really have a setup, you'll end up revenge trading and chopping yourself up and completely ruining a perfectly good account for no reason, instead of just waiting. If we wait another 2-3 hours, we might get a really nice setup when it's reasonable and take a nice little profit and then be done for the day. But right now, until a setup, look, even we've got too much volume. My trade box is off because the volume is too high on the 3-bar average. So I can't even enter right now. It was too high earlier too. So I just got to either wait for a really good pullback that's organized or wait for the reversal and for the EMAs to cross. So the hardest thing to do is sit here for most of the day and watch the market go by and not do anything. I'm telling you right now, it's the hardest damn thing to do. To not be in the action when the price is moving around like this is hard. But I'm probably not going to do anything for at least another couple hours unless this gets organized and it's a clear entry and all my conditions have been met. But I'm not sure. Look at the stochastics. They're pinned right to the bottom right now. I mean, it's just tough to make I can't make an argument for an entry right now. There just isn't one for me, So I'm just spending some time. I'm working my leads, and maybe I've got some dry powder in my 401k. I'm maybe looking for a couple new stocks I can pick a little bit up on, and I'm keeping myself busy so I don't get hypnotized by the candles that are moving so fast and talk myself into a trade, if you know what I'm saying.
Thanks so much for joining us.
So that's what I'm doing right now. If you got any questions or anything, throw them in chat, but I'm just hanging loose for a little bit.
Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's talk a little healthcare here for the next couple segments. We got two really good analysts to join us here. His friends call him Mikey, and I'm his friend. I'm calling him Mikey. Michael Shaw, senior pharma biotech analyst at Bloomberg Intelligence. He's based in London. Mikey, you got to talk to me about what's going on with Novo Nordisk. I thought these obesity drugs were the bomb here. What's going on with their guidance? That was a huge miss for them.
Yeah, two pieces of news today. First is the guidance cut, so the second guidance cut of the year. So reported guidance now is calling for 7% sales growth, 6% operating profit growth after adjusting for currency, and that compares to 14 and 15% respectively previously. Now, a lot of that is related to the US market. They're still seeing headwinds from compound and GLP-1, which seems to be the main driver that's affecting Wegovy growth. And there's a lack of visibility here. So all of that creates uncertainty for investors and also kind of questions around not only 2025 numbers, but the exit rate into 26. So there's concerns about, mid to long-term growth, given how concentrated or how reliant, Novo is on Wegovy for growth. The other headwind is competition to Ozempic. So that's the GLP-1 for diabetes, and that's another, key growth driver for the company. Second piece of news, new CEO appointment. So they went with an internal candidate. I think the market was perhaps expecting them to go for an external candidate. So, perhaps a bit of disappointment there. But that said, he's been at the company. So this is Mike Dudster. He's been at the company since '92. He's been heading up international operations since 2016. And over that time, we've seen international operations sales double to around $18 billion. So, he's an internal hire. He's familiar with the company culture. I think it's a bit too early to write him off before he's even started. Now, his focus is going to be on regaining ground to Lilly in the obesity space, maintaining leadership in the diabetes space, and then improving execution. And that's something that's going to be key ahead of the CagriSema launch, as well as the launch for its oral GLP-1 in obesity, particularly given, CagriSema perhaps isn't as differentiated as we had hoped for, and then the oral GLP-1 profile perhaps trails that of Lilly's.
In a call with journalists, though, the new CEO said he's planning to review the company's cost base without setting specific targets and metrics. So could this indicate that Novo is preparing for a period of slower growth after the initial surge in demand of especially the blockbuster Wegovy drug?
I mean, I think it'll be hard to slash R&D, to be honest. So, I mean, and they would need to, continue marketing, continue to do DTC in order to, in order to compete with Lilly. They're obviously heavily investing into CapEx at the moment, but there is probably some operating leverage in there, to provide some sort of relief. I mean, the company's got a margin of about 45%, which is at the top end for large pharma.
Hey, Mikey, is there any reason to believe that maybe the marketplace has been overestimating the size of this obesity drug market?
I think there's always a risk with an indication this size. When you look at the market potential, in the US alone, it's 140 million patients, which is the target population.
I think that's one-third of our population, man.
Yeah, I mean, there is a risk that, perhaps consensus did get ahead of itself. But the difficulty here is, you have, huge runway of patients. There's obviously limited supply. So it's difficult to know kind of, how quickly that supply can come on board. Now, Novo gives guidance around, their growth prospects, where they think sales, et cetera, are going to go, but they keep, they don't necessarily quantify, the cadence of supply and how quickly that's going to come online. So that kind of makes forecasting quite difficult. And obviously they don't want to give that information because it's competitive information, and they don't want, Lilly to know about it either. So.
Boy, back in my analyst days, I would have slammed at this management team because that guidance was brutal. They were nowhere close to hitting it, and their big reduction in the guidance, and we see the stock down 22% today, down 37% year to date, 52-week low. So they're paying the price for it. Mikey Shah, folks, he's one of the best healthcare pharma analysts in the city of London. Every institutional investor wants to talk to him. We appreciate getting a few minutes of his time. Mikey Shah, senior pharma biotech analyst, Bloomberg Intelligence, over there in our London studios. I mean, let's stay with healthcare because it's not a whole lot better with this big insurance company, United Healthcare. That's one of the big ones in the marketplace. They had some disappointing results, took their guidance down a little bit. The stock's down 4.7% today, but it's down 47% year to date. It just seems like every week there's something on United Healthcare. So let's check in with Glenn Losov. He covers the stock and the industry for Bloomberg Intelligence. Glenn, what's going on with United Health? They really just can't seem to get out of their own way.
Yeah, so it's just not just United Healthcare, it's mainly managed care companies overall in 2Q and in the first half of the year. The biggest thing is basically that the companies are facing much higher medical costs, which were not correctly priced in going into the year. And this may continue probably until the end of the year. So the new catalyst and the near-term catalyst that we see is basically the 2026 earnings growth view that may change the sentiment for the United and for the rest of the group.
I mean, United Healthcare, Eden Prairie, Minnesota, 400,000 employees. I had no idea it was that big.
Yeah.
Incredible.
And covering 50 million, providing coverage for 50 million Americans.
Including yours truly. There you go.
So does United expect cost pressures, especially medical utilization, to ease this year or in 2025?
So it's very difficult to say. So the company and the rest of the sector projects that the medical costs will continue to be elevated. So the question is if they can price correctly price the next year costs. And all of the health insurance companies, including United, are indicating that medical cost acceleration will continue next year.
So what did they get wrong, or what did the industry get wrong this year?
They basically mispriced the demand for care, acuity.
Isn't that their job?
It is, but listen, everyone makes mistakes.
Okay.
The issue is that the company like United, when they misprice, it's a shock because it's unusual for United to do so.
But I feel like, so the key problem facing United is that Americans are simply using more healthcare, but at the same time, we have government programs really clamping down on who's eligible for really subsidized coverage and changing payment formulas. How do you square the two then? It seems like one is the surplus and the other one is the clamping down.
Well, the thing that you refer to will be more of an issue or a question mark for 2026. Right now, the medical cost acceleration, care utilization, higher costs of drugs, for example, higher need for behavioral care is what's driving sort of pressures in 2025. Those pressures may continue in 2026 on top of the Big Beautiful Bill overhang.
So how is the Trump administration impacting your part of the healthcare world, the insurance side?
Well, with the looking at the 2026, beginning in 2026, there are two things that are coming up. First thing is the marketplace, which is ACA exchanges. Subsidies for those for that market side will so the subsidies will end at the end of 2025. So less people will enroll in the membership and for in marketplace, and for marketplace or for any insurance company, size is key to sort of generate profit. So obviously there's going to be some pressure on that. Longer term, Trump care, let's call it, is obviously pushing or will push for work requirements, which will pressure Medicaid membership. So all of these things are an overhang for health insurance companies like United.
You can't. I mean, our investors, what are they? They're just dumping these things, right? You can't.
Well, right now investors are washing their hands, but the companies, including United, are trading at below the two standard deviations over the 10-year average, which is becoming more appealing, right? So at one, assuming that these companies can price next year's benefit correctly, and combining that with the very discounted valuations right now, there could be an upside.
All right. I tell you, that's just one business. I have no idea how the economics work. I just keep making my payments every 2 weeks, and hopefully it all works out. That's how I do it. Glenn Losov, thank you so much. We appreciate that. Glenn Losov, he's the senior healthcare analyst for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. Again, a tough day. Novo Nordisk stock down 20+%. United Healthcare off 4.5%. So in this marketplace, you disappoint on earnings, you're going to pay the price in a big way here. And we got a lot more earnings coming up this week. We've got some tech companies, Amazon, Microsoft. You're going to get some big tech names, and that'll be important for this marketplace. S&P 500 is off about 6 points here today. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at lows of the session right now on the S&P 500 index. Stocks declining in this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. S&P lower, little changed as traders review economic data and corporate earnings ahead of the Fed decision tomorrow. 2 o'clock when it all comes down, 2:30, Jay Powell's news conference on Bloomberg Radio. S&P down 9, again underscoring low of the day, down 0.1%. The Dow down 179, down 0.4. And we've got NASDAQ lower by 36, drop there of 0.2%. 10-year, 4.34%. The 2-year yield, 3.89%. Gold up 0.4%, 33.27 the ounce. And West Texas Intermediate crude now at 67.51 a barrel, up by 1.2%. Consumer confidence increased in July after declining last month as concerns eased about the outlook for the broader economy and the labor market. Conference Board's gauge of confidence rose 2 points to 97.2. Stephanie Gouchard is senior economist at the Conference Board. She was interviewed this morning right here on Bloomberg Intelligence.
It's rebounded, but it's rebounded slightly. And to me, the main message is we have this kind of stabilization in consumer confidence after the roller coaster we saw in the past 9 months.
You can hear more of the conversation with Stephanie Gouchard of the Conference Board on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. Recapping, S&P now lower by 0.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. And we're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. I'm looking at the SPX, the S&P 500. About 40% of the companies have reported earnings so far. We got about 5% growth in sales, a little more than 7% growth in earnings. Not bad, a little bit slower than the first quarter, but still pretty solid. Is that enough, though, for this marketplace? Ann Meliti joins us, head of equity investments for Allspring Global Investments. And it looks like the earnings season's coming in okay, but again, at a 22 times earnings multiple for the S&P 500, you know, I guess you got to wonder, is that enough?
It's a great question, Paul. And I think if we would have gone back to January and said, is it enough versus expectations then, we would say no, but expectations have come down a lot since then. So companies, rightly so, brought down expectations a lot and seem to be, for the most part, coming in a little bit better than expectations. So when you look at these valuations, again, on a collective basis, they look high, but we're looking more underneath and finding companies that don't appear that expensive. And that's where there's some areas of attractiveness in the market to us.
You said that the tech sector is still providing a lot of fuel to the market, and AI has been one of the core theses among many of those. But how do you separate real earnings leverage from just really speculative multiple expansion, mainly in tech?
It's a great question. Look, we believe innovation is real, and it has been driving earnings in the tech sector, but it's really been in some concentrated areas. We think that's going to broaden out, not just within technology, but in other industries as well. Certainly, you can't ignore the free cash flow that's come from many of those companies, and that has helped pull the market up. But there's other things that we're looking at. For example, and Paul, I think this is more to your point as well. When I look at the broader S&P, we have 70% of the companies hitting a new 200-day or hitting their new 200-day high. That's, historically a good sign and means that, investors are not ignoring a lot of the market and not focusing just on a concentrated few, they're starting to see that there is value in other places of the market. And so, again, that's where we're trying to pay attention to. And Isabella, those areas that we believe will produce good long-term free cash flow is the areas of the market we're interested in.
And I know we've talked about in the past small to mid-cap companies as an area where maybe you could find some real opportunities, some real value. How do you think about that part of the market, small to mid-cap?
Yeah, Paul, it's been a tough area for sure. And I think when I look at it, I think that mid-cap space, so kind of the Russell 2500 area, that is kind of a sweet spot here. Typically, these are companies with strong balance sheets, do have good free cash flow, solid management teams, and usually have better than average growth. And again, those are typically good factors to say that these companies can outperform and historically have. Those, by definition, are trading at discounts relative to some of their larger cap peers. And so I do think it's a sweet spot right now, especially if we see the trend in interest rates going lower. That's going to be a factor that's more favorable for those companies. And you can't ignore the trend in M&A. I know we see a very big one here today, but this mid-cap space is just ripe for opportunity in M&A as well.
With the markets at an all-time high, I feel like if the S&P, I think, closes higher today, it'll be the longest such stretch since at least 2021. How much more volatility are you expecting, and how are you hedging?
Yeah, it's a great question. I don't think the volatility is over. We had 2 really strong years of 20% plus returns. And, we're in another year that has produced solid returns for investors. It's never, a smooth path. I think we're going to see some bumps along the road, and investors should be prepared for that. I do think some of those bumps can actually lead to a healthier path. So
Timber!
whether it's a pause or a little bit of a pullback.
Don't get caught
that
trying to catch the
actually
falling
can be
knife.
healthy for
That is
markets
the sin.
overall. And so again, what's going to cause that?
Don't
Not
get
sure,
caught.
but we get news
Don't get
every day
FOMO.
that seems to surprise
No
investors.
FOMO.
And so
It's easy to
when
give
we're
yourself
looking
FOMO
at,
watching this happen.
equities, it's about risk versus reward. And I think that's, our theme
There is no
is
FOMO.
to stay active in equities, not to focus
Yeah,
just
I
on
know.
being
It's hard to
passive.
wait.
Think about where you
I'm
really want to be
I'm just
and
trying to
where the
do other
risk
things
return is
until
better, because
I
there
have
is
something
clearly risk
that makes
involved
sense
in
for,
investing at this
how
stage of the market
how I look
cycle.
at it.
And thanks so much for joining us. Always appreciate checking in with you. Ann Milady, she's head of equity investments. We're there at Allspring Global Investments. They're there in Milwaukee, Wisconsin. Let's go to the cruise business, the Charlie Pellet cruising business. Royal Caribbean reported some results. A little bit disappointing. The stock's off 5% here today, but it's up 45% year to date. That business remains so resilient. We check in with Brian Egger. He
All right,
covers
I got a call.
the cruise industry along with the gaming and the hotel businesses as well. Hey, Brian, what did we learn from Royal Caribbean today in the results?
To your point about maybe some disappointment coming out of the quarter, there was a little bit of an implied third quarter profit guidance reduction. But I think as we kind of sense from the earnings call that ended recently, a lot of that was due to cost shifts in timing and the delayed delivery of a particular ship. So overall, the underlying demand in the business really remains quite strong. And I'm encouraged by the fact that they said there could even be some upside to this year's yield growth guidance if some of the recent strength in close-in bookings continues to accelerate.
Will higher prices for cruise continue, or is demand slowing down? Like, what does the future look like for those companies?
Overall, it's been pretty strong. I mean, the looking ahead to 26, we're pretty much in line with the book position we want to be for this year. We've got a nice trajectory of increase in kind of a book position comparable to prior year levels at higher fares. So the pricing is there, and a lot of it is coming from close-in demand and from onboard and pre-cruise spending. So a lot of people are putting their money down before they take the cruise, and that's where a lot of the spending increases are coming from.
Brian, what's the industry? What's Royal Caribbean and its peers? What are they doing in terms of capacity? Are they still building ships, adding ships to the fleet? What's going on there?
It's still on balance a kind of a mid-single digit, 4 or 5% long-term capacity growth. It's even lower, closer to nil this year for Carnival. So overall, it's comparatively moderate. There is some new hardware coming online, and that very often does help yield growth. But from an historical perspective, it's pretty much been the norm.
How might broader factors or external factors like fuel price volatility or geopolitical tensions really compressing margins for the remainder of 2025? Are they doing some cost hedging, or are they trying to be flexible with operations?
Yeah, there's always a focus not only on cost efficiencies, but fuel efficiencies have increased a lot in recent years, and there is some built-in hedging programs for Royal Caribbean. I think looking at the geopolitical situation, obviously an uncertain world, but they seem to be faring okay. I think there was probably a little bit of for the industry overall, a pullback or a disruption in bookings right after the Liberation Day tariff announcements, but we have not seen any follow-on in any kind of weakness. So I think what we're seeing is overall pretty stable demand, notwithstanding some timing issues that specifically affected Royal Caribbean in the third quarter.
Brian, are there parts of the world that people are cruising more or cruising less? Is that one way to look at it?
The big cruise market, the largest, is North America and the Caribbean, but it's increasingly a global industry. Arguably, I'd say it's less penetrated in terms of the population penetration in places like Asia. So it's pretty broad-based. I think we're looking at an industry that is increasingly global, although obviously a big chunk of that is coming from Europe and North America.
Got a little pullback starting to happen here. Stochastics are pointing straight up. Let's see how far we go.
Can you talk a little bit more about that?
Sure. So I think what we're generally seeing, the feedback from the company is not only in this quarter, but recent quarters is
still way too much volume on the ES and NQ.
In line with comparable years at somewhat higher fares, and that's a formula obviously for yield improvement. They are expecting to see 3.5% to 4% yield growth in 2025. So that's obviously a nice pace of improvement. The key thing is whether or not this kind of increase in close-in bookings and onboard spending, if that continues.
Brian, real quick, switching gears on you. On the Strip in Vegas, how's the traffic there these days?
I think the sense is that traffic maybe in Vegas in the summer was a bit slower than it has been in prior summers, and there are some kind of comparison issues there. Overall, Vegas demand has been fairly resilient, as is true of most subsectors of leisure travel. We'll get more feedback from like MGM, for example, on their earnings call tomorrow night.
We got a little ways to find out.
Summer months, maybe
it might, but
going into July, maybe a little slower.
I've got nothing to go with right now. I'm just kind of watching for
actually
for
Caesars
fun.
Tonight, MGM tomorrow.
All right, awesome. Bellagio on the Strip. I got the Sweeney High Roller Suite always waiting for me. Brian Egger, he goes anywhere he wants in Vegas. Senior gaming and lodging analyst, Bloomberg Intelligence, joining us via Zoom. Coming up, George Ferguson, Bloomberg Intelligence, senior aerospace, defense, and airlines analyst. Boeing, JetBlue, they had some earnings out. Let's break it down. This is Bloomberg. Good morning.
Oh, maybe we found a place we're going to consolidate at for a while. I'd like to see it push sideways for about half an hour, then we might have something to work with.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The stock rally stalling in the run-up to the Fed. The Dow, the S&P, NASDAQ, all declining right now. S&P 500 index trading very close to session lows, down 16 now, retreating from a record 63.73, down by about 0.3%. The Dow down 211 now, down 0.5%, while the NASDAQ Composite Index is down 66. For NASDAQ, a drop there of 0.3%. The Bloomberg Mag 7 Index ahead of earnings from Meta Platforms and Microsoft tomorrow, Apple and Amazon on Thursday. That index down by 0.6%. 10-year 4.35%, with the 2-year currently yielding 3.89%. Gold up $9 the ounce, up 0.3%, and West Texas Intermediate crude up 1.4%, 67.65 a barrel. Union Pacific makes it official. It has agreed to acquire Norfolk Southern in a cash and stock transaction valued at $85 billion, forming a transcontinental rail giant in what stands to be the industry's largest deal ever. Shares of both railroads are lower. Lee Klaskow is a senior logistics analyst with Bloomberg Intelligence.
You know, it does make complete sense. You're going to reduce interchanges. They mentioned on their call this morning that between the two of them, they interchange around 1 million carloads a day. And if they're just able to, if that carload is able to be on the same network, it's not only going to improve network fluidity, it'll actually lower the railroads, their costs.
Bloomberg's Lee Klaskow interviewed right here on Bloomberg Intelligence. Again, both railroads are lower right now. That deal, by the way, on track to close by early 2027. Union Pacific down 3.6%. Norfolk down now by 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pelleton, thank you so much. We appreciate that. Isabel Lee, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So check us out there. Aerospace, airlines, a lot of earnings going on in that part of the world. Boeing and JetBlue today. Let's check in with George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence, safely ensconced down there in Princeton, New Jersey. Hey, George, let's start with Boeing. I know, for analysts, investors for Boeing, it's all about cash flow and free cash flow and stemming the free cash flow bleed here. How did the company do this quarter?
Yeah, so the free cash flow is still a little bit negative, not much. Cash from operations positive. A little bit, 200 million, I think it was roughly on 200 negative at free cash flow, 200 positive in cash flow, I think roughly. So we're seeing an inflection point here in cash flow. So cash flow had been negative for the last, I think it was 6 quarters before this. And I think that's just a sign of they're getting more aircraft delivered. They're going to, they've got a lot of inventory still. They'll pull off the shelf to build aircraft going forward too. Pull a bigger proportion of stuff off the shelf than they would during normal times, which should juice that cash flow up, pretty well. So I think it's the turnaround is still is underway. It looks like it's well in in swing in the results we saw and the way company management commented on the end of the year, and so. I think it was a pretty good results quarter for Boeing. Again, turnaround intact.
How are they addressing quality and safety issues, especially when it comes to the 737 MAX program?
Yeah, I mean, it's, as Kelly Ortberg said, it's a process. I think just the sign of seeing increased deliveries is showing us that the quality improvement at Spirit, has seen success. And they're talking about, they're at 38 737s a month now. Kelly Ortberg says he's going to approach the FAA in a short period of time and work on the 42 737s a month. So again, he must have some level of confidence that his quality and his engineering is good in order to go further. It's not perfect. They've been slowed down a little bit in the certification of 737-10. And -7, they've pushed them into 2026. I think it's okay. It's not a big move. We'd like to see them come faster because 737-10 is a large competitor to the Airbus A320, which is very successful, and one of the reasons they saw United place a big order with Airbus. But again, I think that you can't expect this stuff to go in a straight line, and the fact that they think 2026 is when they could get certification, it doesn't tell me anything's broke. It just tells me the process is nonlinear, and I think to be expected in aerospace.
All right. Also, JetBlue posted a smaller than expected loss here. What's going on with JetBlue and the airline business these days? Because I know the last quarter, boy, these airline companies are really reticent to give any kind of guidance.
Yeah, I mean, a lot of them have come back with guidance, in a lot of cases lower. The airline business right now is really counting on less capacity in the second half of 2025. And we'll see how that goes. Last time I looked at domestic capacity plans for 3Q, it's kind of about 0 growth. I mean, I think they need to cut capacity in the marketplace. If you look at JetBlue's results, load factor fell by, I think it was around 300 basis points, down to the low 80s from mid 80s. And they held fares pretty much flat. Yields were kind of just up a little bit. So that just tells me that there's too much capacity in this market. They just can't fill airplanes at the right price. JetBlue has other problems like, the geared turbofan keeps them from expanding. That means costs are ballooning on them. But I don't see how they'd want to expand right now. Because again, what I see is a market that can't fill airplanes at the price that's that's going to keep them very profitable. And so someone's got to cut. And the question is who? The full service carriers are saying, hey, we got premium to subsidize us. We don't care. The low costs are going to have to. JetBlue will cut in 3Q, but every time they cut, their costs go higher per seat. So they're in a bit of a challenging position.
It does seem like the issues just compound for the companies in this space, from aircraft shortages, delivery delays, pilot shortages, wage inflation, labor negotiation, and so on. Are there differences in how Boeing and JetBlue addressing the issues, or is it really an industry-wide consensus and problem?
Well, I mean, if you talk to Boeing, everybody wants an airplane, right? And they're sold out on the 737 and 787 to the end of the decade. Everybody wants the newest. And I think what needs to happen is, again, the airlines are just putting too much capacity in the marketplace, especially in the U.S. And someone has to cry uncle and say, hey, we can't take the profitability at these levels. Park some airplanes, get them out of the business so they can right-size capacity. And I think nobody wants to do it. You have some competitors that are in a situation where some of them have already declared Chapter 11, like Spirit, and then refashioned themselves and got back out in the marketplace. But it's either someone's going to have to go away, or the market's going to have to get negative enough in profitability that people start to park airplanes. As we get into late end of this year, 4Q and 1Q, those are weak quarters for the U.S. airline industry. If something doesn't improve, if you've got a JetBlue that's barely positive in profitability in 2Q, without a change in this market, that's a strong negative. Near the end of the year, people will start to cut capacity and try to boost fares.
So, George, who does that? Is it one of the big three? I mean, JetBlue can't drive capacity in this industry. It's got to be one of the big three, right?
Yeah, look, I don't think it's
All right.
the big three are.
We got a straight up stochastic. We're actually moving to overbought.
That they've got pole position.
We're kind of slowing down around the 20.
Someone's going to fail on the low cost side because the low cost.
We're outside of our volume range though, but it's this is starting to form up.
Like their profitability is hanging in there. The low cost carriers are the ones taking it on the chin.
Yep, and we saw Southwest Airlines actually now kind of start charging for bags, and now you can do seat reservations and all this stuff.
Going to premium.
Yep, they didn't do before, which was part of their cachet. One could argue their brand, but they're saying, heck, we need the revenue. George, thanks so much for joining us. We appreciate that. George Ferguson, senior aerospace, defense, and airlines analyst. If it flies, he knows what's going on there. I mean, he goes to all these cool air shows and like climbs into new planes and stuff like that. And we pay him to do that. Somehow he's working that angle very well. So he's one of the best on Wall Street. We appreciate getting a few minutes of his time here. Looking at the market here, got a little bit of red on the screen here, kind of rolling over just a little bit. The S&P's off 12 points. The Dow's off 190 and the Nasdaq's off 50. So we'll keep an eye on that. It's about 0.25% for the Nasdaq. Yields pulling back. 10-year Treasuries off.
You ought to be okay.
Let's call it 4.35.
Just be careful when we get to the 50 EMA. You might want to tighten up. You got your break even and profit, Brian? Oh, okay, good. Oh, good. Nice little snipe. So we just reached overbought on the slow stochastic. So let's see if we kind of stumble over and head back down. And if the trade box turns on, nah, the trade. I'm not trading any of this. Let me see what the ES is doing. Yeah. Both the boxes on the ES and the NQ are grayed out. It's doing way too much volume.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Isabel Lee, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube. So head over to youtube.com, search Bloomberg Live Podcast, Bloomberg Live Radio. Either way will get you where you need to go. Red headline crossing the terminal as well. China says it agrees with the U.S. to extend tariff truce. So extensions are good.
Extensions are good. We have the Vice Minister of Commerce, Li Chenggang, telling reporters in Stockholm. I feel like there's been a ton of extensions.
Yes.
But we'll see how the markets are going to react to this. For now, shares across all indexes are down, Paul. Dow Jones is down by 0.4%, S&P and Nasdaq down by nearly 0.2%.
Yeah, looking at the Bloomberg Dollar Index, a little bit of a lift there, up about 0.25%, 1211. Spot 01 on the Bloomberg Dollar Index. So, you think about it, deals have been, I guess, agreed upon with, most notably recently, I guess, Japan and then the European Union. And China truce will just extend this truce on the tariffs. Maybe both sides can continue to negotiate.
We also have this headline saying that they will continue close communication. So I guess there's that.
All right, that's good news. Well, talking is always better than not. Let's talk fintech here. I mean, for a lot of people, fintech is PayPal. That's one of the certain things, and we know it's a much bigger sector than that. Diksha Gera, she's a senior fintech and payments analyst for Bloomberg Intelligence, talking about PayPal. Diksha, PayPal, they raised their profit forecast as Venmo revenue jumps 20%. Talk to us about what's happening at PayPal. The stock is trading off about 9% today.
Yes, and that's the interesting bit, right? It's been past couple of quarters, Paul, and they've kind of been able to set this beat and raise cadence with the new management. So today it was an 8% adjusted EPS beat. The stock is still down about 10%. And if you've paid attention, I think the reason that people are citing around this is that the branded transactions were slightly slower sequentially. So that came in at around 5% growth versus 6% in the previous quarter. And what has happened there is that because of the tariff impact, some of the spend on Chinese-backed platforms has been slower. And PayPal's exposure to cross-border e-commerce has exposed that a little bit. The interesting part, though, is that that's still rounding errors. What people have really missed is that PayPal has started firing on all the monetization cylinders. It is basically Venmo revenue growth was up 20%. That has been the big question mark, and we can talk more about that. Their unbranded, they're saying it's bottoming out now, and all the unbranded transaction growth that we were missing out in the first quarter will start accelerating in the second half. And overall, if you see like all the metrics, transaction margin dollars, adjusted margins, operating metrics, all of them have a very decent beat in this quarter.
Let's focus a bit on Venmo. Paul and I were talking about this earlier. We are both users, and Venmo revenue, for example, increased 20% in the quarter. Are they aiming for more of that? Like, how much are they banking on Venmo and its growth? Because among my friends, actually, it is really widely used.
Yes, and see, that's the interesting part, because when this new management came on board, that was the biggest question. Like, can they monetize Venmo? And it was one of those most undervalued or underappreciated asset in a way, right? PayPal has done a lot in the last several quarters around Venmo monetization. So the one part was obviously the P2P part was the biggest chunk, right? When you're transferring money to your friends and family, that isn't really the most revenue generating part of Venmo. But what they've done is they have used that strength of Venmo with all the college graduates, with even students, right? And that's like their prized client base that Venmo is really kind of known for. All of that has been extended into money-making avenues like Venmo debit card, like a credit option, buy now, pay later being launched on Venmo. Now, Pay with Venmo has become a very big part of the whole branded transactions push that PayPal is doing. And that habituation is very powerful, right? Like if you think about that entire young customer base, they can take that and now go to merchants and then sell them that we know this customer base and we can help you do targeted selling. So on the merchant side, they've launched ads. You can actually go in and buy products from ads now as well. So all that innovation is what PayPal's kind of targeting and really amping up now to monetize some of the pre-existing PayPal assets.
Electronic payments, how's the market share shake out between, I don't know, Venmo, Zelle, and whoever else is out there?
That's a good point. So globally, digital wallets are actually gaining a lot of traction in terms of the way people are paying. And that includes the broad gamut of wallets, Paul. So you have, in the US, the most popular ones
Trade
are
box
Venmo,
is on.
Cash App, and to a certain extent, Zelle. We actually publish monthly app usage statistics for the digital wallets in the US, and Venmo and Cash App tend to win over Zelle in that regard. But globally, if you see, you include Apple Pays and Google Pays of the world. So what PayPal is doing to capture that is they've launched something called as the PayPal World, where they will incorporate all these digital wallets. So say, for example, someone in India who wants to use a UPI-based payment to buy something from a German website can do that using PayPal Checkout now.
Interesting.
So that
Order
entire
submitted.
push on digital wallets is getting capitalized by PayPal.
Yep.
I'm going to take a short right here just to see what happens.
Dick Shigerich, Senior FinTech and Payments Analyst.
Because we need to come down and revisit this, and I think the 50 may hold it up. So I'm going to, actually, I'm going to move this higher.
In the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121.
If we jump
Access
up to right there, I may go long, or I may go
Business
short.
Network, coast to coast, 24 hours a day. Stay with us. Balance of Power with Joe Matthew begins right now. We got a little bit of sell-off in the market. The Dow off 200 points.
We're rolling over on the stochastics.
This is Bloomberg.
Actually, the cash, it's
I'm going to see if the 50 will hold this down, and we revisit that fair value gap before we go
Live
higher.
from
That's what I'm
Washington,
saying.
D.C., This is Balance of
So,
Power with Joe Matthew.
If we kind of double top here, I'll go ahead and get in short for 2 only and see how it works out.
Welcome to the Tuesday edition as the Treasury Secretary and the U.S. Trade Rep meet with their Chinese counterparts in Stockholm in the hopes of extending a trade deadline that's set for just weeks from now, next month. Now, we expect to hear from the players when they emerge from this meeting any moment now. And we'll discuss with Bloomberg geoeconomist Adam Ferrer. The Senate is set to vote on the minibus this week. We're going to talk about the budgeting process as we watch the clock with Nathan Dean at Bloomberg Intelligence. And we'll have analysis today from our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the duration. Let's check on Wall Street as we wait to hear from the players inside this negotiating session. Charlie Pallett is at World Headquarters in New York. Charlie?
Thank you very much. Joe Matthew did see a slight
I don't know. I may pull this off.
China headline worth recapping.
I don't like that
Resetting
forecast
repeating
cloud.
that
It's
China
extending.
does say it agrees with the U.S. to extend a tariff truce. S&P, though, remains lower.
I'm
down
gonna just
10,
watch it
down
here. I may pull
0.2%.
this off.
We've got the Dow down 205, down 0.5%. NASDAQ down 21, a drop there of just about 0.1%. Yes, we got you covered in Stockholm on the latest on those trade headlines, and we'll have them for you here on Balance of Power. The 10-year 4.36% with the 2-year 3.89%. Gold up $5 the ounce, $33.19, up by about 0.1%. West Texas Intermediate crude oil up 1.5%, $67.71 for a barrel of
The ES
WTI.
looks really good right now. I
The
gotta be
International
honest,
Monetary
man.
Fund says the U.S. or the world economy will keep weakening and remains vulnerable deal to trade shocks despite showing some resilience to President Trump's tariffs. Commerce Secretary Howard Lutnick says some issues surrounding the U.S.-European Union Trade Pact are still up for discussion, saying, quote, there's plenty of horse trading left to do. Lutnick was on CNBC discussing the deal and the broader trade picture.
We're basically having America sold out from under us by continuing to have these 1.2 trillion globally trade deficit. It's got to end. The president is changing it. So his view is you can onshore to get rid of it, or you can pay a tariff to get rid of it, but let's figure out how to get rid of it.
Commerce Secretary Howard Lutnick interviewed on CNBC. Union Pacific and Norfolk Southern have agreed to an acquisition in a deal valued at $85 billion. Shares of both companies are lower, indicating some skepticism about whether they'll be able to consummate this deal. Right now, we got Union Pacific down 4%, Norfolk Southern lower by 3.4%. Balance of Power continues right now. Back we go to Washington. Fast-moving developments on trade. Once again, your host, here he is, Joe Matthew.
All right,
I'd have been in if I'd have got in down here where my original stop was. All right, I'm going to get out of that.
Happen could move the markets. We're already seeing headlines, as you just heard Charlie Pellet mention. One of them has gone red. China says it agrees with the U.S. to extend the tariff truce. This follows a couple of hours of negotiations between Scott Bessent, our Treasury Secretary, Jameson Greer, the USTR, and their Chinese counterparts. We are currently watching a conference room in Stockholm. If you're with us on YouTube right now, there you have it. These reporters have been in this room for some time, waiting for the players to emerge. And when this takes place, we're going to bring this conversation to you live. Remembering the last time we went through this, it was pretty late at night. Scott Bessent, at that point, Howard Lutnick emerged from negotiations with the Chinese.
If the stochastics are completely oversold and on the way up when it touches the fair value gap, I may take the long. But the stochastics have to be running that way.
On what we're going to have. But we do know that the communications will continue with a series again of headlines crossing the terminal here. China and the
I almost
US
think the long is here, to be
extend the
honest with
trade
you.
truce, having
This looks
exchanged
like a
views
bull
on
flag.
macroeconomic issues. Both sides aware of the importance to safeguard sound trade ties. As I read the headlines here, the trade talks constructive on major topics. They were described as in-depth and candid. Now, these headlines are coming from the Chinese. We still have a lot more to learn from the Trump administration and certainly the individuals who were in this room. A podium has been set up. You've got four American flags behind the podium for the Treasury Secretary and the USTR. And as we just showed you, a room full of reporters who are waiting for them. This is where we start the game today on the early edition of Balance of Power on Bloomberg Radio, Satellite Radio, Channel 121. Live on Bloomberg Originals. If you want to watch the program, you can do the same on YouTube by searching Bloomberg Business News Live. Now, again, we set the baseline with Charlie Pellet on the markets as we wait to hear details from this session. We're joined now for a little more color by Adam Ferrer, who's been a real voice of expertise on this for us. He's one of the top geoeconomic analysts in the country, and he's all ours at Bloomberg Economics. Adam, it's great to see you. Welcome back here. What are you going to be looking for beyond a date when these gentlemen emerge?
So I think you've gone over a lot of what our base expectation was when we walked into the room today and when we looked
That's a pretty low expectation.
That's right. I mean, the Treasury Secretary laid out before the talks that he felt a extension was on the table. And so what we've heard so far is that they have reached that low bar, as you described. They have agreed to continue talking at a later date. Now, the fact that the Chinese are out with a somewhat more fulsome statement highlighting the importance of trade remaining at an even keel, I think what we're seeing there is an emphasis on some of those core issue areas, right? This issue of how the United States is treating Chinese trade, particularly when it comes to export controls around advanced technology, not only of things like semiconductors and other core issues, but also for advanced industrial goods that are important for China's economy that China simply doesn't produce, like aircraft engines and aircraft parts, which the United States had leveraged as part of that interregnum between the London talks and their deal afterwards to find a way forward and address the critical minerals problem that China put forward.
Interesting. There are a lot of components to this, of course, when we talk about a trade negotiation that is this sensitive. The deadline is August 12th.
what would be a meaningful extension that would allow us to
Yeah.
bear more fruit, or do we just keep meeting to meet again?
So it will be
I was
interesting to
right.
see if we get an actual
Short
date.
was right.
The number that was thrown around before was 90 days yet again, and we've seen multiple 90-day extensions. But I think the bigger question here is to take a step back and try and think about where they're trying to go. Right. It's clear that the United States, particularly as we've seen the rhetoric evolve over the last month, is really looking to solidify some sort of deal in the coming months. And what that looks like is up for debate, but we're starting to land on this idea of something like the Phase 1 trade deal from the first Trump administration, which was built around primarily large purchase agreements by the Chinese and some small regulatory adjustments, particularly on intellectual property and technology transfer. Now, that deal, as many people will remember, ran into the Chinese to have failed to live up to that expectation. But we know that Secretary Bessent and Lutnick have talked about further purchase agreements. Now, what's different here, though, are a couple factors. One, this inclusion of the idea of the fentanyl crisis and how China plays into fentanyl, and the question of how the United States is going to respond to the limited actions the Chinese have taken so far, and what they're going to demand to lower the tariff further, or at least improve relations beyond that. And the second is this kind of more aggressive use by the Chinese of their own export controls to threaten key U.S. industries, particularly, as we've already stated, on critical minerals, and how that will limit what the United States is able to do or drag out of the Chinese in any sort of deal. And just the last thing I'll throw out there is that from a timeline perspective, we are increasingly looking at this kind of November-ish timeline when President Xi is expected to travel to South Korea for the APEC Leaders Summit, and President Trump may also travel to South Korea, and that could present an opportunity for a meeting.
Interesting. So there's your timeline here. There's a thought or concern that's been expressed in recent days following the tweaking or loosening of export controls when it comes to NVIDIA, the H20 chip. By the way, NVIDIA ordered 300,000 of them today from Taiwan Semiconductor, so they're preparing for some business with the Chinese. The idea that Taiwan's president can't make a pit stop to gas up here in the U.S. on his way to Central America. Does Donald Trump want a deal too badly?
So I think it's clear that the tone on China has softened, that the president and his cabinet are focused on a deal and are looking to avoid things in the meantime that could derail that. And so
This might be the front run to the long.
Movement on Taiwan, this news that they have potentially asked President
This
Lai
might be the
not
front
to
run
transit
to the
through
long.
United States in the coming weeks, is a big sign of that, right? A particular issue that the Chinese have even claimed that they've reached out to the United States and asked them to address this. Now, it's not unusual for the United States to pressure the Taiwanese
But we gotta
to
wait.
not take
Gotta
actions
wait.
that we see that the United States sees as escalatory. But the timing of this certainly raises questions about how the United States prioritizes Taiwan in its relations more broadly with China, and whether it's willing to actually stand by Taiwan at the detriment of that trade relationship.
If you're just joining us on Bloomberg Radio, we are standing by to hear from the Treasury Secretary and the U.S. Trade Representative following their meeting with Chinese negotiators in a conference room. Reporters have been assembled in Stockholm where these talks are taking place. If they come out soon, we'll, of course, bring this conversation to you. And I'd like to spend a minute talking to you about style, because China is not the EU, and Ursula von der Leyen is not President Xi. And what we saw over the weekend and some of the dissent that we've heard from members of the EU echoes some of the lack of detail that has followed any number of trade framework agreements that has emerged. How does this inform the Chinese side of this negotiation, knowing that at any moment Donald Trump could go on TV and say, hey, we have a deal?
So I think we have actually already seen how that's playing out, right? We had talked earlier about the oddity to some extent of the previous talks that we've seen so far in Geneva and London, with very little details coming out afterwards. And I think that reflects the sensitivity of the discussion and the desire of the Chinese to keep those sensitive conversations internal to
It's getting
the
interesting
administration
now.
in China. And I would point out that we really have
going on with
not
this
seen major leaks
conference?
of that information, despite other areas in which we certainly get the president's perspective. But the president, beyond saying broad kind of platitudes about positive relations, has not gone into detail. And I think that speaks to how sensitive and how important they see
So
this
this has its
relationship.
own compartment at the White House.
No question. And I think on a daily basis, we see an evolving group of people who are at that top level in the White House, but clearly Secretary Bessent, Secretary Lutnick, and USTR Greer are in that room.
That's fascinating. When you add the idea of transshipping, whether it's Vietnam or other countries we're talking about, the U.S. is going to be going out of its way to enforce transshipping. The idea that China is sort of laundering its exports through other nations, a little bit difficult to police. Maybe you can explain that to us in more detail. But how does that play in Beijing when you're trying to sit down to cut a trade deal and this is happening in the other room?
So I think that's in the background of all of this.
They know this as well as we do.
That's right. And they've said from the start that any deal that a country makes with the United States that undermines China's interests will result in China taking action. Now, they've left that relatively amorphous as to what
I
they're
should
going
have took
to
the
do.
short.
But I think
I was being
there's
chicken.
no doubt among the minds of their neighbors that China's willing to take more aggressive action against them and has taken coercive action in the past to get what they need. Now, to the logistics of it, I think you hammer on.
I wouldn't be trying to catch the falling knife on the long here right now. It's got to like confirm and
local governments to better
this is still a
define
short,
what gets to get the label of made in
but you can't enter a short and a long fair value gap. So it's kind of, you know what I mean?
Doing audits and looking into this, and certainly that can have some role. But the big outstanding questions are, how much of a given product has to actually have been made or had a value add in that country to equal, from the U.S. definition, a Vietnamese product versus a product that was made by a Chinese company in Vietnam involving a mix of parts. And so I think that's outstanding. And it is unclear if those...
Yeah, I'm waiting for the stochastics. I missed the short. I called it 3 different times and just never got
to
in.
hammer those out directly with their neighbors.
How much compartmentalizing is done on Beijing's side here when we also consider our relationship with Russia right now, its support for Russia in its war?
I'm just worried about like a liquidation candle. You know what I'm saying? Like a quick wick down.
Separate meetings? These are separate
Like it could
groups,
wick all
these
the
are
way down to
walled off from
this
one another, or it's all being talked
deviation.
So
This
China's
is the second
perspective,
deviation from
they
the
would like to
VWAP.
keep this as walled off as possible. They like to segment their
And
discussions.
then make the real move up, you know.
Focused here very squarely on the trade relationship, and have made clear over the years that they do not see a reason why the United States' competitive attitude and as they perceive it, aggressive actions on export controls make sense given the broader economic relationship. That said, we have heard from the U.S. side this desire to start pushing in elements of that broader geopolitical environment, and that's specifically related to the export of energy from Russia and Iran, which China has benefited greatly from those cheap energy exports, and there's been some comment from the U.S. side that they would raise these issues in these talks today and yesterday. I would be very surprised, though, if we hear anything concrete on that issue.
Interesting. A win today, then, if I'm hearing you right, Adam, would be a 90-day extension. Talks continue in the meantime. Maybe there's a big meeting at the end of that 90 days with a framework for a summit between Trump and Xi. Is that where we are?
I think that is likely what we're going to see. The other part that we talked briefly about before, though, and I think the market will be listening for, are any signs of changes in that export control environment in both directions, particularly when we look at critical minerals and those rare earth magnets that are so essential for production of advanced technology in the United States.
What else can we give? I mean, we've talked about the H20. AMD, I guess, has its own version of a chip that's China-friendly. But, I mean, if Jensen Huang had his way, would we be selling Blackwells in Beijing? That's not going to happen, is it?
So I think Jensen Huang has made his perspective very clear. He sees an environment where trade writ large should be open, and that tech ecosystem, exporting the tech ecosystem is the most valuable portion of the U.S. advantage. Now, there are obviously strong national security concerns there. And so, I mean, the H20 transition or flip from the Trump team caught many people by surprise. They saw it as a natural evolution of the restrictions that the Biden administration put in place and an effort to restrict China's growth in AI in a manner that still gave them access to some chips, but not those higher end chips. The fact that that was on the table does raise questions about what else could come. And one of the other places this could, we could see movement is potentially in semiconductor production equipment. Much of that is restricted right now, and it's possible that there could be some movement to allow some of that to be shipped under the same argument that Secretary Bessent and Lutnick have made about this idea of the more we export to China, the slower they can indigenize their own industry to box us out.
Yeah, wow. Adam, the president is getting to the tarmac here in Scotland. Marine One is waiting for him now as he wraps up his journey to Scotland. The last couple of days, of course, we had been talking about trade with the EU at this time yesterday after the deal was struck, the framework, at least, agreement was struck with Ursula von der Leyen. As we wait for the president to board the chopper here, Adam, what do we need to do, or what do we need to discuss when it comes to the EU? The French prime minister yesterday referred to this deal as submission. There is apparently a lot of angst among the membership here, and all 27 of these members have to sign off. How's this going to work in the weeks ahead?
So to start with, I think we're confident that the deal will be signed off on from the EU. There are enough, there's enough forces in the EU that really don't want to see escalation here, that see the near and medium-term economic damage of escalation as far more damaging and worse for their economic prospects. But that said, I think it is important to not get lost in the positive spin of this, in the sense of, yes, the rate lowered to 15% across the board, particularly on autos and potentially pharma and semiconductors when those 232 tariff investigations are finished. And all of that is positive when you look at it in comparison to a worse future, right? Of 50% tariffs with 25% on those sectorals. But simultaneously, this is a massive increase in tariffs, right? This is a solidification, as you and I have talked about before, of this tariff wall around the United States. And so there's no doubt that this will have an impact on European exporters and American consumers who are now going to have to face and figure out how to pay that higher price. And Bloomberg Economics estimates that just alone, based on these new tariff rates, we're going to see a 0.4% contraction in GDP over the midterm.
Boy, there's a lot there. As Donald Trump makes his way onto Air Force One, we just watched him get into the jet. Don Jr. and his children, the president's grandchildren, along for the ride. Don Jr. making his way up to the aircraft as well, as this trip to Scotland is wrapped up here. Lastly, Adam, will there be continued negotiating sessions with the Europeans? Things like wine were left on the side, and there are some members who still want to tweak some of the headline numbers here. How much of this can still move?
A lot of it can.
Okay.
And I think
so this is a very fluid deal.
That's exactly right. And it fits squarely in line with every other deal we've seen, maybe somewhat separate from the UK deal, which did eventually kind of reach a signed document. But the reality is these are frameworks, broad frameworks. And we did see the EU release a document today going into a little more detail, which gave more clarity on kind of at least what they believe the deal represents. But we had Secretary Lutnick on television earlier today highlighting that he sees more negotiations to be had, that many thorny issues still have to be worked out. And so that presents opportunity for the EU to potentially get a slightly better deal, but also extreme risk, right? And as we get closer to August 1st and or whenever the Trump team wants to escalate again, the additional negotiations present real risk for everyone.
Well, this is quite a conversation to have, and there's still so much that we have to learn, and hopefully we will learn that together before this hour is out, when the secretary and the trade rep emerge. Adam, the deadline on Friday, the August 1st deadline for reciprocal tariffs on other nations, supposedly is fixed. Howard Lutnick says that stays where it is. What country gets hit the hardest who hasn't cut a deal with the U.S. yet? Is it the Penguins or something else that I haven't been thinking of here?
So I'm not too worried about Antarctica right now, but we'll have to wait and see. I think right now what we're really watching out for are other key U.S. trading partners, particularly South Korea. South Korea has been actively involved in negotiations from the start. It could still happen this week, right? It could happen this week. We know that their trade negotiator not only came to D.C. last week, but then traveled to Europe to continue conversations with his counterparts, and that they're working on creative solutions to try and reach a lower tariff rate. And I think in their mind, landing somewhere around Japan at that 15% and EU at that 15% rate. But there are extreme risks if they can't address the auto tariff, if they can't get that lower. Simultaneously, we also have the other two exporters in Southeast Asia, Thailand and Malaysia, which have been actively pushing forward on their proposals to the administration, and we increasingly think we'll land somewhere again in that 20%, 19% zone as their neighbors did. And then we also shouldn't forget about Taiwan. Right. Obviously, Taiwan, Taiwan's in the news because of this potential action to limit President Lai's movement into the United States for his travel. But at the same time, they're also in a tough tariff negotiation with the United States. The only difference there that I would say is because a huge portion of their output is semiconductors. I think even if they get hit with a semiconductor tariff, the thought is that most people will end up paying that tariff, and so Taiwan itself wouldn't necessarily suffer the ramifications of that. It is.
Adam, thank you so much. No one knows this stuff better than Adam Ferrer, and I can't thank you enough for the analysis. Bloomberg Economics owns senior geoeconomics analyst for the Asia Pacific, but we can clearly go around the world with Adam, and we have today. We'll let you know what we learn when the players emerge, and that could still happen this hour, so stay with us here on Bloomberg. We are watching the markets all the while here because this could be market moving when the headlines break. We know that they have agreed on an extension. After that, we're waiting for details.
Man, I had the short right, and I didn't take it.
Now let's update Wall Street from World Headquarters in New York. Charlie, how are we doing?
Thank you very much, Joe Matthew. How are we doing? We are lower across.
This is looking like it's going to drop right out of that fair value gap now.
Red as we await the latest trade developments, and we'll have those for you live on Bloomberg. Let's recap, reset here, because U.S. and Chinese negotiators have concluded their latest round of trade talks in Stockholm. The key takeaway, an agreement to extend their tariff truce. We did see stocks initially pop on that, but did remain in the red. S&P right now down 12 at 63.76, drop there of 0.2%. The Dow down 184, lower by 0.4%. Nasdaq Composite Index down 50, a drop there of 0.2%. The Bloomberg Mag 7 Index down 0.4%. Four of those Mag 7 stocks will wind up reporting this week, including Apple, Amazon, Microsoft, and Meta. Microsoft and Meta report tomorrow. 10-year, 4.34%, with a 2-year currently yielding 3.89%. Gold up 0.2%, 33.21 the ounce, and West Texas Intermediate crude up 1.6%, 67.81 for a barrel of WTI. Developing story with a headline right off the Bloomberg
Full on short.
Palo Alto Networks said to be near a deal for CyberArk. That, according to the Wall Street Journal. Palo Alto Networks down 3.6%. CyberArk surging now by 14.4%. Earnings news. After earnings, JetBlue Airways up 5.1%. The carrier posted a smaller than expected loss in the second quarter. And among some of the other airlines, they are lower. United Airlines down 1.4%. American down 1%. Delta lower now by 1.3%. Again, trade developments front and center. We'll keep you posted on Balance of Power, and Balance of Power continues right now. Back.
See, this is where you get FOMO and try and take the short now.
All right, Charlie, many thanks. Standing by.
It may work out, but
to hear from the Treasury Secretary and the USTR.
You could also revisit that.
The meeting is over. That would be the meeting with the Chinese.
Historic line of resistance above real quick, too.
In Stockholm. This took place, as you might remember, following their most recent sessions with the Chinese, but we'll have a more formal setting here. A conference room has been set aside. The reporters have been in that room for hours waiting for the stakeholders to emerge. When they do, we'll bring it to you live here on Bloomberg, knowing that they have agreed to at least one thing, and that's to keep on meeting. Part of the emphasis going into this session was to get an extension on the August 12th deadline. It appears they have done so. It's unclear what the extension is going to be. Adam Ferrer suggesting it's likely to be another 90 days, as we saw last time, but we'll find out together here. They've got a kind of a weird, this tiny table with 2 chairs at it, 2 microphones. Is there a tablecloth on that, James? They're going to bring out dinner? Yeah. Producer James putting in for the Michelin star here in the conference room as we wait. We have a couple things to talk about, by the way. You know, they're going to be voting in the Senate this week as we keep our eyes on the Senate, with just days left before everybody heads home for August recess. And the likelihood...
ES is starting to go along.
I'll let Nathan tell me whether it's likely.
Check the ES out.
That we see a vote on a minibus. They're actually trying to get some budget bills worked through the upper chambers, so when lawmakers return in September, they are not starting from scratch. We run out of money September 30, and if you ever listen
and
to this
the ES has got the forecast cloud
They're talking about a
Coming in
shutdown
with a gr-
already before lawmakers even got home.
interesting.
That was the case because Democrats are
All
feeling
right, it's
burned
interesting.
by the rescissions package that Republicans passed. So let's take a walk through the garden here with Nathan Dean, the senior U.S. policy analyst at Bloomberg Intelligence. One of the last remaining here in a sweltering Washington, D.C. This is the good time to be in D.C., though, right? You kind of get the run of things around here.
You can go to the museums and
Yeah.
none of the tourists are here.
Ghost town, exactly. And I know you let the clients know where to find the good food and the drinks along the way. Your phone's been ringing, I'm sure. I get to see this firsthand. I sit in the same row as Nathan, and he's on the phone all day long with clients, people who have a terminal and are trying to make decisions. And there's been so much uncertainty lately that now we add the prospect of a government shutdown to the list. What are you telling them?
Well, we always say to our clients that when it comes to a government shutdown, there really isn't much impact from a market perspective. If you go back and look at even the 30-day, shutdown that we had under the first Trump administration, the S&P declined like 5-6% within a couple days, but then subsequently grew even above that level by the time the end of the shutdown has ended. Now, this is going to be a little bit different. So the most important thing for clients to know is, one, if we do get a shutdown, and right now I think rhetoric is high, but we'll see in September right now if we actually have a shutdown or not. A lot of the data that traders use for information isn't going to be there. But again, this is different because we have Russ Vought and the OMB sitting there saying that we need to have a little bit less bipartisanship, and we're going to have this potential rescissions package or even a pocket rescissions package being proposed by the White House. And that's going to make Democrats a little bit on the angrier side. So, I think, again, headline risk is really the story for September. I don't think they're going to come up with a appropriations package. I think you're going to see.
So it's a CR either way.
I think it's going to be a CR no matter what. But, Congress always also loves to kick the can. So if we get up to, say, September 27th, and they say, you know what, let's just kick the can another couple weeks, we can certainly do it because nothing, stops Congress from saying something bad happens here.
Is it weeks in that world, or are they kicking into the new year so we're not jammed up around Christmas? Because, man, history repeats itself. This is kind of like a comedy routine after a while. We're going to be sitting here around Thanksgiving talking about a shutdown, and then everybody has to stay late to figure it out.
I would anticipate potentially a December shutdown,
There
just
you go,
because they love to do it right up into those holiday period. But again, I would just say is that the rhetoric is high, but the impact is low. Even if you look at large defense contractors. Now, let's take out this idea of impoundment and where these council contracts and so forth like that. But even for large defense contractors are usually funded on a 2-year period. And so even if you don't get government funding for a couple of weeks, that's not going to impact somebody like Boeing or Raytheon or so forth. The biggest concern here is that what happens if you get a shutdown? And this is one of the reasons why I think the Democrats would welcome a shutdown, but they probably don't want one, because if you get into a shutdown, and we had this discussion back when the Department of Government Efficiency was first starting here in Washington, if you have a government shutdown, then DOGE can certainly come in, and certain individuals can say, look, if we can operate with 85% of the government being deemed non-essential, then why do we even need them in the first place? I think this is one of those things where we get into September, both parties are going to look at the calculus. I don't think they're going to come up with an agreement. And both sides are going to say, can we shut the government down and make this politically advantageous to us? And I very rarely that
I like the long here. I got to be honest with you, but I don't have
Because we've
anything
had a number of Democrats tell us
cementing
on
it.
and off the air.
ES is going long hard.
But we cannot shut down.
So if you were to say I'm going to follow the ES and front run the long, this would be an okay entry to do
We
that.
could have a new record here.
You know
and
what
top
I'm
the one of the
saying?
First Trump administration, right?
Absolutely. I mean, that's
You
that's
get
the
in,
plan
like,
is,
right
okay,
here.
If the Democrats, let's just
Order
play the game.
submitted. Say I'm
here.
gonna
If we're
front run the
Democrats and we
long
want to say
based
that
off
this
the ES
shutdown would
and
be
the
welcome
stochastics.
news for us, well, then
Would be
the
in
question
here.
is, okay, how
I
do
would
we
do
get
that.
to
I'm
the
in long.
standpoint where we can actually gain something from it? Because the voter perspective is not going to like the idea that if you shut the government down for 2 months, and then ultimately you just come up with a deal that you could have had on September 30th, well then
Got some
people aren't going to
profit.
really like that. So again, it's just one of those things where the strategy has to be formed. And look, the Democrats were meeting last week about this. Senator Schumer, Bloomberg News did some great reporting about what Senator Schumer was doing then. So they've been meeting about this, but also they're going to be gone for August, and then they come back. They're going to have to figure it out. We'll see.
September is going to be a blast. I can't wait. Hey, Nathan, we're getting headlines from Scott Bessent and from Jameson Greer, for that matter. They're going to come out, it looks like, in a minute. We're not sure. We thought they might come out a half an hour ago. And I'm guessing that you're getting calls on this as well, particularly when it comes to trade with China, because this is a mover here. Here's what we're hearing from Scott Bessent. We will see President Trump on the China tariff pause tomorrow. They're talking about a tariff pause with China without suggesting exactly what the timeline will be. Coming out of this session, Scott Bessent says there are some technical details that remain to be determined here on a China tariff pause, but an extension decision will be up to the president in the end. We just saw him get on Air Force One. He might be on the phone with the Treasury Secretary right now. Scott Bessent saying we understand China's agenda much better. Interesting. And we'll have a final call, as I mentioned, when he speaks to the president. But Scott Bessent says he hopes China's 5-year plan would include rebalancing. Jamieson Greer saying they also discussed sectoral tariffs with China. So this was quite a session here. How does the stock investor
Hey, Olivia.
work around this? Because
Can,
it's
so it's like 800 to do all four?
the Chinese markets as
Well, how do you want to do it?
multinationals, whether it's Nike or somebody else doing business in China. Is this
Okay.
going to be investable once again?
I don't even have enough room on my credit card. Clarity and certainty.
Yeah.
And if you get
Well-
details on this meeting, if Treasury Secretary Scott Bessent comes out there in a few minutes.
Okay.
and says, "Here are the
Well, I
details,
can
here's
pay
what the
for the
plans for the next
others
90 days are,"
over the
market
phone
potentially
if
is
they
gonna
can
say,
take
"Look,
a
we can
card
work
over
with
the
that."
phone.
Even if it's 10%, 15%, 20%, we at least.
If you want to do it all today, when are they going to actually do the work?
Sectoral tariffs, like pharmaceutical tariffs. I'm going to go back after work. He said he should be able to months now. And Commerce Secretary Howard Lutnick, even
All right, we'll figure it out and let me know, and then you can just pay me back some.
Tariffs. Right. So again, that's where the uncertainty goes. And so
I
from
don't
the
know.
Western
What do you
perspective, and
think?
the way that our analysts at BI look at it is that
I mean, I
look,
can give you
we
more
just
back
want to
if
know
you
what
wait
the
like
rate
2
is
paydays.
for 90 days or for 120 days, so we can calculate what
Well,
we think the outcome is
you know,
gonna be.
whatever is
And if
good.
the rate is changing on a daily basis, that's no good. So again, I would say that if this conference comes out and there's clarity for 90 days, market's going to say, great, we can work with that. But again, these sectoral tariffs, that's still out there, and that's still a big question.
This is going to be tough for people to really understand, I think, as soon as this emerges. It'll take some time to settle. 90 days currently, one option for a trade truce extension. That's not a big shocker here. That's Scott Bessent talking. Jamieson Greer saying we've seen improvements on magnets for U.S. companies. I don't know where they are right now, James. Do you? They're supposed to be briefing reporters. They're gaggling off camera. So are they not coming out? Do we know? Interesting. So you get a pad and pen before you get the broadcast briefing. We're just learning this in real time here, Nathan. Are these market moving headlines, or is this let me know when you get some news?
I think it's market moving. I think obviously people weren't entirely sure. I mean, a lot of the focus from the market perspective was on the EU. I mean, if you look at the news cycle going into President Trump's trip to Scotland, I mean, there were a lot more people in the markets looking at the US-EU relationship, because I think a lot of people did anticipate that there was going to be an extension for China, certainly after the United States had made their announcement late last week. But I would also say is, look, we may be returning to the Americas fairly soon. The Mexican president just came out just a few minutes ago and said, look, she thinks there potentially could be an announcement this week. We still have ongoing relations or ongoing negotiations with Brazil, with President Lula. And so I would say Brazil, agricultural perspective, very important to watch. USMCA, Canada, Mexico. So I think after this press conference, look for the news cycle to come back to the Americas. And I think that's where the traders are going to want, again, that certainty once they got it from the U.S.-China relationship.
Well, every time we get an extension, whether it's reciprocals, and we've got Friday for reciprocals, apparently that will not be extended. Everything else has been extended, including, I guess, reciprocals repeatedly and could be again. This is what the market hates, right? Just tell me what the number is.
That's it. I mean, essentially, they want to know what the number is. And so when the U.S.-EU relationship, or at least the negotiation came out that 15%, huge sigh of relief, I think. I mean, obviously, you know, talking with our clients, because they knew this is something that they could work
All right, I
with.
kind of got
Obviously,
distracted and
you know,
I
I
let
think
this
if you
one
look
run
at the
longer than
certain
I
trade deals
wanted.
that have happened with Japan
But I'm
you know,
based
Indonesia and
off the
Philippines,
ES
you know,
here.
I
The
think
ES
if you
is
were to give the
hanging
market
on.
participants truth from, they'd say, look, we would prefer if these tariffs weren't there in its at all, but at least we know what we can work with. And so I would just say is that I think the U.S.-China relationship negotiation, you know, just in your conversation with Adam, we're far from over, far from the conclusion here. But if we can get a 90-day breather, then at least it sees the markets into the third and fourth quarter.
Spending time with Nathan Dean from Bloomberg Intelligence.
Only down
as we wait for the
200. It's one
Secretary of the
contract.
Treasury and the USTR to emerge from their now off-camera gaggle to what we expect will be a broadcast news briefing at some point here. I guess somebody needs to bring some food and water into these reporters, because this has been going on for hours. We are watching Wall Street, Nathan, as we talk about this potential for a deal with China or an extension to keep talking about, when the S&P 500 is barely moving. It's down 15 points right now, but 0.2%. The NASDAQ is off 56 points. And we might get an update here in a moment from Charlie Pellet. But, you do wonder how, I guess, bored traders are getting with the platitudes, because you've got an extension here with China in the mix. It's not really giving the market a lift. Maybe that was mixed in. We've got a deadline on Friday that everybody's kind of stopped talking about. The S&P 500 was at a new high yesterday.
I think the China extension, I think was already priced in.
Yeah.
And so I think this was just confirmation over what most of the market already anticipated was going to happen. As for Friday, yeah, I don't think any people are thinking about Friday because they think that there's going to be either extensions or deals or anything like that. And so I would just say is that, again, when you think about how do you predict for President Trump's negotiations with tariffs, I would just say is that you have to plan for the worst, but always assume that, there is going to be an extension, because for all the rhetoric that comes out and for every single time, Commerce Secretary Howard Lutnick comes out and says it's going to take place, history suggests otherwise. So are we getting into a situation where the boy cries wolf? Potentially. I mean, but you got to be prepared for it. But again, I think anytime you get some form of clarity, some form of certainty, from the market perspective, you got to take that as a win and say, go forth and say, let's start analyzing our numbers.
The View from Nathan Dean. I didn't ask you when we were talking about the shutdown if you're running odds yet. Are you there?
We're at
later.
40%.
40%. I guess we buried the lead.
So
okay, less than likely.
We'll see in September, but I was higher earlier during the rescissions package fight. I think it's around 40% right now.
Many thanks as ever. Bloomberg Intelligence's senior U.S. policy analyst and a dear friend of the program, Nathan Dean, for you there, taking calls from clients like you, at least when you listen to this program. I'm Joe Matthew in Washington, left wanting by what's happening in Stockholm. At some point, we understand Besson and Greer will hold a news conference, but they're busy talking in a pad and pen gaggle right now. And as we wait for more headlines on this, having agreed to a red headline on the terminal, agreed to an extension, it is presumably 90 days, but we don't know a lot more than that. There's talk about a tariff truce that the president will need to sign off on. That's the way Scott Bessent is framing this. And we want to just keep up with things on Wall Street. Charlie Pellet is at World Headquarters in New York and has an update on the Tuesday trade. What's the market making of all this, Charlie?
Right now, lower across the board. Thought we might see some pop there while you guys were talking. Didn't happen. We got the S&P down 17 right now, very close to session lows. 63.72 where we stand on the S&P 500 index. Lots of moving parts to this market, including earnings, including a Fed decision tomorrow, jobs report on Friday, and a lot of economic data. The S&P, as I mentioned, down 18 now, down 0.3%. The Dow down 202 on the Dow, a decline right now of 0.5%, while NASDAQ down 77, a drop there of 0.4%. The Mag 7 index down 0.6%. 4 out of 7 of the Mag 7 stocks report this week, including Apple and Amazon on Thursday, Microsoft and Meta tomorrow. 10-year ahead of the Fed decision, 2 p.m. Wall Street time tomorrow, 4.34%. The 2-year, 3.88%. Gold up 0.3%, 33.23 the ounce, and West Texas Intermediate crude now up 1.5%, 67.70 for a barrel of West Texas Intermediate crude. Well, Wall Street certainly looking ahead to the Fed decision tomorrow. Veronica Clark is director of Citi Research at Citigroup Global Markets. She was the guest this morning on surveillance.
Obviously for the meeting tomorrow, the decision will probably be, for the most part, just more wait and see. We probably will see some dissents among certain officials who want to be cutting as soon as the meeting tomorrow. I think Powell will still guide to the median official as of June still expects a couple rate cuts this year. There are only 3 more meetings left after this one, so it's not unreasonable to think that those cuts would happen in the fall.
Veronica Clark of Citi Research interviewed this morning on surveillance. Keeping an eye on shares of United Parcel Service. They are plunging after earnings. UPS down now by 9.8%. Rival FedEx lower as well, down 2.8%. UPS declined to provide earnings guidance as it struggles to get a handle on volatility in the market. Again, recapping here, S&P down 16, 63.72, drop there of 0.3% as we await a news briefing out of Stockholm. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
And waiting, we are, Charlie. Thank you so much. Great to get the update here on Wall Street, because markets could move when we get further headlines on the negotiating session between the U.S. and China. It has ended, and now we're getting headlines on the
Order
terminal
filled.
from an off-camera gaggle that the players are holding with reporters who traveled to Stockholm for this session. Incidentally, the President of the United States is on his way home now, having wrapped his visit to Scotland. Scott Bessent talking about an extension. It does appear, as many expected, and as the markets apparently had priced in, that there's going to be an extension here, a tariff truce, if you will, for another 90 days. The president has yet to sign off on that. Scott Bessent saying that Donald Trump will have the final call on what they are bringing home here from this meeting, and there will be another China meeting, according to Scott Bessent, probably in another 90 days. So I guess we're doing things here in 90-day increments. We'll hear again more from them, and we'll bring you their remarks when they emerge.
Go back to you.
There is a conference room full of reporters right now in Stockholm. If you're just joining us, they're expecting to hear from these two practitioners, members of the administration, in a moment. A very small table has been set up with a couple of microphones, a white tablecloth backed by 4 American flags. They will be seated when they speak to the room. There you have the live view of the staging that has been set up for Bessent and Greer. And I suspect that they'll have a pretty good back and forth with reporters, because they've been in there for a long time waiting to find out what happened behind closed doors. If in the end the only headline is that they've agreed to meet again, it'll be interesting to see how Wall Street feels about that. As Charlie just told us, we're tipping a little bit lower here, not too much, but the S&P 500 is down fractionally as we wait for news. So far, no surprises. Everybody apparently saw
I told her
coming here. I'm Joe Matthew in Washington, and thank you for
she
joining
hasn't
us.
paid her got a ticket for not doing her registration or insurance or inspection.
Have our panel with us. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are along and keeping tabs on this for us as well. Both, of course, Bloomberg Politics contributors, but Jeannie is also Senior Democracy Fellow with the Center for the Study of the Presidency and Congress. Rick is our Republican strategist and partner at Stone Court Capital. Rick, do we call this a win if the truce is simply extended one more time?
Yeah, I think that, certainly the administration is going to call it a win. And their definition of a win is we continue to get magnets and rare earths, and there's a flow of trade.
I think we're going to rally here.
Our sectoral tariffs are still in place. And we reserve the right to continue to prosecute a trade war against China. So what's not to declare victory with? I think they see that as a good policy toward China on trade.
And keep it tight, though.
How about you, Jeannie? Do you need a deal to call this a win, or did we know this was going to take a long time, and maybe Donald Trump is starting to catch up with that fact? Scott Bessent says he'll need to sign off on this, but it looks like they just bought themselves another 90 days.
Yeah, absolutely. And to your point, I think this is what everyone expected, and that is certainly good news. Although the bar for news is rather low when you think about the extension is good news. And I was really struck by one of the headlines that just emerged on the Bloomberg, which was that Scott Bessent talking about the Chinese purchasing of oil from Russia, because of course, just yesterday, Donald Trump sat with a pool of reporters and talked about imposing secondary sanctions on Russia. And the Chinese state TV was very clear that they would not allow that to enter into these discussions. And so apparently it entered the discussions. We'll probably hear more from Scott Bessent. And China does not seem pleased, and neither does Bessent. So where does that leave Donald Trump's policy on sanctions and secondary sanctions? And where does that leave the U.S. as it pertains to the Ukraine-Russia war? So there's a lot at stake here, and that was one of the many things that struck me from the little bit we've been hearing so far from the gap.
I'm glad you heard that. 12:36 p.m., the headline crossed the terminal, Rick. Scott Bessent, not pleased with China buying Russian oil. I don't know how much compartmentalizing there is in a session like this. We were talking about that earlier with Adam Ferrer, but does the prospect of secondary sanctions against Russia impact the outcome of talks here with China?
Well, certainly not these talks with China, but as indicated, this is an ongoing process, and it'll become a stumbling block at some point, because there's, imagine zero chance that China is going to do anything other than potentially increase its imports from Russia because of other countries like Iran having more difficulty getting them the crude they need. So they have a voracious appetite for hydrocarbons, and they got to make it up somehow. So the idea that somehow this is going to go over well with them, right now it maybe is a little as a line in a negotiating session saying we're going to come back to you about Russian sanctions. But the thing that's not necessarily in control of the White House is a voracious Senate with 80 plus members ready to put together and pass a sanctions bill against Russia that has 500% tariffs on Russian oil in the secondary market. And so at some point in time, this could either be a seminal event for U.S.-China trade, because this is a huge bump in the road, or Donald Trump decides not to sign it. And that's a seminal event for his relationship with the Ukraine.
No agreement on export controls, according to Jameson Greer, among the headlines that we're seeing here. Jeannie, NVIDIA shares are barely moving today as we wait for more information on this. But is that the real point of leverage that the U.S. has?
It's certainly one of the biggest. I think that from my perspective as a political scientist, the biggest issue here is U.S. security. And of course, one of the things that we know the Chinese have been talking about is unfreezing all of the frozen U.S. ability to purchase these technologies. And of course, that should be a non-starter for the U.S. because it really does raise serious questions about our ability to maintain our national security going forward. And so if the Chinese draw a red line there, that is going to be particularly difficult for the United States. And so for me, that's one of the biggest things, but I'm not certain we're going to hear much on that until we hear from President Trump and Xi Jinping directly, because of course that impacts everything about our particular relationship, from trade and the economy to security, as these two superpowers battle it out in all realms.
Secretary Scott Bessent now saying there was no discussion today of a Trump-Xi meeting, which I find fascinating because this was supposed to be an obvious step along the way, and that doesn't mean they won't talk about it coming up here. Rick, what do you make of the dissemination of information here so far? This is a very strange choreography. First, we got a boatload of headlines from the Chinese. They had the first word on this. That's where the headline came on the extension. Then we're getting now an off-camera, for some reason, gaggle with the secretary and the trade rep, even though they have a room full of reporters waiting for them for what was supposed to be the briefing and would be on camera. Are these decisions being made in real time, or is there some strategy here I'm not picking up on?
Well, there's always a lot of confusion at these kind of mini summits. They're sometimes not well choreographed. And the A-team is obviously in Europe with Donald Trump, really making sure that his trip goes well. And so far, you can point to a lot of success there, both with the outcome and the optics. And so the real question is this something that they did strategically, or they're kind of just fumbling through Stockholm? I mean, keeping all those reporters waiting. Now we know where the Stockholm syndrome came from, right? They're gonna be just happy that they get any news at this stage, and sometimes it's just sloppy. Sometimes reporters get in the hallway, and they're gonna answer the questions. So it's not a good look. It doesn't look disciplined. I'm sure there's some advanced people and press advanced folks who are going to catch heck for this. But at the end of the day, tomorrow this will be old news, and nobody will really care that much about it.
It's interesting, though, at the same time, Jeannie, this could be a market-moving conversation. To delay it and leave investors wanting for every headline here seems to be a peculiar way to be going about this, no?
It's absolutely peculiar. It is entirely undisciplined, and you juxtapose that to how disciplined the Chinese look coming out of this, and it is not a good picture. And you just mentioned that headline about the fact that there was apparently no discussion of the meeting between Trump and Xi. That's particularly troubling, and probably will be to the markets, because we know that if there's one thing that needs to happen for there to be a deal, it needs to be a meeting. Now, certainly they can set that meeting later, but the fact it wasn't even discussed, if that's the case, is particularly troubling. And I don't think this has been a particularly good end to Donald Trump's trip to Europe. What do we have? We have an EU deal, which is not signed off on which we have very little details, and which major parties are pushing back, like France and Germany. And we have the Chinese saying we'll agree to 90 days, and yet many huge issues left either undiscussed or not publicly available in terms of the information coming out of it. I don't think this is how the Trump administration wants to end his time in Europe, because in reality, you're leaving with just as much confusion as you came into it, if not more. So he'll try on Air Force One, I guess, when he gaggles to say there was a deal with Europe, the European Union, but that's very much not the case. And so I think the optics all around are a bit dismal for this White House today.
I do wonder what the president will have to say if he goes to the back of the airplane, and I suspect he will on his way home here, Rick. But the fact of the matter is Wall Street is not jazzed right now, although we haven't been carving out new lows or anything. And I'll remind everybody, we were at new highs, record highs for the S&P 500 yesterday. The S&P is down 13 points right now, 0.2%. The NASDAQ is down almost 50, again, 0.2%. Does Jeannie have a point about the rollout on the EU deal, Rick, now followed by this? Is there an effort to bring transparency here, to talk about things in piecemeal, or will the White House have regret showing us each stage of this sausage making, complete with pushback from members, in this case, member states in the EU?
Yeah, imagine that. People are upset with transparency. We'd rather be in the dark and just get the final deal done 6 months from now. No, look, I mean, I think the reaction in Europe, as Jeannie points out, is a proof point that Donald Trump got a better deal than he thought he was probably going to get when he came into negotiations with the EU. And when you look at the basic structure of the deal, it does look like a pretty good deal for the United States. And every commentary I've seen says that the fact that we have a 15% across the board tariff on 70% of the goods coming out of Europe, we still have tariffs on steel and aluminum and a few open items. That's a pretty good progress in a very short period of time with our largest trading partner now. I don't think Canada used to be, but those days are probably gone. And so, yeah, I don't see what the fuss is about. I mean, like, we're watching government in action. This is an administration that has daily press briefings in the Oval Office. We get to see it as it's happening. I think it's more fascinating than troublesome that we get a peek under the tent from time to time, especially after an administration where, we didn't hear from Joe Biden for months at a time. And, everybody complained about that. Now we have the exact opposite. And people are like, oh, I'd rather be in the dark.
Does Rick have a point here? Jeannie, you can't say that the president isn't making himself available.
I don't think people are complaining about a lack of transparency. I think what the questions are, and I wouldn't say they're complaints, the questions are, give us the details on a deal. And if it is not a deal yet, which for most people is defined as all parties have signed off on it, then be transparent and say that. This is the framework of what was discussed. We're talking to the EU. It's a confederation of more than 25 members. 6 of the 25 or whatever it is are uncomfortable and haven't signed up. So I think it's actually the opposite. It's a lack of transparency. It's this continuous PR effort to say, we've gotten a deal. And yet when you look at the fine print, there is no deal yet. Now, is one coming? Hopefully. And, just look at the case of Japan. They waxed poetical about a deal with Japan. And days later, Japan came back and said, We are not investing $650 billion in the United States. We are going to give a loan of that amount. Well, which is it? So, you can call it transparency to say things that are, trumpeted as a PR move, but that's not transparency. That's trying to sway opinion. So please be transparent, I would say, to the White House, and tell us what is going on would be far better than trying to sell us on something that doesn't exist.
Be interesting to see how much sales pitch comes with the rollout following this meeting. As Scott Bessent prepares to call the president, Rick, on Air Force One, they're going to have to lay this out for the president so he can make, I guess, the final call. Maybe that's partly what we're waiting for here on the delay. And they will discuss remaining issues, which he described as, quote, small, quote, mainly had to do with the Chinese delegation, unquote. I'm not sure exactly what that means with now another round of trade talks here in the offing, say 90 days away is what it looks like. A third round here in less than 3 months. Rick, what do you make of that? You're no stranger to making deals in the corporate environment. When you hear about remaining issues, they're small, mainly had to do with the other side. What does that tell you?
Yeah, look, there may be a string of requests that they're asking for that really weren't negotiating items, but specific asks, and that may be specific to a certain trade deal or nothing to do with the trade transaction itself, but things that she would like to see done on his behalf. And that could be a myriad of things. They're a part of every global organization in the world, and as are we. And so we hope that we're having those kinds of conversations. Look, we used to have conversations on this show about the fact that there's no contact at the senior level between China and the United States, either on the military side or on the civilian side. And we would wring our hands about how that is an unhealthy thing to have in a relationship between two superpowers, the sole two superpowers. And now we have a regular schedule of meetings at the highest levels, discussions of a Xi-Trump summit, and transparency between the two relationships that we haven't seen in a long time.
Well, let's hope we can get it from the source here. We've been waiting the better part of an hour, and Scott Bessent and Jamieson Greer will likely emerge in the second hour of Balance of Power. Rick and Jeannie will stay with us. Kaylee's on the way in on Bloomberg. Make sure to subscribe to the Balance of Power podcast. Go to Apple, Spotify, wherever you get your podcasts. Subscribe to the show. You can listen anytime at our website. It's Bloomberg.com.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The U.S. and China agree to meet again. Welcome to the Tuesday edition as the Treasury Secretary and U.S. Trade Rep wrap a meeting with their Chinese counterparts in Stockholm. With news today, a redhead on the terminal of a tariff extension, at least an agreement in principle. President Trump still needs to sign off on it. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, we're waiting for the players here, Bessent and Greer, to emerge in a news conference that could begin at any moment.
Yeah, you wonder what the purpose of the news conference is when they've already shared a lot with reporters in the hallways. As they say, it is President Trump that ultimately is going to have to make a decision as to just how long this trade truce between the world's two largest economies will be extended, knowing that the current truce is set to expire on August 12th. And according to the Treasury Secretary, they're going to continue discussing the terms here. It does not seem yet that anything is necessarily final after 2 days of talks in Stockholm.
Clearly a very fluid situation here, and surprised to see the headline that they did not discuss a Trump-Xi meeting in their session today, which went on for several hours. To that end, there are reporters in a conference room in Stockholm that have been waiting for many more hours to hear this briefing, and I'm sure are packed with questions. We're going to bring you this conversation live, assuming that it begins while we're still on the air here on Bloomberg TV and radio.
And of course, we expect a lot of that to center around questions around magnet exports from China. Of course, that is one of the primary things the U.S. wants, is those rare earths to get to the U.S. Manufacturers of various goods, from fighter jets to semiconductors and electric cars. They want access to that. That has been a sticking point, we understand, over the course of what has now been 3 rounds of negotiations with, as you say, Joe, more talks set to continue, but at least talking is better than not talking. talking, perhaps?
Well, that's true. Look, it's being seen as a win to at least continue this conversation. Wall Street seems pretty underwhelmed by all of this. Kaylee, I guess this idea of an extension was baked in. They'd like to see a little more detail.
Well, you mentioned Wall Street. You know who checks that for us? Charlie Pellet up in New York. So let's check in with him now. Hey, Charlie.
Well, hello there. We're all over the numbers. Let's get right to the story. Before we get to the numbers, Treasury Secretary Scott Bessent says the U.S. and China will continue discussing the terms of a tariff truce extension. President Trump will make the final call. We'll have the latest for you coming up right here on Balance of Power. But here's where we stand in terms of equity market response. S&P right now down 7, 63.82 where we stand. A drop right now of 0.1%. Dow Industrials down 140 points on the Dow. A decline right now of 0.3%. Nasdaq down 19, drop there of 0.1%. The Nasdaq 100 index in the green now, up by about 0.1%. Our Mag 7 index does remain lower by 0.3%. 4 out of the 7 of those Mag 7 names will be reporting in the next couple of days. Apple and Amazon on Thursday. Microsoft and Meta Platforms report tomorrow. 10-year at 4.32%. The 2-year 3.87%. Gold is up $9 the ounce. Spot gold up 0.3%, 33.24. West Texas Intermediate crude rallying 1.5%, 67.69. And Bitcoin now with a $117,000 handle, 117,639 on a Bitcoin. Union Pacific is acquiring Norfolk Southern in a cash and stock transaction valued at about $85 billion. Shares of both railroads, however, are trading lower. Union Pacific down right now by 3.5%. Norfolk Southern down by 3.2%. Again, recapping right now, S&P narrowing its loss to just under 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Taking a look at the market reaction, which maybe isn't much of a reaction at all to the news we're getting out of Stockholm from the Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer as they wrap 2 days of talks with their Chinese counterparts. China, of course, emerging from that meeting, saying an understanding was reached to extend the tariff truce between the two countries, while the U.S. side is still saying at this time, Joe, nothing is final until President Trump signs off on it. It's unclear what kind of extension we could be looking at, though adding another 90 days is an option.
So we figure Scott Bessent's on the phone with the boss on Air Force One right
Maybe.
now. They have to obviously bring the terms or some of the framework terms that they've agreed to here to the president. Scott Bessent saying earlier off camera, Kaylee, that there are still some remaining issues, but called them small and coming from the Chinese delegation. Strange they didn't talk about a meeting between the two principals. That was one thing we thought we might get some news on.
Yeah, apparently no such meeting between President Trump and China's Xi Jinping was necessarily discussed. That's after, of course, President Trump pushed back on reports of this idea that he himself is pushing for a summit. I guess we'll have to stay tuned on that one as we still stay tuned to see when this news conference with these two individuals in Stockholm is actually going to begin.
Took the Truth Social this morning to make clear he wasn't asking for an invitation. Laura Davison is with us. She's just jumped out of the newsroom to help us as we wait to hear from Bessent and Greer, of course, our Deputy Washington Bureau Chief here in the nation's capital. Great to see you, Laura. What are you going to be listening for, and when do we expect to hear from them?
One, has Trump signed off on this? You know, this little break we're having, this could be a time for Bessent to go to Trump and try to get some clarity here so they can come out with a more definitive announcement. But also, what are those issues that are still sticking? You know, Greer and Bessent, when they spoke just moments ago, mentioned that magnets are still continuing to be a problem. They also mentioned that they didn't speak about some other things, you know, including like export controls are going to keep on a separate track. TikTok apparently also did not come up. But what is clear is that this may continue to be one of these every 90 days, we get another 90-day extension sort of thing, not unlike the TikTok deal. Just as, you know, as Trump has mentioned, doing trade deals is hard, and especially with China, it's going to be particularly thorny.
Well, and are export controls really separate to this conversation? If we're saying our issue is magnets, that's about China controlling the exports of those and China wanting us to loosen up on our export restrictions around critical technology. How are these not intertwined?
This is really kind of the trap that Trump has essentially set for himself if he's made everything about trade and used tariffs as the leverage against any problem, whether it be you know, on AI and chips, whether it be about fentanyl. And so then trying to disentangle some of these issues becomes very, very difficult because some of the, you know, the problems that the Chinese have on certain issues are very much intertwined with something that Bessent and Greer say they don't want to talk about.
It's interesting to think that we're compartmentalizing on a level like this when there's clearly so much interplay between the issues that you just mentioned. The White House is going to try to frame this as a win. We've been talking a bit about the rollout here and the sort of lack of choreography. First, we get headlines from the Chinese side. They've got reporters waiting in Stockholm for hours now for a briefing. They end up doing, I guess, a hallway gaggle. Maybe you can tell us with print reporters, and they have yet to emerge to give their side of the story. What's going on with this?
It's unclear. So people should not read too much into the choreography at this moment. But what is clear is that they are not on the same page on messaging, and that you have each side sort of jockeying to get in front of reporters, get in front of cameras before the other side to try to frame the discussion. We've seen this, with other trade announcements where, the U.S. has come out and announced something is true, catching the other side by surprise.
Right.
This is not unlike, some situations we've seen in the past.
Do we have any reason to expect, Laura, that President Trump would not want to sign off on an extension of this truce? He doesn't want to see tariffs rebound to the extraordinarily high levels that the U.S. and China had placed on each other months ago, does he?
He has very little reason to push back against an extension. The question is, does he want to do that today, or does he want to wait? There's still about 2 weeks left until that August 12th deadline. If he comes and hears the terms from Bessent and Greer and decides that's not enough, he may tell them to go back and say, hey, push for a little bit more. We still have time before that August 12th deadline. And remember, everyone else is right now currently focused on August 1st, this week,
Friday.
all of the other tariff deadlines coming up.
It's a great point that we are reminded of this. If you're just joining us on Bloomberg TV and radio, we welcome you to Balance of Power. We've been waiting for some time now for a news conference with the Treasury Secretary and the U.S. Trade Representative following their third session now with their Chinese counterparts, talking trade in Stockholm. The president is on Air Force One, as we've mentioned, so maybe we're waiting for him to have a conversation with reporters beyond the secretaries. It could take some time. They're on no particular schedule here in Stockholm. But if we cast about another 90 days or so, that's not too far away from the summit in November that was suggested could be a venue for Trump and Xi to meet. Isn't it possible they're talking about this along the side and just didn't make any news on it today?
It's very well could be. We saw Trump kind of push back on this potential summit, saying that he would go if invited, but hasn't been invited. But maybe he has been invited. Trump wants to get in the room with some of these foreign leaders. We've seen this, really from day one, as in his second term. But I think it's clear that the point of they are at these talks right now, they're just trying to agree on an extension. They're not necessarily at the point of even coming to some sort of bigger, more comprehensive framework.
Yeah, nothing is done until it's done, and that doesn't just apply to reaching some kind of an agreement or extension with China, but as you were alluding to, the Friday deadline, our understanding is Europe is currently racing to get something down on paper to kind of formalize the terms that Ursula von der Leyen and Donald Trump agreed to on a handshake over this weekend. And the Commerce Secretary, Howard Lutnick, in an interview on another network, suggested there's still a lot that needs to be ironed out, even for the deals that they're ready to announce, that they did so eagerly. It's not really all clear that this is finalized.
It is not at all clear this is finalized. In fact, I think we can say it is not finalized, and that we have no paper. We saw this in the Vietnam deal. We saw this with the Japanese deal. That these things sort of, there's an announcement, and then maybe there's some disagreement on what the actual announcement was before they actually get these things on paper. That's the thing that could really start to spook markets as we get towards this August 1 deadline of just people. You have two very different interpretations, and when there's nothing written down, and particularly nothing in a legal language, interpretations can run wild, and every side can see what they want to see.
All right, Laura Davison, our Deputy Washington Bureau Chief, thank you so much for joining us as we still are watching Stockholm here to see when the Treasury Secretary Scott Bessent and USTR Jamieson Greer will emerge. They are expected to partake in a press conference with reporters who, as Joe's mentioned, have been waiting in that room for hours on end for them to arrive. We'll, of course, bring it to you live on Bloomberg TV and radio when it does begin. But in the meantime, we want to add the voice now of Anna Ashton. She's founder of Ashton Analytics, a China expert and a U.S.-China trade expert at that. She's a former China analyst with the Department of Defense. Welcome back to Balance of Power, Anna. It's good to have you. As we understand, the Treasury Secretary, Scott Bessent, has described small issues remaining with China, mainly having to do with the Chinese delegation. Do you have a sense of what the problem here may be?
I think, Kaylee, that the devil is in the details is sort of a theme that's emerging from this series of meetings. Each time we've had rather vague readouts. And I think what Laura pointed out just now about the fact that there's a window here to sort of iron out differences from now until August 12th. That's important because we saw differences get ironed out seemingly after the July meeting in London too. There was, confirmation of what the outcomes were a little while later. And I expect that maybe that's what we'll see here as well.
Well, let's talk about the devil today, because you could describe export controls as the devil. You could describe Russia as the devil, maybe rare earths. Aren't these all supposed to be part of a trade deal? And it looks like in many cases they didn't talk about any of them, including a meeting between Trump and Xi.
Right. I mean, supposedly they didn't talk about any of them. I find it very difficult to believe that export controls didn't come up because, quite recently, Commerce Secretary Lutnick was talking about how there was going to be a continuation of this framework that was established in Geneva and London that included a balanced rollback, quote unquote, with assurances from the Chinese side that licenses would be approved expeditiously for exports of rare earths and magnets in exchange for lifting of various export controls on the U.S. side. I don't see how they separate that from trade, having had several different cabinet members confirm more than once that these things are part of the negotiations.
Well, and because they're part of the negotiations and because China has such a chokehold on this market in particular, does that mean that when they're all at the table, it's actually China that has the upper hand here, Anna?
Absolutely. I think that it's pretty clear that China does have the upper hand for now. And what would remove that advantage from Beijing? Nothing I can think of in the short term. We can't catch up on supplying ourselves with sufficient heavy and light rare earths or magnets anytime in the near future. And it sort of doesn't matter what kinds of incentives or policies are thrown at that. It's just not a short-term problem. Therefore, China is going to continue to hold this dominant position for a while, and that is significant leverage. I have to assume that that is why Russia and Iran, compliance with Russia and Iran sanctions was suddenly part of the talking points on the U.S. side, because, it contradicts some of the things that the president said after the bombing of the nuclear sites in Iran. He was pretty clear that he was encouraging China to continue doing business with Iran. But maybe that was, seeking leverage ahead of this round of talks.
Well, it's interesting that there's no agreement on export controls today, as we've discussed, Anna. And would that suggest to you that it is really the one point of leverage that the U.S. does have at this table?
It's an important point of leverage, but only in the sense that, the Trump administration has given Beijing a reason to believe, Joe, that perhaps the export controls that were not negotiable under the Biden administration are negotiable now. They've already kind of ceded ground when it comes to the export controls that they implemented, that the Trump administration itself implemented this spring. Those they already agreed to lift in exchange for facilitation of rare earth and magnet exports when they met in London. At least that's how they've described it. So now we're talking about export controls that were applied during the Biden administration. Either there's flexibility or there's not. That's going to be a huge sticking point for China. And maybe on the U.S. side, the sticking point is that if they're going to be flexible on that stuff, they need China to be willing to approve licenses.
All right, crisis averted.
Exports
Tire
of
purchased.
things that could have
Pain
dual
in the ass
uses
finished.
to entities that
They even
could
sold
be
a
part
deal
of the
while
military
dealing in
industrial
that.
complex. I have a hard time believing that China will agree to that, though.
Looks like our players have emerged, Kaylee. The Treasury Secretary, Scott Bessent, and Jameson Greer, the U.S. Trade Representative, have just sat down in the briefing room with reporters and are speaking now live. Let's listen on Bloomberg TV and radio.
Statement, then take some questions. We had a very fulsome 2 days with the Chinese delegation led by Vice Premier Ho Yifeng. It was our third meeting. I'm happy to say that London built on Geneva, Stockholm built on London and Geneva. I think we had great momentum going into the meeting thanks to the president's trade deals. I think that the Chinese were surprised by the magnitude of the Japan deal, by the magnitude and the terms of the European deal. So I think that they were, they're never compliant, but I believe that they were in more of a mood for a wide-ranging discussion. The discussion centered on the two economies. We had a very in-depth report on them on the Chinese economy. We gave a very detailed report on the U.S. economy. We talked about the trade deals that we were doing with other countries. We expressed our concern about Chinese overcapacity globally and what that might mean for this year, for the next few years. We expressed our concern for their purchases of sanctioned Iranian oil, of which they buy about 90%. We also expressed our regret that we believe that they had sold Russia about $15 billion of dual-use technologies. But the overall tone of the meetings was very constructive, and I will pass it over to Ambassador Greer.
Thank you. We also reiterated the premise of the president's trade program and trade policy, which is to reduce U.S. deficits, increase manufacturing, and reshore our economy. We made sure that they understood that these are the goals of what the president's trying to do. And again, we expressed our satisfaction that many of our major trading partners have come along with this. President von der Leyen on Turnberry on Sunday, when I was there, she specifically mentioned that the U.S.-EU deal is about rebalancing and trying to rectify the giant EU surplus with us. And so we've been happy to be working so constructively with many of our partners. And we had that kind of a discussion with the Chinese as well. And of course, we were here, in the first purpose to confirm the implementation of what was agreed in London in terms of accelerating the flow of rare earth magnets from China to U.S. companies. And then we're able to discuss further how to make sure that the entire U.S. supply chain, including those that go through third countries, could be accelerated. Thank you.
Yeah, and I would say on a personal level, we've developed great respect. Ambassador Greer knows several of their team from the first administration. And again, I think it was the level of momentum and the entire reordering that President Trump has done of the global trading system. So now here you have the two largest economies in negotiation. And as I've said before, and we reiterated to them, we don't want to decouple. We just need to de-risk with certain strategic industries, whether it's the rare earths, semiconductors, medicines, and we talked about what we could do together to get into balance within the relationships. Ambassador Greer has made the fantastic point that for decades, the U.S. trading system sacrificed manufacturing to be able to sell, whether it was ag or natural resources. And now under President Trump, as you've seen with the Japan deal, with the Europe deal, we are able to do both. We are able to reshore manufacturing and also do substantial purchase agreements of U.S. ag and energy.
Great. All right, let's turn to the room, please. Let's start up front.
Good afternoon. Jamie Keaton, Associated Press. We had Li Changgang speaking to reporters shortly after the end of the talks today. He mentioned an extension of the pause. Can you give us some details on that, how long that's going to go on for, and how will it work? And if I could just throw in another one, what do you say to lawmakers in the United States and others who are concerned that concessions on export control on items like chips for AI will jeopardize U.S. national security interests?
Well, I'll take the national security question, and then Jameson could talk about the pause. Look, we are very diligent in terms of the national security. Things go through the interagency at the White House, whether it's Treasury, it's NSC, it's Commerce, it's DOD, so that there's nothing that's being exchanged for anything. I think you might be referring to the NVIDIA H20s, which are well down their technology chip stack.
Great.
And I would say, with respect, well, I should also say the only export controls we talked about today were Chinese export controls on rare earths. Just U.S. export controls were not something we discussed. With respect to a potential pause, we're going to head back to Washington, D.C., and we're going to talk to the president about whether that's something that he wants to do. It's certainly something that's been under discussion, and so we'll brief the president on the outcome of this, and we'll see if there are any. We have further technical discussions that are happening right now as we speak among the teams, and so the president can make a final call on whether that's something that he wants to do.
Not on our side.
Great. Next question, Jenny.
One for each of you. Secretary Bessent, you just said again Secretary Bessent, you just said again that the biggest problem in the relationship is China's overcapacity and that you want them to move towards a new consumption-based economy. What's your specific plan for addressing those economic imbalances besides purchases of U.S. goods? And then do you want me to go to Jameson now? Sorry, Ambassador. Okay. And then obviously the Section 232 investigations that the president is set to unveil in the coming weeks on pharmaceuticals and semiconductors would theoretically hit China after as well as everyone else in the world. After your talks today, will those tariffs be imposed on the Chinese, or did you make any commitments to pause them or not target the Chinese specifically with those actions? And then what would you say is the biggest concessions that the Chinese have had to make in these talks so far?
Oh, well, I'll just repeat that China is the most imbalanced economy in modern times. And I think we are going, they're 30% of global manufacturing. They have a 2% current account surplus of global GDP, which we've never seen before, or probably not since the 1870s with the British Empire. And that's not sustainable. So the tariff levels will have quite a bit to do with that. And I think the other thing that we're seeing is that President Trump was very early on talking about the China problem. The U.S. experienced the China shock when China came into the WTO in the early 2000s. But Europe, a lot of the European business model, it was quite a business model, was predicated on cheap Russian energy, a depressed exchange rate because of the Southern European countries dragging down the euro, and then selling goods into China. And now that China has jujitsu'd the model, and under the cover of COVID, rather than increasing their consumer, they upped their export capacity, and they did it quite a bit up the value chain. So, we'll see over time. But, my guess is that over time, that the other economies, developed economies, will start increasing their tariff barriers, and the global South, they just can't absorb all this Chinese production.
I would say also, when you ask about what tools can be used to deal with this, I mean, this is part of the reason why the president implemented his tariff program. Right now, if you look at the numbers, we're still tracking an annual trade deficit with China. But if you extrapolate it out from the numbers we have so far it looks like it's going to be at least $50 billion smaller this year. So that's some progress already. With respect to the Section 232, this came up during discussions. The Chinese asked us about it. What's the plan? What's the timing? We shared what information we could. You've heard President Trump talk about this publicly, which includes, discussion of, having a situation where you start with a lower tariff, but then you go to a higher tariff at some point to try to, bring back manufacturing of pharmaceuticals or semiconductors. These are global actions. They don't target the Chinese. They don't target any particular country. They'll be applied globally. There aren't any exceptions or exemptions for particular countries.
And what's the biggest concession they've made?
That the Chinese have made? Well, I would say they blocked all of their rare earth magnets, and now we're getting them.
Great. Next question, please, Gavin.
Thank you. Thank you both for being here. I'm just wondering if we can get some clarity on the tariff level that is threatened to happen on April 12th. I know the April 2nd tariffs were 34%. You add that to the fentanyl, 54%. That's where the tariffs are for many goods right now. So what is the overall threat to the Chinese in terms of a tariff level that could happen if there is no extension?
Well, I think you've seen, I've used the word boomerang. So if we boomerang back to the April 2nd level, they would go to 34. I noticed, as the earlier question said, that the Chinese deputy minister did say that we had agreed on a pause. We have not. Nothing is agreed until we speak with President Trump. He's on Air Force One, I believe, doing a press conference right now, and we will be seeing him in the Oval tomorrow to go over the deal with him, and then he'll decide if the pause continues as is.
And just to be clear, Gavin, the president has discretion to change the rate depending on the circumstances that we have, et cetera. So while the snapback rate would be 34%, he of course has discretion under the law to modify that.
Yeah, my question is just the 34% is under the tariff level that's current for many goods. So would that be additive to what we have already? Would it be on top? Okay.
Yes.
So we're talking about the threat is that tariffs kind of in like the 80.
Great. Thank you. Next question, please. Yes.
Melissa Eddy from the New York Times. Melissa Eddy from the New York Times. Can you tell us, please, did you discuss a potential summit between the Chinese and U.S. the Chinese president and President Trump? And can you give us any timeline on what you're thinking about in terms of that?
No, the only thing we discussed was there was a recent phone call between the two leaders. On that call, President Xi invited President Trump to Beijing, but we didn't discuss that at all. What we discussed was implementing the desire of the two leaders for the trade team and the Treasury team to have trade negotiations with our Chinese counterparts. So our meetings were just to implement the will of the leaders, not to discuss if there would be a meeting.
Can you just give a time? When was that call? Do you have it on hand?
I think that was the June call, right?
Yeah, it
was June 4th or 5th.
June 4th or 5th.
Thank you.
Great. Right behind.
Hi, Clara from Jägerfeld, Channel 4 Sweden. You've also met with the Swedish government. What topics did you discuss?
We discussed a wide range of topics. First of all, we want to thank the government for the fantastic venue here. Very, very good to be in Stockholm in July. And we discussed the EU deal with the U.S., of which the Prime Minister, the Finance Minister were very supportive. The Finance Minister and I had met previously during World Bank and IMF Week in D.C. We discussed the importance of getting back to basics with the multilateral development banks. We discussed the Swedish economy and how things are going, how important trade is.
Yeah, we also talked about the huge success in U.S.-EU relations over the past few weeks with the recent NATO summit, where all parties agreed to increase defense spending, and Sweden is a big part of that. And so we talked about Sweden's defense establishment. And then, of course, we also talked about the EU deal and how important that was for both sides to reach that. We also talked about U.S.-Sweden trade. We talked about automobiles made in Sweden. We talked about stainless steel. We talked about ag products like onions and carrots. We learned all about Swedish agricultural production, which is really interesting. So it was a very productive discussion, and we're grateful again for our Swedish hosts for helping us here.
Yeah, just to follow up on that, when I have spoken to experts regarding the EU-US deal, some have said that it feels secure that there is a deal, but that you still can be a little bit unsure if it would change. What do you have to say to that?
Oh no! Right now we have I have text from some of my European counterparts about making sure the details are correct and fully put on paper. So we feel very confident about it, and it's truly a solid path forward for our two countries.
Thank you.
Yep, and I think the other thing that we discussed that's very interesting is the unintended consequence of President Putin's invasion of Ukraine is bringing in Finland and Sweden into NATO, and we discussed the historic reputation of the Swedish military and how good it was to have them in NATO.
Great. All right. Next question. We'll go one more behind. Sir.
It's Hao Jie from Phoenix TV, Hong Kong. I believe you discussed a range of topics with your China counterpart in these 2 days. But compared to Geneva and London, do you think is there any questions or issues are becoming tougher and toughest to negotiate? And as you mentioned that the U.S. is trying to convince China not to keep buying the oil, gas from Russia or Iran, will be the kind of new conditioner for the future round of the talk between U.S. and China. And also, I want to know, since U.S. government has pushed the tariff globally to say push the tariff to a very high peak since 1930, as some newspapers said. But so both of you, do you think it will be concerned by the U.S. people about the potential inflation pressure and also the local economy? Will it? Do you believe will it be more or less slow the economy for the U.S.?
Well, there's a lot to unpack there. So I'll work backwards. I was a professor of economic history at Yale, and I can tell you it's my belief that as many people have a misunderstanding that the downturn in the 1930s was caused by an increase in tariffs. It wasn't. The stock market crashed in 1929. There was also a very large tax increase in the U.S. We just did the largest tax cut in history. The U.S. economy is starting to fire on all cylinders right now. We actually, in May, saw the biggest downturn in inflation in 4 years. So the U.S. economy is doing quite well. And I will tell you, rather than the talks getting more difficult, I actually think that they are getting more engaged as there was a in Geneva, very narrow issue with the magnets. In London, the talks went to a wider aperture. And here, we're able to discuss more and more things. This report that we gave each other on the economies, on the outlook. So I would say it's just the opposite. The purpose of meeting frequently is to have personal relationships, have understandings, and show respect and mutual cooperation. I think Jameson, Ambassador Greer, has been dealing with the Chinese much longer than I have.
Yes, I have. No other comments, though.
Great. I'll take the next question. Let's come back up front. Dave Lauder, Reuters. Careful with the boom mic.
Hi, thanks. Secretary, question about Russian oil. As you know, the president has threatened possible tariffs on countries that continue to buy Russian oil 100%. China is the largest purchaser of that commodity. What was your message to the Chinese about Russian oil? Did you tell them they're on notice, they need to start to pull back?
Well, we described, it's not just the president, what is making its way through the U.S. Senate, and hard to imagine anything could get 80 or 90 bipartisan votes in the U.S. Senate, is a bill that will give the president discretion to apply secondary tariffs on sanctioned Russian oil from, I believe it's from 0 to 500%. I believe he's used 100%. And we've heard from several of our European counterparts, NATO allies, even Canada, well, Canada is in NATO, that they will be following on that. So we would expect most of the Western alliance that has been supporting Ukraine to follow on that. So I think anyone who buys sanctioned Russian oil should be ready for this.
What was their response to that warning?
The Chinese take their sovereignty very seriously. We don't want to impede on their sovereignty, so they'd like to pay 100% tariff. But
Great. We have time for just about one or two more. Ma'am.
Hi, my name is Clara Matsdatter. I'm from Affärsvärlden. I'm just wondering, you've been described as a global macro veteran and you've run a hedge fund. In this moment, where would you put your money if you were still running one?
United States of America.
Only? Only?
Sorry?
Okay. And could you just give us some insight on your current macro view outside of the US as well?
Well, we're seeing the euro's appreciated quite a bit this year, and the currency theory would tell you that when you get a fiscal impulse, you see that, and we've seen a big fiscal impulse coming from Europe, especially from Germany. So, and we're also going to see quite a bit more spending. With China, we are seeing that they are in disinflation. They have a real estate problem. They have a very large current account surplus. As I said, it's about 2% of global GDP. And the Chinese currency is a very difficult currency. It's probably in 3 different equilibria. You have the currency is cheap. You have 1.4 billion people who want to get their money out of China but aren't allowed to. And then you also have the threat of, will the Chinese give you your money back in 1, 2, 3, 4, 5 years if you put it in? And then, I think we are seeing the trade deals are having, contrary to the gloom, doom, and boom, pessimism that we saw at the beginning of April, that the trade deals have had little effect on the economy, and that the U.S. economy is accelerating. And this year, the U.S. is going to take in probably a minimum of $300 billion of tariff income, which will bring, that's 1% in terms of the GDP. So I think we could substantially bring down our deficit to GDP.
And also, finally, when you come back and speak to Donald Trump about this tariff pause, how prolonged will it be?
I'm sorry.
If it goes the way that China just told us right before you came here?
I think typically we talked about 90 days.
90 days more?
Yes.
Yes, okay, thank you.
Great. Guys, that's about it. He's going to have to get to his next engagement. So thank you so much for coming, everyone. And if you have any additional questions, please direct them to U.S. Embassy Stockholm, where they can put you in touch with us at the Treasury or U.S. Trade Representative. Thanks a lot. Have a great day. Thank you, everybody.
There you have it. From the source, as promised here on Bloomberg TV and radio, Treasury Secretary Scott Bessent and the U.S. Trade Rep Jamieson Greer speaking with reporters and answering some very smart questions as we try to get a sense of what was discussed in a third round of negotiations between the U.S. and China in Stockholm. This is Balance of Power on Bloomberg TV and radio. Kaylee Lyons here as well in Washington, D.C. There's much we don't know here, Kaylee, and what we do know still needs a sign-off from the President of the United States.
Yeah, the Treasury Secretary going as far as to say he knows that China came out of the meeting saying that there had been an agreement to extend the trade truce beyond August 12th. He said, we have not agreed. Nothing is agreed until we speak with President Trump. But we also learned simultaneously, as President Trump right now is gaggling with reporters aboard Air Force One, that he has spoken to Scott Bessent, who will brief him again in the Oval Office tomorrow. And at that time, he says he will either approve it or not when it comes to an extension with China.
No talk about a summit, at least apparently at the table here. We know the two countries, our two governments have been discussing this
I front
idea.
ran the long.
A potential venue.
I front ran the long.
November has been floated, but there's no news on a meeting between President Trump and President Xi. And most believe there could be no real trade deal.
That's the
without
PA.
that happening.
Yeah, it's also interesting to consider whether or not a trade deal can happen without it also factoring in export controls.
Plus
the U.S.
these
Trade
two.
Representative Jamieson Greer said that
I'm
conversation
only,
apparently in Stockholm
I'm only
was really
3,300
one-sided,
away
that
from
yes,
qualifying this
they
one.
talked about
I
export
almost took
controls,
this
but
short.
only
I was lined up to take
rare
this
earth
short, but I
minerals,
got too
not
many things
necessarily
going on.
export controls the US is
I didn't want to make a
putting
mistake.
critical technologies.
That was pretty newsy. We were discussing this with Anna Ashton beforehand, knowing
Yeah,
that
but I got that long and I added contracts on the way up. It was pretty good.
H20
Yeah,
chips
it
that
is.
just
It is the
recently been
PA.
cleared to sell once
It's the
again.
PA. I'm using the copy trader. So I'm leading with the PA. I lead with it, and then I'm copy trading the two evals I'm working on.
An all-time high, barely moves.
So yeah, the PA has $2,000. Yeah, I've got 2,100 in the PA right now. Yeah, I'm only 2 days into the 30. So I think I might be okay if I don't act like a fool.
The Dow, the S&P, NASDAQ do remain very much in the red. Down 12 points on the S&P, retreating from an earlier record right now, down 0.2%, 63.76 where we stand on the S&P. The Dow down 184 right now. That is a drop of 0.4%, while the NASDAQ Composite Index down 38.
I did take a loser. I got in too early, and I was down 400 negative. Then I waited for another rotation and got in and got that back and made the profit. So I did take a loser before this one.
We'll be reporting this week. Apple and Amazon on Thursday, Microsoft, Meta Platforms tomorrow. All four of those names are trading lower. 10-year at 4.33% ahead of the Fed decision tomorrow. We've got the 2-year 3.87%. Gold, meanwhile, up $12 the ounce, up 0.4%. West Texas Intermediate crude now up 2.5% at $68.39 a barrel, and Bitcoin down 0.2%, 117,850 on Bitcoin. One additional headline to pass along: President Trump giving Russia 10 days to reach an agreement with Ukraine. The president says in 10 days the U.S. will be putting tariffs on Russia. Again, recapping, S&P down 0.2%. Balance of power continues right now. We got you covered on trade. Back we go to Washington, and once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, many thanks. We'll get back to Charlie again closer to the top of the hour here for the latest on markets, which have been listening very closely to the conversation in Stockholm. That's where Scott Bessent and Jamieson Greer, the Treasury Secretary and U.S. Trade Representative, have just finished briefing reporters who waited hours for a readout on their negotiating session with the Chinese. And we want to bring you into that conference room in Stockholm right now. Bloomberg Europe correspondent Oliver Crook was there for the back and forth with Bessent and Greer and joins us now with a live update. Give us a sense of the mood in that room, Oliver. We appreciate your reporting today. It took them a long time to come out, and while Scott Bessent tried to frame this as a productive meeting, there are questions about some of the sticking points that remain.
Absolutely. I think you've got a correct read on the situation after 2 days of discussions that we've had between the Vice Premier of China, Scott Bessent, the U.S. Treasury Secretary, Ambassador Greer on the trade side, trying to hammer out the details to get what we were sort of hoping was a rubber stamp 90-day extension to those trade tariffs that have been put on hold with China that are slated to come back into effect on August the 12th. Very, very high rates of tariff if they do not have an agreement. They were not able to conclude that conversation and come to an agreement in the meetings over the last 2 days. They did make a lot of positive signals about how conversations were going, that they were very productive, that they are now going to go back to Washington, D.C. to consult with the president. And it sounds like this is really going to come down to the president of the United States, whether or not he approves this extension. We do know that the most likely outcome, if there is an extension, is another 90-day extension. A lot of positive noises. Again, there was no mention of a possible summit between Trump and Xi Jinping. It seems that we are pretty far from that in terms of where we are on negotiations. That is not something that appears imminent. And we also heard from Jamieson Greer saying that they never want to talk about magnets again. As far as they're concerned, that issue is settled with the Chinese, and they'd like to see those continue to flow. That has been agreed. But I do think that one of the sort of salient points here, and one of the most important points, was really the reiterating by the U.S. Treasury Secretary about this issue of Russian oil and secondary sanctions, something that it sounds like we just heard again from the President of the United States, that if there is not meaningful efforts from Vladimir Putin to come to a ceasefire in Ukraine, that you could see those secondary sanctions implemented on Russia. That could be anywhere from 100% tariffs on anybody who's buying crude oil from Russia to 500% tariffs on anybody who's buying fossil fuels from Russia. And obviously, China is a very large consumer there. And he was saying that the Chinese, they talked about this, that the Chinese are very sort of concerned with their own sovereignty, and it's up to them if they want to pay 100% tariffs on Russian oil. oil.
And that short was easy to see.
Yep, 10 days from now, according to
wish
President
I'd have
Trump.
taken
Bloomberg's
it.
Oliver Crook reporting live for us from Stockholm. Thank you so much. Of course, the latest on the outcome of talks between the U.S. and China, an outcome I think it's fair to say remains uncertain. So on that note, we go back now to Anna Ashton of Ashton Analytics, a China expert who joined us earlier on Bloomberg TV and radio. Anna, now that we've heard from Bessent and Greer about what was and was not discussed today, would you describe this third round of talks as significant forward progress, or is this just stasis?
Gosh, Kayleigh, I think my biggest takeaway was that it seems like the U.S. is trying to kind of flip the script. We talked before the press conference about whether or not China had a decisive upper hand because of its monopoly on rare earths and magnets, and I said, yeah, I think they do, because there's more room for them to hold the line and also offer compromises than there is, given the political pressures for the U.S. to hold the line or offer compromises on export controls. I think they're trying to make it not about export controls. They're trying to make this a balanced rollback, as Lutnick said, of tariffs in exchange for a continued or increased flow of rare earths and magnets. And then they're also throwing in the threat of secondary sanctions. And it seems like that seems like a sound play on the part of the Trump administration in terms of trying to find effective leverage. I think that is effective leverage, given the fact that the level of tariffs that could be imposed in a snapback would be really, really high, and certainly would do damage to a Chinese economy that is already kind of, struggling to gain momentum. I thought it was interesting how much Bessent emphasized the success so far of the tariff strategy. It's clear that the point they're trying to drive home is that they're not backing away from their tariff strategy, and tariffs will continue to loom as a threat if China is not sufficiently cooperative. And of
Leads
course,
are coming in like
232
crazy
tariffs could
today.
be part of that.
Scott Bessent seemed a bit miffed that the Chinese told reporters they had an agreement to extend the deadline, reiterating that only Donald Trump could approve that, and the president has not made this clear. What did you think of the body language, the tone? Are these actors getting along or not?
Okay.
I'm sure it was tense, and I think the Chinese side has had its opportunities to be frustrated with the way that Bessent and other members of the Trump administration have characterized previous rounds of talk, and perhaps that's why Vice Commerce Minister Lee decided to go ahead and lean into his interpretation of the outcome of this round of talks. I could easily see them, caveating in reply to Bessent that they just meant an agreement in principle. Of course, they just meant an agreement in principle. They both have to go back to their respective leaders for approval of anything they agree to.
Really great to have you with us, Anna Ashton, Ashton Analytics, and many thanks for being so generous with your time, watching and listening to this conversation for us, so we can bring the best analysis to our viewers and listeners. Kayleigh, we want to mention another breaking story right now. As we've alluded to a couple of times, Donald Trump is briefing reporters on Air Force One, or at least was a short time ago, making news not only on trade, but also on geopolitics specific to Russia. Remembering yesterday, he said he might move up the deadline for Russia to reach peace in Ukraine, promising the secondary sanctions that we were just talking about. He's now given it 10 days. Donald Trump says Russia has 10 more days to reach a truce in Ukraine. It is moving oil prices right now. We've seen crude oil move back above $68 a barrel on this headline. And we want to bring in Mara Rudman for more on this, professor at the University of Virginia's Miller Center, former U.S. diplomat, back on Bloomberg TV and radio. Mara, your reaction following President Trump's visit to Scotland this weekend to this more intense rhetoric when it comes to Russia. He said that moving the deadline has not resulted in any progress yet. Will this headline make that different?
John, good to be back with you. I'm not sure that Donald Trump saying it or saying it louder or shortening the number of days is what's going to make the difference. I hope what Donald Trump is learning and seeing is that the United States is much stronger in whatever it says and whatever it moves to do when we have friends and allies with us who are like-minded in approach. And it's worth nurturing and building and spending time and attention with those relationships. And I hope some of what we're seeing from him is a result of that.
Well, but what will the results of that ultimately be, Mara? It's one thing for President Trump's attitude to change. It's entirely another for President Putin's. Do you expect that will happen?
Well, I think President Putin is constantly, not unlike President Trump, calculating where his interests lie and how to achieve them. And so the question of secondary sanctions, of how much pain, frankly, can be inflicted on the Russian economy and the extent to which there's the capacity to keep or limit China from helping or bailing out Russia in the way that they have. All of those things are going to factor into whether we ultimately see changes from Putin. I don't think he is suicidal. He wants to continue to rule, and he wants his country to remain allied with him. But it's not clear how quickly we will see turns because of how deeply entrenched his issues are in going into Ukraine and how rightfully entrenched the Ukrainians are in having the Russians depart and stop their offensive.
We've spent the bulk of our program today, Mara, talking about trade, whether it's with regard to China, the EU, or any other partner that is facing a deadline here coming up next month, whether it be the 1st or the 12th. And a lot of that talk has revolved around the idea of the taco trade, the fact that the markets are still near all-time highs despite the great uncertainty. And I wonder if there's an element of that here. Does Vladimir Putin actually believe that Donald Trump will go through with the threats that he's making?
Yeah, it's a fair question. And there's plenty of reason to see inconsistency in President Trump and his actions. And so both in terms of the economy and in terms of how other world leaders look at and assess the United States, it will be important for President Trump to be able to display and act with some degree of consistency and not, not pivot his positions by sometimes up to 180 degrees overnight. And again, we have too little in the mix now to know whether he's capable of doing that.
Well, as we consider President Trump's shifting positions, we saw a notable break yesterday between him and Israeli Prime Minister Benjamin Netanyahu on another issue, which is the situation with hunger in Gaza. Netanyahu obviously not characterizing it as starvation. President Trump says he begs to differ and thinks the images don't lie. But he also just said aboard Air Force One that he thinks Israel could do a good job with food centers in Gaza. How much do you expect the pressure on Netanyahu and Israel specifically to ramp up from President Trump?
Well, again, I think the question here is one of consistency, because while I appreciate the fact that he acknowledged the very real facts on the ground in terms of the human lives and the suffering that is occurring in Gaza, and was able to acknowledge that while Hamas has a role in that for sure and brought all of this upon the people of Gaza, that Israel's actions are also culpable. He needs to be able to continue with that kind of approach and to present solution sets. And there are some within Israel who also want to see that, who have a different view than Prime Minister Netanyahu. Notable among those who would support some of the solution sets others are bringing forward are the Israeli military, who frankly wanted the original system of food distribution and humanitarian aid to continue and were overruled by the political elements of Prime Minister Netanyahu and those around him.
All right, Mara Rudman, professor at the University of Virginia's Miller Center and former U.S. diplomat, joining us here on Balance of Power. Thank you so much. And President Trump just speaking again on Gaza aboard Air Force One to reporters, saying those kids are starving and that everyone thinks Gaza photos are horrible. But he also is commenting on the other news we're dealing with, of course, the U.S. and China wrapping a second day of meetings in Stockholm. President Trump saying that while we understand it wasn't discussed at the meeting, he does think that Chinese President Xi Jinping wants to meet, and that will probably happen before the end of the year, Joe.
Having taken to Truth Social earlier to make clear that he was not asking for an invitation, that the Chinese were in fact sending one. Whether that summit happens, we'll let you know as we wait to learn much more about the deal, the framework at least that was struck, and whether President Trump is going to sign off on all of this Meet us back here at 5 p.m. Eastern Time for the late edition of Balance of Power to seek answers to these questions on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live across Bloomberg platforms. Carol Massar, Tim Stenovec, live here on Bloomberg Business Week Daily. And we've got the Fed kicking off a two-day meeting, and we have stocks kind of cooling, pulling back from that record run that we've seen as of late.
Yeah, the Fed, earnings, economic data. There is a lot for investors to digest. Also, Carol, China and the U.S. agreeing to extend their tariff truce. We're going to be covering all of this in just a moment.
Yeah, a lot of headlines on that just over the last 30 minutes. Also coming up this hour, quite a treat, a double dose of CEOs in the drug space. AstraZeneca's CEO on today's better than expected results. We'll also talk about what is propelling growth at the company. And then we've got a second one, Tim.
Yeah, the CEO of Compass Pathways on the path to FDA approval of the first psychedelic treatment for some of those folks living with depression. So a great program coming up over the next hour right here on Bloomberg.
All right, let's take a look at trading because we've got stocks kind of bouncing along their lows of this session. Let's head on over to Charlie Pellet.
Hi, thank you very much. And here's what's going on. Lots of moving parts to this market. We got you covered on Bloomberg Television and Radio. Fast-moving trade developments, economic data, the jobs report later in the week, earnings reports, Fed decision tomorrow. Right now, right to the markets with the S&P down 13, 63.76 where we stand. That is a drop now of 0.2%. Dow Industrials down 209, drop there of 0.5%. NASDAQ down 35, a decline now of 0.2%. Our Mag 7 index now slumping by 0.4%. 4 out of the 7 members of that index will be reporting earnings this week. Apple and Amazon Thursday, Microsoft, Meta Platforms tomorrow, and all 4 of those names are trading lower. The 10-year 4.33%, the 2-year 3.87% now on the 2-year. Gold up $13 the ounce, up 0.4%, and West Texas Intermediate crude now surging by 3.3%, closing in on $69 a barrel on WTI. Deal news: Union Pacific has agreed to acquire Norfolk Southern in a cash and stock transaction valued at $85 billion, forming a transcontinental rail giant. Shares of both railroads, however, are lower. Union Pacific down now by 3.1%, Norfolk Southern lower by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, U.S. and Chinese negotiators have concluded their latest round of talks, trade talks, of course, that were underway in Stockholm, with an agreement to extend their tariff truce, or so it seems. We have some questions here. U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jamieson Greer holding a press conference last hour in Stockholm. The Treasury Secretary saying an extension, not a done deal.
If we boomerang back to the April 2nd level, they would go to 34. I noticed, as the earlier question said, that the Chinese deputy minister did say that we had agreed on a pause. We have not. Nothing is agreed until we speak with President Trump. He's on Air Force One, I believe, doing a press conference right now. And we will be seeing him in the Oval tomorrow to go over the deal with him, and then he'll decide if the pause continues as is.
All right, that, of course, was U.S. Treasury Secretary Scott Bessent earlier in Stockholm. With more on where we are, Bloomberg News correspondent Oliver Crook was in the room where it happened in Stockholm, where that press conference went underway just about 35 minutes ago. Oliver, pause, no pause. I think we're all still kind of scratching our head to understand exactly what was agreed to.
Yeah, I think we were too a little bit, and that was helpful for the Secretary of the Treasury to cast a little bit more light on that. You know, far be it from Donald Trump to withhold any suspense from us. Basically, the 2 days of negotiations that we had by the Chinese Vice Premier, the U.S. Treasury Secretary, the Ambassador on Trade, Jamieson Greer, ended a couple hours ago. Then they briefed the media, and it ended, it seemed initially, by the Chinese saying that they basically a 90-day pause, the continuation of the truce between the United States and China, that would continue for another period of time. They didn't specify the period of time. Then we started to hear from the Americans with a slightly different story, that basically this is still conditional to Donald Trump's approval. We understand that Scott Bessent did speak with Donald Trump after the conversations before he gave that press briefing, but he's going to give a more complete briefing a little bit tomorrow in the Oval Office in the White House in order to get the final sign-off from Donald Trump, who may, change his mind, may demand something else. But again, the deadline that we're facing here is August the 12th, when these tariff rates will shoot right back up. So for the market, this is really a crucial thing to get over the line.
Interestingly enough, at least the equity market not reacting much to this news. Perhaps it was priced in. Perhaps there was the expectation that there would be some sort of extension here. I want to go to rare earths specifically, Oliver, and what we learned about the way that rare earths, not just today, but really over the last few months, have taken center stage when it comes to these negotiations. What do we know about that?
Well, what I think is interesting is that there were concessions on rare earths. There were concessions in exchange for that on the H20 chips by NVIDIA, by the United States, the allowing of selling them into China. And we should say that, one could interpret this as a sort of act of goodwill on both sides in order to try to make progress. But the reality of the situation is that for each of these economies, they're dependent on the other. There is no alternative for these technologies. This is not just an act of goodwill. This is the leverage that China holds over the United States. It is the leverage that the United States holds over China. And they did manage to make some breakthroughs on that. And again, this is something that was active in the discussions with the delegation from China and the United States today. We heard from Jameson Greer saying that I don't want to talk about magnets basically ever again. As far as they're concerned, the magnets should be flowing. They are flowing now, and that this should be a closed topic, and that they can then put that aside in order to make progress on the many other issues that are large issues between China and the United States. They'd like to basically put an end to it. And as far as they're concerned, they hope it's done.
All right, Oliver, back in June, President Xi of China, we know, invited President Trump to Beijing. Are the two leaders talking at all during these talks, or are they just waiting until, I don't know, the final terms? What's kind of going on behind the scenes here?
Yeah, I mean, our impression is that the last time that they spoke, this came up during the press conference, was in the call that they held in June. We understand that Xi Jinping did invite Donald Trump and the First Lady, Melania Trump, to China at some point. There has been some discussion today. I think there was a Donald Trump truth saying that basically he's not seeking a discussion with President Xi Jinping, but he has been invited. But this is really at the crux of the issue here, right? The Chinese, in the last few decades, have been building out their economy, have been building out their status on the global stage. They don't want to be seen sort of bowing theatrically to the United States on these trade issues. The Europeans have much less of a problem with that. They're being much more pragmatic about these sorts of things. But for the Chinese, this is not just about trade. This is about their status on the global stage. And I'll remind you that in Trump 1, the first Trump administration, these trade negotiations between the Chinese and the United States, they were held in Washington, D.C. These discussions today are being held in Geneva, the United Kingdom, in Stockholm, in neutral sort of third-party places. And we've seen what China's appetite is to escalate this trade war if they have to. They shot the tariffs up to 125%, which is how we got to this truce. But that is the sort of dynamic going into this. Both leaders want to appear strong and need to exert their leverage on the other.
What are the questions that remain unanswered at this point in terms of the details, the nitty-gritty, and what really needs to be hashed out here?
Yeah, so there are a panoply of different issues. For example, there's the issue of TikTok, right? There is a buyer potentially for TikTok in the United States. So says Donald Trump. The Chinese still need to give a nod to sell that. That is apparently something that did not come up in these conversations. There is the question of fentanyl. Bessent says that he is not pleased with how things have been progressing there. China could still be doing more. I mean, there is the issue of Russia, which increasingly we've seen Donald Trump change his position on Russia and Vladimir Putin. And we had a large discussion apparently between the two delegations today on the question of Russia. And Scott Bessent, again, airing their displeasure at the continued buying of fossil fuels, both from Russia and China, but also that dual-use military technology that they're seeing increasingly on the battlefield in Ukraine. So these were active discussions. And then there's also this question of the secondary sanctions that Trump is now talking about imposing on people who buy crude oil from Russia if Putin does not come to the negotiating table in the next 10 days. This came up in the press conference. And when asked, whether or not the Chinese position had altered, Scott Bessent said basically the Chinese take their sovereignty very seriously. They don't really want to be told what to do. And if they want to pay 100% tariffs as a consequence of buying Russian oils, then they will.
Secretary of the Treasury Scott Bessent said, we understand China's agenda much better. What is really the Chinese agenda? What is really the U.S. agenda? Is it just for both to kind of get wins here ultimately?
Well, what's interesting is, again, what we see the dynamic with the European Union and the United States. You have a situation with Japan, the UK, the EU, where they almost want to appear to be giving more to Trump than they are, sort of potentially giving these sort of, big sort of sweeping statements of committing to buying, $750 billion of energy, investment pledges of $600 billion. These are sort of big concessions, but again, there is a lot of room to fudge these sorts of things. With China, you have sort of the opposite dynamic, where the Chinese do not want to appear to be giving more. They want to appear to be giving less. And I think that really is the tone in these discussions. And I think that, again, what this meeting was supposed to do was to kick the can down the road another 90 days. You didn't get that today. I think that everyone is hopeful. And we should say, overall, the tone that we got from this press conference, from the ambassador and from the Treasury Secretary, they were saying that these were very, very constructive discussions. And even if we didn't get a deal today, they sort of were signaling, just maybe why you're seeing modest reaction in the market, that they will get it over the line.
Right, and we know another thing that'll be a focal point is the Treasury Secretary say that they'll meet with the president in the Oval Office tomorrow. All right, going to leave it there. Oliver, thank you so much. Oliver Crook of Bloomberg News out there in Stockholm. In terms of kicking the can down the road, I think about how the Fed is ultimately going to take this into account tomorrow when it makes its decision.
Yeah, that's another big focal point this week for investors. Kicking off its two-day policy meeting today is the Federal Reserve. We'll get that decision tomorrow, the 5th of the year. No change in rates is expected. This is one of our most read stories on the Bloomberg, is about how upper-income Americans are increasingly falling behind on credit card and auto loan payments. It signals an underlying vulnerability in the U.S. economy as the labor market slows. With our preview of tomorrow's decision and our economic roundup, with us is Bloomberg News economics editor Molly Smith. She's in our Washington, D.C. bureau. Molly, a lot of economic data this week. Before we get to this most read story on the Bloomberg about the concern with these upper-income Americans, with the economic data that we got today, the JOLTS, et cetera, anything of note stick out to you?
I mean, it seems like we're really just in this holding pattern right now, Tim, of like, what is the story going on with the U.S. economy right now? Are we in this place where the labor market is pretty resilient and consumer spending is decent but not great, and everything's just kind of humming along, and you know, we can afford to keep interest rates pretty elevated right now because there is no real flashing warning sign in the economy right now? Or are some of these devil in the details really more the primary story of concern right now, which is what hopefully this week is going to illuminate with us when we have the GDP report coming tomorrow, then we have PCE inflation and inflation-adjusted spending Thursday, as well as the jobs report on Friday. So I think all of those things, and especially how Powell tomorrow characterizes the economy, is just really going to help set the tone for the rest of the year, and seeing which of these stories is the prevailing narrative for the economy right now.
Molly, how are you and the team kind of characterizing the economy on this Tuesday, July 29th? How are we seeing it right now?
I think right now that this is still an economy that, I mean, personally of the belief seems like it's more the one that can afford to have interest rates at the level that they're at right now, that there hasn't really been a huge sign of deterioration really anywhere that would be urging for interest rates to be lower right now, that consumer confidence is improving now that, you know, the real shock of the April tariffs has subsided and more trade deals are coming to the forefront. And it seems like the really harsh trade rhetoric is hopefully behind us. And the job market is more or less humming along. I mean, job openings have been pretty steady in the 7.5 million area for really the past year. There hasn't been really any movement one way or another suggesting that labor demand is really changing in any notable way. Of course, we've seen hiring is slowing, but it really is just still this low hiring, low.
It's interesting because I feel like the actual government data and then anecdotal data, I think about, I think it was a Wall Street Journal story yesterday about Americans putting more into 401ks and then also tapping into their 401ks.
Pulling from 401ks.
At the same time, there's that going on. You have the Atlanta Fed GDP now index above Bloomberg consensus for the second quarter. We had U.S. consumer confidence rises on the outlook for the economy and job market. You know, it's hard not to feel like there's a fair amount of optimism, and the Fed has to be nervous and worried about inflation kind of rearing its ugly head. Fed policy, Molly, you know, not an exact science. There is a lag effect. So with that in mind, does it make sense for a stronger, you know, or what, I guess, what does it make a stronger case for when it comes to Fed policy? As you said earlier, for the Fed to maybe do nothing at this point, because it seems like things are chugging along.
And that's exactly where the majority of the committee stands right now, is in that camp of thinking that we're okay to leave interest rates where they are. We're in a good place to really buy time and observe what's happening, and that we're not needed in this place to really proactively adjust interest rates for, you know, a development in the economy that we're not sure might even happen. So that's really the challenge right now of where you're starting to see, you know, some factions emerge of, you know, we have like Governor Christopher Waller and perhaps Governor Michelle Bowman as well, or Vice Chair, sorry, for Supervision Michelle Bowman, that maybe the idea that the labor market is perhaps in worse shape than what the aggregate numbers might suggest, and where, you know, those two could very well be dissenting if the decision is to hold interest rates steady tomorrow. So there is this division in the committee about the labor market, but also really the outlook for inflation and how tariffs will ultimately feed through to the economy. Is it going to be a one-time price shock that, you know, ideology would tell you you can otherwise look through and not really have to, like, you know, act on that from a policy perspective? Or is this going to be a more persistent effect through the prices that would suggest you should keep interest rates elevated for longer? And that right now is the division among a lot of people on the Fed board right now as to where inflation is going to end up, and therefore where policy should go.
Okay, the question that everybody I know will have for the Fed chair tomorrow is about the president and the Fed chair in hard hats on Thursday at that tour of the Federal Reserve. What they talked about on that tour, the easing in tone that we heard from the president following that tour, the tension at the beginning of that tour. Is there anything constructive here to be asked or answered tomorrow?
You know, I've actually read a few notes from economists saying that, like, really any questions about this would frankly be a waste of time during the press conference, that Powell's been pretty defiant in, you know, preaching for Fed independence, that he's not going to talk about, you know, his job prospects. And of course, the race to replace him, or really the names that are in contention for, again, this is still 10 months away for when his term is up, that is not something that he's going to get into. So I think there's probably better time spent asking in seeing where does he lie in terms of, are we with most of the committee in characterizing the labor market and the economy as a whole as solid and broadly pretty healthy, or are we more taking something from the Christopher Waller argument that the labor market is, quote, on the edge? Because that really has been the biggest break from the committee so far, and it would be really interesting to see where Powell lies compared to the rest of those voices.
And yet, you know, Molly, a question's going to come up. There's going to be something, right, in terms of his tenure, but he will probably dismiss it pretty quickly, right?
That's the expectation, right? So I think that's where some of these economists are, you know, who aren't in the room, who don't get to ask Powell the questions, are maybe making their not so subtle pleas to journalists. Please don't ask these questions that aren't going to get answered, and instead focus on ones that we could actually make constructive decisions about.
All right, Molly, so appreciate your gem. Molly Smith, Bloomberg News economics editor, typically in New York, out there in our Washington, D.C. news bureau. On this Tuesday, as we know, the Fed kicking off that two-day meeting. We will get that decision 24 hours from now. We will know the Fed decision, and we'll be counting down to the Jay Powell press conference and waiting to see what he's asked.
What do you think they're talking about right now?
I don't know.
Inflation.
Yeah, I think, you know, I was thinking about this when we got the headline about U.S.-China trade talks maybe being pushed off again. So it's another piece of uncertainty that if the Fed is saying, we got to wait to see what this deal really amounts to, or are there more complications?
Yeah, not exactly clarity yet.
No, exactly. All right, folks, you are listening and watching Bloomberg Business Week Daily. The pursuit of FDA approval for one psychedelic drug company, Compass Pathways CEO, joining us next on Bloomberg Business Week Daily.
Order filled. Stop filled. Order filled. Order filled.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Traders are sending stocks lower ahead of the Fed decision tomorrow. Concerns about high valuations overshadowing hopes for an extension of a tariff truce between the U.S. and China. Right now, we are close to session lows on the S&P, down 15, 63.74 where we stand. That is a drop there of just about 0.2%. The Dow down 224 now, down 0.5. NASDAQ lower by 0.2%. Our Mag 7 index down 0.4%. 4 out of the 7 members of that index do report earnings this week. Microsoft and Meta kick things off tomorrow. Apple and Amazon on Thursday. 10-year 4.33%. The 2-year 3.87%. Gold up $15 the ounce, up 0.5%. And West Texas Intermediate crude above $69 a barrel, now $69.09, up by 3.6%. J.P. Morgan Chase is nearing a deal to take over Apple's credit card program. That, according to the Wall Street Journal, if it happens, J.P. Morgan will replace Goldman Sachs as the issuer of Apple's credit card. Right now, we got Apple down by just about 1%. J.P. Morgan Chase down 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, U.S. Health and Human Services Secretary Robert F. Kennedy Jr., he has suggested that psychedelic therapy for depression and trauma has the Trump administration's support. This actually was in a report by the Associated Press earlier this month that the secretary recently talked to members of Congress about, and we're guessing that it may have caught the attention of the team over at the publicly traded small cap company Compass Pathways. We wanted to know more, and let's get to Kabir Nath. He's Chief Executive Officer of Compass Pathways, and he joins us here in studio. Kabir, welcome, welcome. Remind our audience about the work you are doing and your synthetic psilocybin experimental drug for treatment-resistant depression. Tell us about where you are, what this drug is, and what it has shown to do so far.
Thanks very much, Carol and Tim, and it's great to join you here. So yes, at Compass Pathways, we're a company in the final stages of developing synthetic psilocybin as a potential treatment for treatment-resistant depression, or what we call patients living with persistent depression. That's a big problem affecting some 3 million people in the US, and it's debilitating. Many of them are unable to work. The majority will have had some sort of suicidal thoughts in the course of their depressive illness. So we're a leading psychedelic company and potentially the closest to regulatory approval.
You've used the word potential twice. You said it's a potential treatment, and you said potentially you're a leading company there when it comes to FDA approval. Is it unproven?
Order filled.
We have generated robust evidence now from 2 studies. The first was published a couple of years ago, and then just last month, we released more data from the first of our final stage studies. So what can I tell you about that? First, safety. We didn't see any unexpected safety signals in this treatment of patients living with persistent depression. And secondly, after just a single treatment, after 6 weeks, we saw a significant reduction in depressive symptoms. And just to emphasize that, because you'll be aware of the kind of the typical paradigm of antidepressants, something you take daily. This was a single treatment and with the effect measured after 6 weeks. Now, we already are 2 for 2 in terms of these trials, clinical trials that we've conducted, but we're continuing to see more evidence generated first in one of these late stage trials. And second, we have another study ongoing where we're also looking at the impact potentially of another treatment.
We should point out that about a month ago when that study came out, the stock, your shares tumbled almost 50%, hitting a record low. What I guess I want to understand, so it was below what Wall Street expected. It did meet your goal, from what I understand, your company goal, but Wall Street was very disappointed. Tell us how this works. How does one psilocybin treatment kind of cure depression, persistent depression?
Psilocybin you can think of as, if you like, a key that unlocks a door or a set of doors in the brain. And while those doors are open, that enables the patient to work through some of their fixed negative thinking and potentially have relief from their depressive symptoms. To do that, there is a profound subjective experience. So there is a psychedelic experience that lasts 6 to 8 hours. And as I say, during the course of that, the drug is working in such a way that it unlocks these doors and allows the patient to engage with some of those negative thoughts and potentially, as I say, get relief from those depressive symptoms. The fact is, as I say, we've seen, and what's amazing, that one single treatment can show sustained effects at least 3 to 6 weeks and potentially longer. In our earlier trial, our earlier clinical study that we did, we saw that for many patients that was sustained out to 12 weeks.
What's many? How many? Forgive me, Tim. Like, I'm just curious, how many?
So that was a study of around 230 patients, of whom a significant number were on what we call the active dose of the medication. And what we saw was a quarter of them had, from that single dose, they were actually sustained free of depression out to 12 weeks. And in this population of people who have typically tried multiple treatments and for whom very little is any longer working, that was a remarkable response.
When patients do take this single dose, what is the environment that they're in during that 6 to 8 hours? And are they guided in some way by a therapist of sorts?
Physically, it's a calm, comfortable setting. They have the option of eye shades, there's music playing, and there are appropriate safety safeguards in place. Psilocybin is a very inner-directed mechanism. So what actually happens is the patient has this profound influence, but while there is somebody in the room, it's largely silent. There is not directed therapy in the course of that intervention.
How do you run an effective clinical trial for a drug that the experience is such that the person knows they've taken this drug rather than a placebo? Somebody who takes a placebo is not going to have a psychedelic reaction to the placebo.
At Compass, we thought about this before we even started our studies. So our prior big study, the one I referenced with 230 patients, we designed that in such a way that there was the choice of 3 different doses of psilocybin. One was a low dose, a second was an intermediate dose, and in patients who've never had this experience before, that's truly confounding in terms of they cannot tell whether they got a medium dose or a high dose of that drug. This is important because, as you say, otherwise it will be very obvious. But that design was very effective for that earlier stage study we did, and we've replicated that design in one of our late stage studies.
We're talking with Kabir Nath. He's Chief Executive Officer of Compass Pathways here in studio. You keep saying synthetic. What's the difference between synthetic and naturally occurring?
So we are manufacturing a pill to the highest standards of purity, no contamination. We know exactly what is in the pill. This is a manufactured pill that we are treating with.
So that you know exactly in terms of dosage. Is that what I'm saying? So if naturally occurring is different?
Potentially. Okay. It is naturally occurring. Whereas ours is synthetic, so we know exactly what's in it. We know the exact pill.
What will it cost?
It's premature to speculate on that at the moment. We're still conducting these final stages of our studies.
But expensive? And would it be something, I mean, if you get FDA approval, is it safe to make the assumption that it would be covered?
The whole premise for founding Compass Pathways was to enable that form of broad access. So the reason that the company has gone through doing these rigorous, robust clinical studies so that we can discuss that with the FDA, potential for regulatory approval, and then, if we're fortunate enough to get there, the chance to negotiate with both commercial insurers and government payers. Let's remind ourselves that these 3 million people that I referred to, they are relying on insurers, commercial insurers and government payers to actually cover their drugs. I believe we will be able to demonstrate significant value given how different this is from other treatments available today in depression.
Kabir, Carol mentioned that the Associated Press reported earlier this month that RFK Jr. recently talked to members of Congress about psychedelic therapy for depression and trauma. Apart from that, have you seen any real signs of support for the administration for this new class of drugs or type of treatment?
We have had support from the FDA throughout our development process. We have breakthrough designation.
So even before Robert F. Kennedy Jr. took over as HHS?
We have had a motivated and engaged agency. We're excited to see the voices from HHS, from Veterans Affairs today, suggesting that they also see the potential for this class. And we're very happy to work to see how we could potentially accelerate access, while at the same time ensuring that we continue to generate really good, robust, good evidence that these are safe and effective.
Talk to us about timeline, though. I feel like I know Bloomberg's been reporting on this class of drugs and treatments, and I think we've all seen pieces
for years.
Right, for a long time, that for people who where other treatments don't seem to be making a change for them. So I don't know. Is it another few years? Is it the end of this year? Is it the end of next year? And is it, that the Trump administration could somehow shuttle this through much more quickly?
I think there are clearly people in the current administration who, as I say, see the potential of this, but we want to make sure we do this right as well. So we want to make sure we do that in the right way with the right rigor and so on. We are conducting, as I say, the final stages of studies. We have 2 ongoing, of which the second will wrap up in the second half of next year. The data we released last month, though it hasn't yet been reviewed by the FDA, we have a meeting planned with them where we'll discuss with them, and we'll discuss the potential for any acceleration of a filing and a regulatory process.
Do you also think about other usages, whether it's PTSD and other applications? And I'm just curious what you might be exploring in that world.
Our next priority beyond persistent depression is indeed PTSD. That is something with very high prevalence, some 13 million in the US, for which there are only 2 very old drugs approved. And unfortunately, recently, there have been 2 advisory committees recommending against new drugs in that space. So yes, we see PTSD as a key area. We generated some data last year, and we will be announcing the design of another late-stage trial for PTSD imminently.
I know the US FDA is the gold standard for going through the regulatory process to be viewed by the world as a credible treatment for something. But these days, is it worth going after approval in another country to try to do this on a smaller scale to prove that, yes, it indeed works?
We will be exploring approval in a range of countries. So our studies have been international, US, Canada, Europe as well. We have taken advice over the years from the European regulatory authorities. We're a UK-based company as well, so we've been speaking to the MHRA, the regulatory authority in the UK. So yes, this is a problem, sadly, for patients across the world, and we would look to exploit it where we can.
Kabir, just got about 30, 40 seconds. We're actually going to be talking with the CEO of AstraZeneca right after this. I'm just curious, in terms of big pharma, have you had any preliminary discussions with larger pharmaceutical partners interested in commercialization, co-commercialization, or distribution?
What I know is the big pharma is tracking this space closely, and what's been great is to see the re-entry of some big pharma back into psychiatry over the last couple of years. So I know they watch this space, but we at Compass are determined that we can do this ourselves and are excited about the opportunity to bring this potential new treatment to patients who so clearly need it.
So no strategic alignment that you would consider. You plan on doing this alone?
That's our plan.
Okay, great stuff. Stay in touch.
Thank
and
you
let us
very
know
much
how
indeed.
things are going. Really appreciate it. Kabir, be well. Kabir Nath, he's Chief Executive Officer of Compass Pathways, joining us right here in studio. As we mentioned, we're going to stay in the pharmaceutical space.
That's right. We've got the CEO of AstraZeneca coming up in just a minute. We're going to talk results, tariffs, growth, and more with the CEO. That's next on Bloomberg Business Week Daily.
Order filled.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, all trading lower. But the NASDAQ 100 index just turning positive. Little changed, up under 0.1%. S&P down 11, keeping it all in context, down 0.2%. The S&P now at 63.78. The Dow down 208. A drop on the Dow of 0.5%, while the NASDAQ Composite Index is down 24. For NASDAQ, a decline right now of 0.1%. Our Mag 7 index down 0.3%. Four of the Mag 7 members will report this week. We'll be hearing from Microsoft and Meta tomorrow. Apple and Amazon will report on Thursday. 10-year yield 4.33%. The 2-year 3.88%. Gold up $15 the ounce, up 0.5%. And West Texas Intermediate crude oil is now surging by 4.1%. WTI 69.48 a barrel. Boeing managed to almost halt its cash burn in the second quarter, indicating that a turnaround initiated by CEO Kelly Ortberg a year ago is paying off as the company delivers more aircraft, but Boeing shares down now by almost 4%. Elsewhere in the airline industry, JetBlue Airways higher after the carrier posted a smaller than expected loss in the second quarter. JetBlue up by 3.9%. American down 1.1% among other carriers. United down 1.8%, and Delta down now by just about 2.2%. And President Trump says he will give Russia 10 more days from today to reach a truce with Ukraine, formally announcing a new deadline to pressure Vladimir Putin on ending the war. Recapping S&P down 0.2. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, as you know, tariff talks continuing, as do presidential statements about more manufacturing back here in the United States. The pharmaceutical industry among the latest to be targeted by President Trump, who made comments Monday from Scotland.
Order filled.
We'll be announcing on pharmaceuticals sometime in the very near future. We have a very big plan on pharmaceuticals. We want to bring a lot of the pharmaceuticals back to America, where they should be. We're going to want to be making a lot of them ourselves, all of them in a sense. But you also have a good pharmaceutical business. We'll be dealing with you on pharmaceuticals.
All right, that, of course, was President Trump on Monday from Scotland. We've got a great voice on this and really the overall pharma industry, Big Pharma, a company that reported earnings earlier today. We're talking about AstraZeneca. ADRs of the company, by the way, are rallying more than 4% in today's session. Great to have with us in studio Pascal Soriot. He is AstraZeneca's Chief Executive Officer, also with us, a member of our editorial team here at Bloomberg, knows this company and industry so well as Bloomberg News health reporter Madison Muller. Pascal, by the way, also former CEO of Genentech. Thank you for joining us. Welcome.
Thank you for having me. It's really a pleasure. Thank you.
It's a pleasure for us. Big space, a space that's certainly garnered the attention of President Trump. I am curious, in terms of the president talking about more manufacturing in the United States, and I know you guys are making some further investments here. Talk to us about how presidential policy is impacting maybe your business.
Yeah, I think first of all, it's a great question, but first of all, it's important to really think about what every country would want to do. Every country would want to make sure they can secure the health of their citizens. It's a question of national security. So nobody should be surprised that the president wants to reshore manufacturing of pharmaceutical products. I personally have seen this happen since several years, and we decided several years ago to increase our manufacturing footprint in the US. So we can actually manufacture medicines for American patients in America. Every country would want to do that. And a big country like America, of course, can afford to do it.
You said that you made that decision several years ago. How much of the $50 billion pledge was planned before the president threatened these tariffs?
Well, we've been pursuing this strategy of manufacturing in China for China, in the US for the US, since 5-6 years. And quite frankly, COVID actually showed us we were on the right track, because we all saw what happened during COVID. And so we accelerated this movement. And so our $50 billion commitment is a commitment to R&D, but also a commitment to manufacturing. We announced together with the governor of Virginia a multi-billion-dollar investment in manufacturing in Virginia. And the governor of Virginia has been incredibly fast with his team, 33 days to reach an agreement. It's incredible. So we're very happy to be there. We are building a new R&D site in Kendall Square, Cambridge, Massachusetts, with 2,500 scientists that will be working there. And there's more to come. We are just finishing the build of a cell therapy manufacturing site in Rockville, Maryland. We've expanded in California. So it's a sort of a multi-pronged effort across many states across the U.S.
You know, you've said that Virginia obviously has made it easy to make manufacturing investments there, and North Carolina is pretty similar. Are there other states in the U.S. where you're having these types of good conversations that are, you know, incentivizing businesses like yours to invest?
Well, you know, it's hard for me to point at any state that is better than another. Let me just say that working.
We have no problem noting which states are better than others. We're all from different states.
What do you like more, New York or New Jersey?
Let me just say that a company like ours follow the science. So science is key. And so you need to be able to recruit the right scientists, the right engineers. And in Virginia, you can do this because you have some of the best universities. The other part is dealing with partners in the public sector that understand us, that we trust each other, we can move fast. You know, I always tell people in our company, talk about AstraZeneca speed, because there's a lot of competition, we need to move fast. I've learned Virginia speed. The governor has moved so quickly. So this is the kind of thing we want to see, whether it's in America, in a state, or in a country. We want speed, and we want people who understand how we think.
You want speed, you want people to understand how you think, you said you want to follow the science. There's been criticism that Robert F. Kennedy Jr., the Secretary of Health and Human Services, has not necessarily always followed the science with his comments when it comes to medicine, when it comes to drugs, when it comes to vaccines. How do you look at that and his role there?
Well, you know, I'm not here to actually get involved in political discourses. Let me just say that as a company, science is at the heart of everything we do. The reason we have such a large oncology pipeline in particular and beyond is because we're focused on science for the last 10, 12 years. And America is where science in our industry is happening. And that's why it's so critical to preserve this biosciences leadership the US has globally. China is also becoming a very big source of innovation in our industry. Europe, unfortunately, is falling behind for a variety of reasons. So innovation is happening here. We need to keep this going. We need to actually continue supporting the leadership, and that's why we invest $50 billion in this country, not only in manufacturing, but also in R&D.
What about China? I'd love for you to kind of explore that a little bit. What are you investing in and building out in China, and what might surprise our audience about the innovation that's happening in China, especially when it comes to pharmaceuticals?
Yeah, I think, great question. I think we need to start with the hypothesis, the assumption that basically the more products or the more innovation exists in the world, the better it is for everybody, for every patient. Because if you're a patient with cancer, the only thing that you care about is to be cured, if you can be cured, right? And so innovation in China has really ramped up very rapidly in the last few years. China has gone from making generics to Me Too's to Me Too Plus, what we call Me Too Plus in our industry, to truly innovate these days and innovate in new technologies, in cell therapy, in siRNA, in many, many technologies. And so China has become the second engine of innovation, not as big as the US. The US remains the leader in that field, but China is ramping up very quickly.
Is the administration, with some of its, some would say, questionable disruptive policies, there's been a lot of reporting about scientists kind of leaving the United States and going elsewhere. Are you seeing signs of that, whether it's to Europe, to China, to elsewhere? Because of not supporting, you know, academia and academic universities. Some of that seems to be coming back, but
yeah, but you know, in these things, it's always difficult to discern what is anecdotal versus what is systemic. What we have seen in China is really a substantial return of scientists from the US, but also from the UK and elsewhere. But not because of policy, simply because they could see opportunities in China. There is money, there is capital that can be invested. The Chinese are willing to take risks. The government has facilitated the return of these scientists, and they've come back. But I can tell you that a lot of the scientists we work with in China, in biotech companies that we partner with, many of these people are American. They're American Chinese. I mean, they go back and forth, back and forth. They are a bridge between the US and China. But they've gone to China because of the opportunities to create a company, be funded, take risk, and hopefully be successful. And by and large, they've been quite successful. I want to say, though, that the leadership remains with the US, and we need to maintain this, of course. The country needs to maintain this.
There's been some concern, though, that companies like yours, not necessarily Astra, but big pharmaceutical companies are going to China for most of their biotech deals now. What would you say to that, and what would U.S. biotech companies need to do to sort of attract investments from you all?
I mean, the first thing I would say is that if you're a patient, you don't care. What you want is a drug that will help you, right? So when we do a deal with a Chinese company, typically it's because they've discovered a product and they need help to globalize it. Because discovering something in a lab is one thing. It doesn't require a huge amount of money. It requires very talented people, but the capital requirement is limited. When you want to develop globally, then you need the scale. You need billions of dollars of investment in phase 2, phase 3, and you need the scale. You need the people, the expertise. So what we do is we license in the product, and then we develop them globally, and then bring them to patients. So the innovation started in China, but becomes a global medicine for everybody. So it really benefits everybody around the world.
I want to go back to sort of a global domestic question, the idea of your listing. And the Times of London has said that AstraZeneca is looking to move its listing to the U.S. Are you going to do that?
Well,
you just share it with us.
Yeah, we don't comment on rumors. And, as a company over the last 10 years, we've had so many rumors. We don't comment on rumors. The only thing I will say really is the United States is really core to our company. By 2030, we expect 50% of our revenue to come out of the United States. Today, it's 44, 45%. Wow. We grew tremendously in the U.S. in the first half. The U.S. is the country that innovates, I just told you, but also the country that uptake the innovation faster. Patients benefit much faster. So we want to invest here and we want to grow here, and that is a very critical part of our company globally.
Just curious in terms of growth, we've talked about earnings, and your cancer drugs are certainly important in terms of growth. Where do you see kind of the most significant growth trends when it comes to pharmaceuticals? We've spent the last, Madison, last couple of years talking about the obesity drugs and weight loss drugs, but where do you see it? We talk often about genes and genetic and immunotherapy. Where do you see the real growth coming in the next, 5 to 10 years?
It's a great question, but it's almost all of the above. I mean, of course, managing,
check.
managing what I would call central or abdominal fat, because everybody talks about obesity. What really matters is how much fat do you have in your abdomen that surrounds your liver, your pancreas, your heart, and creates inflammation and insulin resistance and all the consequences we can think about, hypertension and others. So this is really a big epidemic globally. We need to address that, and that's what companies like Lilly and Novo are doing today, and we want to do this with oral agents. But then, we have development in antibody drug conjugates. We have developments in bispecific antibodies for cancer. One of the most exciting new technology is cell therapy, because cell therapy will apply to hematology cancers, but also potentially solid tumors and immune diseases. We have now cases, small numbers, early days, but small cases that young women who suffer from lupus, which is a terrible disease.
I have a family member who has lupus.
Can be cured. Mm-hmm. I mean, these patients, their life is about taking drugs, steroids, with all the consequences you can imagine. Their organs are destroyed over time by the disease. They can be cured. You have people with myeloma that can be cured. And so as we progress this technology and make it more usable, more easily usable and more affordable, it can really transform many fields of medicine, from oncology to immunology.
I know you've had an amazing tenure at Astra, and there's sort of an obsession in the UK with your succession plans and what comes next. Not to say that you're leaving anytime soon.
We don't want you to go.
We don't want you to go. What do you want to accomplish before you end your tenure at Astra?
Well, one of the things is that I wanted to do is have a great team, and I have a great team. That's it. I have really a fantastic team, and that's why nobody should worry about my succession. We have a great team and people who can succeed me. So that's, I think, one thing, and we constantly try to improve the team, not only my direct reports, but their direct reports and the company as a whole. Two is the second piece is almost unachievable because science is never going to be stopping. And the more I progress, the older I get, the more science gets exciting, and the more excited you. I mean, there's no better time to be in our industry than now. There's so much innovation, so much hope to cure diseases that cannot be cured today. And the last thing was really to finish our site in Cambridge, because I keep joking internally. I want to have the two Cambridges, one in Cambridge, UK, one in Cambridge and Boston. But that's for the joke. But the most exciting really is the science and the pursuit of new technologies and new products that will make a difference and change the future of medicine. Yeah. So those are the things I want to address, but I have to accept at some point biology is going to catch up with me. And
unless you create a pill that keeps us going, I'm kind of keeping my fingers crossed. Exactly. GLP-1s, right? We think it's going to be cure-all. Pascal, we really enjoyed this.
Thank you so much for having me.
For all the time. Pascal Soriot, he is AstraZeneca's Chief Executive Officer and, of course, Bloomberg News' own health reporter, Madison Muller. Always a must-read on the Bloomberg and at Bloomberg.com.
Hey, taking a look at markets right now with just over an hour to close of equity trading here. Down 0.2% on the S&P 500, the Dow down 0.5 percentage point, the Nasdaq Composite down about 0.2%. Investors certainly have a lot to focus on this week when it comes to not just economic news, but also everything happening with earnings after the bell tomorrow and on Thursday. And then, of course, also from the Fed chair, that press conference that we hear tomorrow, Carol.
Yeah, it's going to keep us super busy. I'm Carol Massar along with Tim Stanovic. Let's get to some of the stocks on the move today. With us is Bloomberg News equities reporter Nora Melinda. Number one, what do you got?
So I'm looking at shares of Novo Nordisk. Of course, super fitting based on the conversation you just had here with the CEO of AstraZeneca. We're seeing shares of Novo Nordisk, though, that is ticker NVO. We're seeing them down for double-digit losses today. Really steep declines. It's actually its worst daily performance since 1987. And this is after the company had a steep cut to its outlook here. It's really having a lot of investors a little bit worried about its performance moving forward, especially because of the fact that it's really apparently struggling to find market share against the likes of Eli Lilly's drug, which is Zepbound. Of course, we know that Novo Nordisk really has Wegovy. They're struggling with sales there. But additionally, they did actually mention that they have a new CEO that will be coming. We knew that that was going to be a change that was made, but it's going to be an insider here. So that's kind of what I'm looking at in that space.
ADRs of Novo Nordisk down more than 21% right now. Palo Alto Networks, PANW, what's going on?
Absolutely. We're looking at shares of this company. They're also a bit lower right now, but it is in talks to acquire an Israeli cybersecurity provider, CyberArk Software. And they're saying that this could mark one of the biggest tech takeovers this year. So really interesting stuff as we're parsing through, and people are saying that it could potentially be finalized as soon as later this week. So really got all eyes on this company right now.
All right. Woohoo! I'm trying to make our railroad sound. The deal finally happening.
The deal finally happening.
I'll give you a B, Carol. That was pretty good. That one was good. A minus for that one.
I'll work on it. We got a railroad deal just quickly.
Of course, we have the deal between Union Pacific and Norfolk Southern here, which of course has been really long awaited here. $72 billion deal, cash and stock transaction. Lots of eyes on it, of course, here. This will be the biggest transcontinental railroad in the United States.
But both stocks down by a lot. So maybe because it's been out there for a lot.
Maybe it's old news now at this point, Carol.
I don't know. We like railroads.
Who doesn't?
Who doesn't? Nora, thank you so much. Bloomberg News equities reporter Nora Melinda. For more conversations, be sure to check out our Stock Movers podcast, 5-minute episodes, biggest winners and losers. You can find it anywhere you get your podcast. You can check out Apple, Spotify, and as we said, anywhere else you download them. That's going to do it for us this hour.
That is, but we are talking planes, trains, and automobiles, and this deal with Brooks Sutherland in just a few minutes. Also, we're talking trash with the president and COO of the company formerly known as Waste Management.
Love talking trash.
We do.
Literally trash. This is Bloomberg.
is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. British Prime Minister Keir Starmer is issuing an ultimatum to end the war in Gaza.
I can confirm the UK will recognise the State of Palestine by the United Nations General Assembly in September, unless the Israeli government takes substantive steps to end the appalling situation in Gaza.
The death toll in Gaza has now surpassed 60,000. For many Palestinians, it's too late. This man through an interpreter.
We've been dead for 5 months, alive but dead. No one cares about us. After we died, there's an announcement about us. Where have you been all this time? You don't care about us. Where are the human rights? Where is the European Union?
The leading international authority on food crises predicted today that there could be widespread death in Gaza without immediate action. Flags are flying at half-staff in New York after yesterday's deadly shooting. The suspect left behind a note apologizing and saying he had a degenerative brain disease. Mayor Eric Adams.
He appeared to have blamed the NFL for his injury. The NFL headquarters is located in the building at 345 Park Avenue.
The man stalked through the office tower, firing a rifle and killing 4 people, including a New York City police officer. CBS's Anna Schechter reports it's the latest in a string of violent attacks nationwide.
We just saw the data come out for 2024 in terms of violent crimes, and homicide is down, aggravated assault is down. It's trending down towards pre-pandemic levels. But, you know, it really doesn't feel like that to a lot of Americans who are experiencing these. And I think it's important to continue to press law enforcement on tactics, on training, and on preparedness, since this continues to happen so often.
It is steamy in much of the nation again today. Millions of Americans are looking for a way to stay cool. Charlie Shaw is a lifeguard in Grand Rapids, Wisconsin.
I am burning up out here. On our breaks, we jump in from time to time, which is really nice for keeping us cool.
Administration officials said today trade talks with China in Stockholm have been very constructive. But President Trump will make the final call on an agreement. American consumers were feeling a little more optimistic this month. Business reporter Jason Brooks.
July consumer confidence rose from June as short-term expectations improved for income, business, and labor market conditions, with sentiment greatly aided by the stock market rally, which has lifted the S&P 500 to a record high.
Stocks are off those highs today ahead of this week's Fed decision on interest rates. The Dow is lower. This is CBS News. An LA Lakers star heads to training camp leaner and meaner than ever, as Deborah Rodriguez reports.
Number 77.
Clips of Luka Doncic's newly toned body are posted to social media to go along with his story in Men's Health that details the diet and fitness routine that's helped him lose weight and add muscle. The 26-year-old has been criticized for his weight and conditioning. Doncic says he's worked with a physiotherapist and a nutritionist in the off-season to get into the best shape of his life. His new regimen includes fasting for almost 16 consecutive hours a day and eating a high-protein, low-carb diet. His workouts include weightlifting and resistance band training. Deborah Rodriguez, CBS News.
Doncic played in just 50 games last season, the lowest of his career, and for the first time in years didn't make the All-Star or the All-NBA team. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just under 55 minutes away from the closing bell on this Tuesday, July 29th. Carol Massar, Tim Stenovec, live in our Bloomberg Interactive Broker studio at Bloomberg headquarters in New York City. Not going to be a record on the S&P today.
No, I also want to say, if you're just tuning in and you missed our last hour, go check out our podcast feed.
Don't leave yet.
Don't leave. But we had some great interviews, including with Pascal Soriot, the Chief Executive Officer of AstraZeneca. We also talked psychedelics with the CEO of Compass Pathways. Some really interesting stuff just in the last hour. Hey, and we're going to have some great stuff over this next 2 hours.
Of the pharma spectrum, right?
Yeah.
Kind of a company working on FDA approval, like their main drug, and then one that's been around for a long time.
An established player with more than 100,000 employees around the world.
Okay, I interrupted.
That's okay.
Say it again, Sam.
Planes, trains, and automobials.
I love that.
We get to the bottom of it all with Brooke Sutherland. That was all you this morning on our editorial call.
Team effort, team effort. Blah, 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 blah. Try that again. We're going to talk trash with the president and CEO of the company formerly known as Waste Management. They are WM. Looking forward to that. I have so many questions about recycling, about microplastics, about where is all this trash going?
Recycling, good. Microplastics, bad. Any other questions?
We're going to start there.
Okay. I can tell you that. Also, a tale of two drug companies. Novo Nordisk ADRs plunging the most since 1987. Sarepta Therapeutics surging. We're going to have a roundtable with two star members of the Bloomberg News team just a little bit later.
All right, let's get to the markets. We are kind of bumping along our lows of this session. Let's toss things over to Charlie Powell.
I thank you very much indeed. Novo Nordisk certainly captures your attention. That stock right now down 21.2%. This on a down day for the rest of the market. 53 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all declining. S&P putting it all in context, down 14 right now, down 0.2%. Dow Industrials down 211 now, down 0.5%. As Carol mentioned, S&P retreating from a record. We've got NASDAQ down 38, drop there of 0.2%. I'm focused on our Mag 7 index. That is down 0.4%. 4 out of the 7 Mag 7 stocks that make up that index do report this week. Microsoft, Meta, they are reporting tomorrow. Fed Day, Apple, and Amazon, they report on Thursday. 10-year, 4.33%, with the 2-year right now, 3.8%. Gold up $11 the ounce, up 0.4%. And a surge in crude oil, WTI $69.44 a barrel, up now by just about 4.1%. Well, Wall Street's scattered attention shifts to the Federal Reserve tomorrow. That decision 2 o'clock Wall Street time. Nisha Patel is fixed income portfolio manager at Parametric Portfolio Associates, and she was a guest on Bloomberg Surveillance.
I think the Fed could be in a place by fall, late fall, to start cutting. And I think that narrative could be, one cut, talking about it, could be that pivot that could possibly send yields, certainly a little bit lower than where we are today, no doubt about it.
Nisha Patel of Parametric, and again, the 10-year 4.33%. Briefly after earnings, United Parcel Service, UPS, down 9.3%. Rival FedEx down 2.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Carol summed it up well on our editorial call this morning when she said, let's get Brooke Sutherland on to talk planes, trains, and automobiles.
I love Brooke.
We all love
She
Brooke.
knows this space
That's
so well.
why she's here with us. I just want to give everyone an idea of the planes part of this.
Mm-hmm.
Boeing almost halted its cash burn in the second quarter and it reported a smaller than expected loss. The trains portion of this is Union Pacific agreeing to acquire Norfolk Southern in a $72 billion cash and stock transaction. And automobiles, we have to stretch this one a little bit.
I know.
It's okay. UPS shares tumbled after the company said economic volatility continues to roil its operations. But hey, they got a lot of trucks, Carol.
Mm-hmm.
So I think it's fair to say it counts as automobiles.
All right, so let's get to it. Let's get to Brooke Sutherland. She is Bloomberg News Boston Bureau Chief, writer of the Bloomberg Industrial Strength newsletter, and she joins us from the Boston Bureau. Brooke, we do want to start with trains, mega merger. Why is this the right time for a deal, especially on a day when Norfolk, their shares are down? They lowered their outlook for full year revenue growth. I mean, is this combination going to make it better?
That's certainly the hope. And, frankly, I really think the railroad industry is out of better ideas to grow at this point. We've really seen stagnating or even declining volumes in the rail industry in recent years, just given the competition from the trucking industry in particular. If you think about it, trucks can go pretty much wherever they want. There's your automobile reference there, Tim. But
thank you.
Versus trains are really limited to the tracks that they have, and that does put them at a bit of a competitive disadvantage, even though there are advantages in other respects for trains. They tend to be more energy efficient. They tend to be less costly. And so, I think the railroads are thinking to really chip away at that market share hold that the trucking industry has. They have to make things more efficient for their customers. And the idea would be that if you could set up a network that's truly coast to coast, from California to New York, that would take out some of those pain points that turn customers off from the railroad industry.
I was struck on Friday when we spoke to Kyle Porter, and I read his piece on this, Brooke, that this would be the only U.S. transcontinental railroad.
It would.
It would. And that's a result of, the past, 150 plus years of antitrust action? Is that why?
There's really been a lot of consolidation in the railroad industry. We've just more recently sort of been in this period of pause, partly just because it had consolidated so much. But you did see, a little bit of a step forward with Canadian Pacific ultimately buying Kansas City Southern. And that, I guess, sort of has started the wheels grinding again in terms of could even more consolidation be possible in this industry. I do still think that that's a bit of an open question of how regulators will respond to this deal. That Kansas City Southern deal was approved under sort of a loophole to these tougher 2001 merger rules that the rail industry's primary regulator has adopted that requires any merger to benefit the public interest. So it's not enough just to show that you are preserving competition. You have to actually enhance competition and provide proof that you're actually benefiting communities and the greater public interest. And so that's a very high bar that has of yet not actually been met. And so, Union Pacific and Northern Southern are betting on, a more welcoming regulatory landscape that might finally allow a deal like this to come to fruition, but we really don't know.
It ain't done till it's done, right?
Exactly.
All right, let's go to UPS. Just because shares have been tumbling after the company said economic volatility continues to roil its operations. UPS is another great indicator on the U.S. economy, so I'm trying to make sense of economy versus company specific.
I think it's a mix of both. I think if you look at UPS's business in particular, they are uniquely affected by some of the trade dynamics that we've seen, particularly, the
Hey, Snooze, this is the evals. I'm done working PA.
They really are struggling in their business. I mean, this is an area
I'm just playing around with the empty evals I have in the 5-pack.
And you had, UPS and FedEx really.
Yeah, PA's good. I'll prove it. Hold on.
And now we're on the other side of that. As consumers have shifted their spending back to services, UPS is trying to cut costs to be competitive after that labor deal that it struck earlier. And, I think you're really seeing sort of a confluence.
Hey, all right. All right, SM.
So no.
Good luck, man. I hope you like it.
I mean, it is a massive lack of visibility.
It is unusual, although we have heard.
I need,
from other companies.
I got to get to 67 or 6,600 in 30 days. This is only my second day, though.
Committing to that growth outlook. We have seen, companies go ahead and put guidance.
That's a good deal. If you work night shift, you can trade during the day and then go work.
In the back half of the year, and they're taking more of a wait and see approach.
Yeah, I was particularly surprised about this one, Brooke, because we did have the airlines come out about.
I have to do 30 days.
Talked about Delta, and then,
this is day 2. Day 2, I'm at 2,124.
They essentially turned a corner, and they're talking about how great things are. Yet we're not seeing that or hearing that.
I only took like 2 trades.
Look, these are apples and oranges when we talk about the businesses here. But what is unique about UPS's business that
my first one I got stopped out, and then I waited, and then I made my money.
For the airlines either, they've been willing to put guidance back out there, but the guidance that they have moved forward with is lower.
Now I'm just playing around with the evals.
Came into the picture, and of course we did see that demand pull back in the immediate aftermath of the tariffs, and some of the airlines, particularly those with businesses that cater more to premium flyers, business travelers, are
to just
expecting
get this
more of a
done,
rebound in the back
then
half
I don't
of
have
the
to
year.
mess around anymore.
But that uncertainty is still there and is still impacting the airlines. just in different ways. And so, I think to UPS's point, there are a number of different factors here, and their business is uniquely affected by tariffs because it's much more direct. With airlines, what you're looking at is sort of more indirect consequences as consumers feel the pain from inflation.
Is it like a high-end restaurant, or is it a bar, or what kind of place is it,
All right,
SM?
well, speaking of airlines, let's talk about one company that provides those narrow and wide-body jets, and that is Boeing. Shares down 4% today. Julie Johnson reporting that Boeing almost halted its cash burn in the second quarter, indicating a turnaround
Deep
initiated
dish
by
pizza.
Kelly Ortberg a year ago
Cool.
is paying off as the company delivers more aircraft. One thing that I've noticed about Boeing over the last few months is the way that they're being used as this bargaining chip when it comes to trade
Chicago deep
negotiations.
dish
And
pizza.
I'm wondering, Brooke, in your view, how much of a boon could
I haven't
that
had
be
that in a
for
long
the
time.
company that's trying to turn itself around?
It's definitely a benefit. And what's interesting is that in Trump's last trade war, Boeing frequently complained about being used as a pawn. We saw China,
There we
more or
go.
less halt new
Boom.
orders of Boeing planes as a way of exerting leverage in those trade negotiations. And now, the shoe is somewhat on the other foot, and we see countries more or less tripping over themselves to, trumpet their purchases of Boeing planes. This is one of the highest value exports that the U.S. has, and so as a means of sort of chipping away at that trade deficit, a big Boeing airplane purchase can really go a long ways.
So Boeing, every time I feel like, the stock's down 4% today. Thoughts in terms of the outlook and what we kind of need to continue to focus on with this one? Is it all just about orders? It's also about
Let's
making
go,
sure no other issues
boom.
with their planes.
Is this the first job you've ever had, SM?
I think
Is it
that
like
might
the
be
first
a
real
little
job?
bit profit taking here. We have seen, a pretty good rally in Boeing shares heading into earnings. This was a very good quarter for them, especially just given all of the cash flow challenges that they had. And I think now, the question is they've got to keep doing this. They've got to keep chugging along. But is this the best stock to own in aerospace right now, or are there potentially other opportunities out there? And I think that's some of what's
Smackdown
coming
is
out
pretty
in
hard.
investors' minds right now.
Yeah, definitely a good point. The stock is up nearly 30% year to date, so it really has had quite a bounce back after having a really tough time for a while. Brooke, thank you so much. We did it around the world when it comes to transportation, and then some. Brooke Sutherland, of course, Bloomberg News Boston Bureau Chief, joining us there from our Boston Bureau.
The Peanut Gallery, Matt Miller, getting in touch with us. He said Stellantis would have been a good choice to do for our automobiles segment.
Oh, yeah. Well,
The company
thanks, Matt.
reported its estimate of 2025 net tariff impact to about $1.73 billion. 300 million euros of that was occurred in the first half of 2025.
We should point out JetBlue, though, coming out with a smaller than expected
Should have took it off when I
loss.
had
That was
1,200,
earlier today, and
but
that stock's
I'm
up
kind of
about
swinging for the
5%. So
fences.
one more. Planes, trains, and automobiles.
Because you should be short. I'm just playing around with the evals right now. I'm just trying to catch a big swing. I'm trying to front run a big swing just to get my evals. Yeah, the box is short. So you should be short, but I pin the fact that I'm playing with the evals right now. So I'm just trying to take a big swing on the evals. I already made my money today on the PA. I'll show you. See, the PA, I've already made my money. I made $12.20 on the PA. So I've got these two other evals I'm just trying to qualify. So yeah, so there, it's not real. It's the eval. You can do what you want. So I just basically front ran it, hoping I would get the rotation along and be in a good spot and catch the whole long back to the VWAP. But I'm not sure it's going to work out. That's why I'm long way down here. But you should be going short off the 20 EMA if the box is fully read. Oh shit, we're at 320 now. I didn't know it was that late. All right, maybe we'll catch the run up. That would be outstanding. I'm gonna go all the way. I bet we go all the way back up to the 200 EMA. Right here. That's where I'm saying we're going. That's what I'm calling out. That's my shot. So that's why I pinned it. I didn't want anybody to like take the same trade I'm taking or whatever if they don't know I'm on an EV. I think that there's more of an open type of thing. What do you mean? I think that's more of an open type of thing. The run. Oh, you think so? I don't know. We're going to find out. It ran up nice yesterday. We just need to go up and touch that 200 EMA and I'll be just happy. 321. I'm hoping I don't get stopped out before. It's been down. It's been 2 down days in a row. And then a quick recover. See, I'm hoping if the shorts start closing, it'll push it up. You know what I mean? So I'm hoping I'm in early enough.
It's 3:21 on Wall Street. We do check markets all day long here.
I'm thinking that's where I'm on that side of the MOC right now.
About high valuations overshadowing hopes for an extension of a tariff.
Might as well move the stop down. If I get a drop, I don't want to get out.
S&P 500 index right now is down 15 to 60.
I'm on the green side. My MOC bet is green.
216 drop there of just about 0.5%, while Nasdaq is down 44 for the Nasdaq Composite Index, a decline of 0.2%. The Mag 7 Index down 0.3% with a 10-year currently yielding 4.32%. The 2-year 3.875%. Gold up $12.50 the ounce, up 0.4%, while West
All right,
Texas
well, maybe this is.
crude up
I just got closed out.
69.31 a barrel on WTI. Novo Nordisk ADRs are plunging 21.4% after slashing its financial forecast in a surprise update that cited lagging sales of its weight loss drug Wegovy as the company loses ground to Eli Lilly in the obesity market. Novo Nordisk also named its head of international operations as the next CEO. Again, ADRs are down 21.4%. United Health Group is warning its annual profit is likely to be hit harder than Wall Street was expecting, the latest in a series of disappointments from an insurer once known for its reliable growth and predictability. United Health down now by 6%. Recapping, S&P down 16, down 0.3%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie.
All right, I'm going to go long again, but I'm going to pick a point.
5.5% today. It's the most intraday going back to late January. This
I'm on a fresh
the
one.
Garbage collection and recycling company posted second quarter results that beat estimates. It was helped by strong landfill volumes that benefited from wildfire cleanup in California. There's no other way to say it. John Morris loves trash. He's president and COO of WM. It's formerly known as Waste Management. Just to give you an idea of the context and how big this company is, it's got more
When
than
do you think we're
500
going long
solid
right
medical
now?
waste facilities, more than 260 active solid waste landfills, more
filled.
than 100 recycling facilities, close to 500 hauling operations, and more than 60,000 employees. John joins us from Houston, Texas, where Waste Management is headquartered. John, good to have you with us. How are you?
I'm good. I'm great. Thanks for having me today.
Hey, thanks for joining us. Carol and I love talking to executives in this space.
We do.
We find it super interesting, especially given the way
How many
that
points is that?
the companies
40?
do or don't respond to economic conditions. So just give us an idea about the way you can I don't know, think about the economy right now from the perspective of trash.
Well, I think it's a great question. I think in a lot of ways we're a recession-resistant business, but there are certainly segments of the business where I think we're lagging and leading. And you mentioned our landfill volume. That's certainly one where we had a strong quarter and really a strong number of quarters which would suggest there's still some strength in the economy. If you look at our MSW volumes, our construction volumes, they were pretty strong for the quarter. And as you mentioned, some of the special waste volumes were particularly strong this quarter as we benefited from some of the event work you mentioned.
Anything that in terms of presidential policy and things being done, whether it's the EPA and other environmental issues that certainly
Not yet.
play into
Well, it's
your
a little
space.
too late. Shit, I didn't see that. I got leads I'm working too.
I think for the most part,
I got a
we're
couple more of
regulated
these.
at
I
a state
can,
or
I can
provincial
keep
level
burning
if you
these.
look at our business up in Canada. From an EPA perspective, the one topic that gets, the one acronym that gets a lot of attention is PFAS. So we've been following that at a federal level very closely to make sure that we've got a seat at the table in terms of the which way the legislation may or may not go and how that would affect the industry and more importantly, our customers.
What does it mean having a seat at the table? What is it that you want to see happen? And what are you guys doing to protect all of us? Because I think we've done some reporting here at Bloomberg about various landfills and seepage and what it does and ground fires and different things that certainly impact environments.
Sure. What I would tell you is, as you mentioned, we have over 260 active landfills in the portfolio. And we're super proud of
326.
our environmental record with those facilities. The one area I mentioned, PFAS, really has to do with some contaminants that could make their way into some of the materials we manage. But we're very confident in our ability to handle those inside of our facilities and make sure that they don't leave our facilities. And PFAS is one of those topics that's got a lot of attention. And when I say seat at the table, the one thing we've been very active in is making sure that there's this concept of a passive receivership, which we've been very vocal about. We don't produce PFAS. We've never produced it, but we manage a lot of material that can have some of it in there. So we want to make sure that, the EPA has recognized our landfills as being a repository, a safe repository for those. We just want to make sure that this passive receivership concept gets some attention in those conversations.
And in case you don't know, PFAS are these man-made chemicals. They don't break down. They're in nonstick cookware. They're in food packaging. They're in a lot of things. But when you say about containing and managing, what does that mean? Are they stored somewhere? And
I'm betting that MOC is going to be long.
Well, it
That's-
depends.
that's
Nobody's
my
ever
game.
actually showed me a load of PFAS. But as
All
you
right, I'm in
mentioned,
for
there's
10
got some of the
contracts long.
materials that we manage. And when you think about our landfills, we look at those as safe repositories where we manage the material goes in. And with respect to this conversation, more importantly, we can contain those materials inside the facility and make sure that there's not a release of those contaminants.
But that basically means they're stored somewhere.
I
either
don't
underground
know.
or
We're going to
whatever,
find out.
correct? And the idea is that it never gets broken and never comes out.
There are some technologies that we're working with right now in order to manage some of the waste and make sure that PFAS doesn't escape from inside of our facilities. But to your point, the question is whether if they're coming in a waste stream, that we can make sure we can safely contain those inside our facilities and make sure that either through air or through the liquids we manage that it doesn't leave the facility.
John, I got to ask you, I've got a 22-year-old at home that already is telling me how my generation is messing up the world for them. So I have to ask these questions.
Thanks, Carol. for
You're
doing
welcome.
that. And I thank you to your daughter, though, by the way, because she's going to fix it all.
She's a tough cookie.
So, John, this is a very acquisitive business. And in fact, there's an entire page on.
You're right, though, Hazard, Matt.
About acquisitions and divestitures.
This is not a good idea. You should not. This is
now,
just
and there's a
playing
western tier to
around
get in
because
touch with an
if the
eastern
buying
tier
comes in,
to
it'll
get
go
in
right
touch
to the
with. How are you
VWAP,
thinking
and that's
about
all I'm doing.
acquisitions for the remainder of this year and for next year.
Oh yeah, I'm just trying to be in before MOC. You know what I'm saying, Snooze? Like I'm in now, so I'm either gonna blow this out, or I'm gonna be up like 10 grand on it or something.
Certainly over the last number of years.
One or the other.
And this year, we've, as we mentioned earlier today in the earnings call, we expect to be
Well,
over $500 million
trading like this is.
tuck-in acquisitions, where we're
You know what
buying
I'm saying?
smaller or regional companies.
That's why they give you
benefiting
5.
from some of the synergies that come from the SG&A lines and also from the
To act, so you can act like a fool on a couple of them.
Geographically, what areas are of interest to you?
Honestly, we kind of keep an open aperture, but what we want to do is look for acquisitions where we can, 1 and 1 equals more than 2, if you will.
This is what I'm doing is gambling, but it's not real money either, so it's not even really gambling.
Areas across the U.S. and Canada.
Well, yeah. Well, I mean, you can say that about anything in life, Hazard, Matt.
into a portfolio.
You know, like
concept
SM can say he's betting that this job is going to be really good for him. You know, you can say I'm betting on something and make a decision.
Gave you entry into
You know what I mean?
Is that an area that you wish to grow in?
It doesn't make
Well,
it
right
gambling.
now, we just,
Gambling.
obviously, we purchased.
It's not like
what
you
we're
know.
calling WM Healthcare Services, which was formerly Stericycle. Terrific set of assets.
If I lose this, I'm not really losing anything because I got 3 more tries. You know what I mean? It's, you know, where if I did this on the PA, that's gambling and they would never. What?
And more importantly,
you know, the PA, I would never get through to live if I did something like this. I'm just doing it to see if I can just qualify it real quick because I got the free spin. I'm free rolling, baby.
How does technology, and I'm just thinking about AI, like what's the role of it in your world?
You know, it's a great question, Carol. We've talked a lot about that. We had an investor day a handful of weeks ago up in New York, and a lot of what we talked about was using technology, whether you define it through AI or automation or optimization. There's a lot of phrases you use around it. But one of the things that's unique is, you know, we still see.
All right, 3:31. Got 19 minutes till MOC.
Jobs, which we have obviously probably about 40,000 of those. So we've been looking at ways to take
Come on.
technology broadly.
You can do it.
And
Hold
use that to
yourself up.
augment our labor force.
Be
One, we can
respectful.
upskill a lot of the folks we have on
How many
our team
points do
today.
I got to the
But
view
reality
app?
is that we
It's
have
I'm on
seen a strain
66.
in terms of what that workforce is going to look
It's
like in the future. So
34,
this has really been
44.
about future-proofing our business in the short term, but also over time using automation, using
53.
technology.
What's
actually to
53 points on
structurally
10
lower the cost of our
contracts?
operating model, and as we've said, modernize it.
Well, I'm getting out at the 200.
Advantage in the space.
Carol and I are obsessed
What's 53
with
points?
self-driving cars, and I'm wondering when this technology, if you're testing it, when it comes to WM vehicles that haul trash, are we getting to a period of time where this part will be automated?
Because I also saw, like, I was recently outside Charleston, South Carolina, and I think it was the recycling. There was somebody
If
driving.
I go hit my
but it
stop,
was
I'll
all
have about
automated. It
10,000,
just
or hit
picked
my
up,
take profit. It's 10,000.
The trash container and just put it in. Like this person didn't even have to get out. I was kind of, I know, I could have been on the beach,
So
but this is what I was watching.
Well, I happen to have a home in Charleston. That's a great part of the country. I would tell you that there's different phases. So to answer the question, Tim, the technology out there, if you think about autonomy, it's there. If you look at the mining industry and some of those places, there's autonomous equipment running out there now. We're actually piloting some remote heavy equipment operations at a few of our facilities. And I think there's also over-the-road technology, probably more for the long-haul tractor-trailer combination, where that technology is more advanced. But I think the answer to your question is we are looking at opportunities, whether it's on remote equipment operation or certainly the pathway to autonomy. But to your point, there's also, the point that Carol made is an important one. There's also components of the jobs that used to be very manually reliant are now being automated. And I think the example you gave is a great one where, you used to have 2 folks on the back of a truck kind of tossing the material into the
Stop
back.
loss?
Well, now we have one person in there and it's a fully automated job. And that's
Negatives
important because it does a couple things. One, it makes the job less physically.
Oh,
demanding.
stop loss
It
is way
certainly
down there.
reduces
Yeah.
our
I don't even know where it's at. It doesn't
dependency.
matter
And
until
it also makes the
I
makes
move-
the job a little bit more appealing.
We're either
When you
going to
look at
blow
what's
up or we're going to
happening
hit
in the
10
company,
grand.
we are experiencing
Well, it's an
lowest
eval,
turnover rates
man.
we've
It's
seen in
it's
an
not.
industry that's been 25 to 30%. We're now sub
It's
20.
lost.
So there's
I
a
think it's-
confluence of where all these technology
right there.
advancements are benefiting us. And I do think down the road we're going to continue to press.
I don't
on
want it to get hit if
operation
it snaps
as
down,
well
though. I
as
just want to,
autonomous capabilities.
as long as the
All right,
account's
John,
alive, I want to
just
go
got
for the
about
long.
50 seconds left here. I mean, I've got a recycling bin. I've got another bin. I know Tim's got a compost bin. How much really gets recycled? Because we've had some reality checks here. And forgive me for just giving you about 40 seconds here.
No, that's okay. Well, we are and have been the largest recycler in North America for decades, and we manage about 12 million tons a year. About half of that gets processed directly in one of our facilities, and half of it we manage for some of our big customers. Generally, when you put material into one of our traditional single stream recycling facilities,
Yeah, I know.
actually
It's
done a
not
great
looking
job
good, huh? I didn't like how that
customers
candle
and the
looked.
technology providers to really get that.
But we're
residual
way
rate down 7
oversold.
to 20%. So
Stochastics
think
are
about
ready to
about
head
100%
up.
of the recycling that goes in.
Right.
About 17 or 18%
In Asia,
come out
like
as
tonight?
residual. The rest of it, Carol, though, in our facilities is absolutely recycled.
Good to
Oh,
know.
fuck
I'm going to
me.
save you 10, 15 seconds. If you have one piece of advice about what we do with our garbage,
I
that would
used to
make
do that. I don't do it
a better
anymore.
process for you guys and maybe help clean up our environment, what would it be?
You think we're going up or down?
I think it's what you just mentioned. It's the fact that we can do a lot in partnership with our customers, both
Oh, I
residential
fucked
and
up.
commercial,
Look at this.
to recycle right.
I
And
fucked
one
up
of the things we
bad.
talk about
Okay.
is we're always working for a sustainable tomorrow.
John Morris, thank you so much. So appreciate it. President and Chief Operating Officer at WM joining us on Business Week Daily.
Honestly, I don't even like doing this. I'm only doing it because I have them. Very big red line. Can we go to the VWAP first before we do that? Let's go to the VWAP right now, and then we can do that. Oh, I just blew out my stop. I still got a little left on this one. No, I'm out. Holy shit, dude. This is crazy. What's up with this drop? What do I got left? 66. And 66. All right, let me know when we're going up. I'm gonna tune it up again. Now? Oh shit, dude. Now we're going up. All right, hold on.
Order filled.
All right. In snooze, I believe. Oh no, Hazard Matt said that. I believe in you, Hazard Matt.
Order filled. Order filled. Order filled. Order
All right, I'm in.
filled.
VWAP or bust. Oh shit, I'm already near my stop. Get out.
Stop filled.
Oh, I hit my stop, you fucker. This is crazy. Alright, now when? Now when? Like now? Alright, you call it. When? Try and catch. Alright,
Order filled.
there you go. We got to get up to 10 though. Let me set my stops and my take profits. This is some degenerate stuff going on right now. All right. Want me add now or no? Let me know when to add. I'll hit it. I'm over the button. Okay. Never tell me the odds. We add. Oh, man, I want to add.
It's 3:40 on Wall Street.
You got to make more than a
Markets
couple hundred,
all
dude.
day long here at Bloomberg. Stocks lower ahead of the Fed decision. 2 o'clock Wall Street time tomorrow. We got you covered here on Bloomberg. But right now, let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
Good afternoon, Charlie. That's right. U.S. stocks are trading in the red right now, with the Dow currently down 260 points. S&Ps are lower by 25, and NASDAQ declines by 0.4%. The U.S. 10-year yield is at 4.33. Gold and oil are in the green, and Bitcoin, that's lower by 0.4%. Among the main 11 S&P sectors, leaders were real estate and energy. Industrials were under pressure, and leaders to the upside in the Dow, Travelers and Coca-Cola, while UNH fell 6% after earnings and led to the downside.
This is not
Also, after
scientific.
earnings, Corning rose 12%, while Spotify fell 10%. And in deal news, Union Pacific is buying Norfolk Southern for $320 a share, and the Wall Street Journal reported that Palo Alto Networks nears a deal for CyberArk. Wrapping things up, Seagate, Visa, Starbucks all report after the bell.
All right, we're all in.
Live from the first breaking news desk, I'm Bill Maloney. Charlie.
We're running.
Thank you very much, Bill. And here live.
We're running for the
breaking news
moon.
Over your Bloomberg type squawk.
Let's go to the moon.
Pay on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, this is nothing. This doesn't mean anything.
Oh, no. This is not a toy.
You're running your pockets.
Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
All right, here we go. You got to hold this level or I'm fucked. All right, I'm in at 35.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes to go.
Think we can go all the way to
trade
2400?
on this Tuesday. It's kind of FOMC Eve because we know the Fed
Can
is
we
meeting.
call it a Fed Tuesday?
25. Yeah, I'm way over.
It is
All right.
kind of ish. They
Yeah,
began
boy,
their
this would be
QE
good if.
today.
Yeah.
Yeah.
If you're Jay Powell,
Yep.
every day is a Fed day.
Yeah, I guess it is. Some days
Or if
more.
you're
some
Mike McKee,
But
every
look
day's
here,
a
you
Fed
see,
day.
I got bundles of
Construction
5.
days, some days, I mean,
See, I've got all these
Talk about
accounts that I'm
we do
playing
have stocks
with.
hovering near their lows
Just so
of
you
the
know.
session. We did see.
Yeah, I'm
yields,
holding. Yeah,
tick
it's
down,
go or blow
a
now.
little bit. We had a lot of economic news that came our way. Let's get to.
So we got 8
Danielle
minutes till
Booth,
MOC.
Booth. She is
So
CEO
if
and Chief
MOC is
Strategist
going to
of
be a push to the
Applied
VWAP,
Research,
we're
formerly
looking
the
pretty
Dallas
good.
Fed, back here in our Bloomberg Interactive Brokers studio. Nice to have you here. How are you?
I'm doing very well today. How are you?
Doing okay.
Happy to be here, counting my
Do
blessings,
it.
happy my children are healthy, all of those
Let's go.
things.
Yeah, I agree, right? Like every day, those are the things that certainly matter and make us feel much better. Having said that, we're thinking about the Fed and kind of the plate that lays ahead of them.
We're at
that they're
8:43. I'm gonna go
considering
grab
right
my
now,
stop.
The plate of economic data, anecdotal data.
If we flash like 10, 11 grand, I'm
going
going to pull my stop loss behind
between
it.
U.S.-China talks, but it sounds like that hasn't been confirmed quite yet. What do you think is top of mind for the Fed as they are sitting in meeting?
You know, there's a lot going on. I think there's probably a sense of despondency and regret right now at the Fed. I think that the full array of data would have them cutting rates tomorrow, if not for. You know, the constancy of the humiliation coming out of the White House. So, I mean, you don't see the labor differential in the consumer confidence report decline for 7 months, which it did today. Jobs hard to get rose up to the highest since March of 2021. You don't see that outside of, we've never seen it outside of recession.
So what I'm hearing you say is that the pressure from the White House is, to cut rates is having the exact opposite
Run, baby,
effect
run.
on the Federal Reserve.
It absolutely is. I mean, at this point, it's kind of a matter of integrity because you don't want to appear that you're kowtowing, acquiescing, whatever you want to call it, but it's to the detriment of the real economy, and that's exactly what we're seeing. And for heaven's sake, it's on both sides of the dual mandate. When we had Case-Shiller hit this morning, 3 months ago, the 3-month annualized rate was plus 1.6%. This morning, the 3-month annualized rate was negative 3.73%. There is a fast decline in shelter inflation going on, and that is the biggest input to CPI. So the Fed is
How far can we go?
winning
6
big
minutes
on
till
the inflation
MOC.
front, and it is losing on the labor front.
So if the Fed can't cut tomorrow as a result of politics, 50 basis points in September and signal that they're doing that
Well,
in Jackson Hole?
Is it 2024?
It's not. It's 2025.
I know, but that would be an exact repeat now, wouldn't it?
It would be.
It would be an
And
exact
do you think they should
repeat.
do that?
I think they're going to end up doing that. And, you know, I'll add another little tidbit on politics. Just because Waller and Christopher Waller and Michelle Bowman are Trump appointees, I don't think that that should necessarily negate their expected dissents tomorrow.
Well, Jay
Because-
Powell's a Trump appointee.
Of course he was.
Yeah.
Of course he was. And to thumping Senate votes that were even almost as thumping when he was reconfirmed. So he's very much a bipartisan type of Fed chair. Again, it's a shame. It's a shame that they're not able to act tomorrow.
Danielle, do you think the presidential policies and certainly how they were presented in terms of tax cuts,
Yeah, we're pumping our bags.
that they would be good for the economy? And we certainly had a guest on yesterday who thinks that they will be somewhat stimulative and that the Fed doesn't necessarily need to be cutting rates at this point. And to be fair, we do have an extension on this U.S.-China trade deal, so we don't know exactly what this is going to play out. And to be fair, we do know that tariffs are going to be higher. They already have been.
Yeah, I know.
So-
It's going to take
so
off.
why wouldn't
I
it
might
be
get
smart
it.
for the
I
Fed
might
to
get all
maybe
of it.
Hold back until they really know what they're dealing with.
Got 4 minutes till
Because it would
MOC.
be terrible, right, to have the Fed cut and then have to
Yes,
raise
it
rates
would,
again.
And it would be Arthur Burns all over again and the redux. And I completely understand that. But your vacation intentions are falling. Hilton just announced negative 1.5% year over year for revenue per available room. Domestic air travel is down. Spending on services is down as much as it is. because
break
if there
through the
is
edge of
any
that
goods
cloud.
Inflation, there's simply, you can't squeeze blood out of a rock. There's only so much in a household budget when inflation adjusted earnings are falling, which they are. And underemployment is just off the Richter scale. So these are very real phenomena. And I promise you, the Fed is deliberating about all of them.
You said unemployment is off the Richter scale. Underemployment. Okay.
Underemployment. Just a few years ago, if you were going from where my mother lives in College Station to the Bush Airport in Houston, an Uber driver was making $90 for that particular ride. Making $35, $40.
You don't do any of this nonsense unless you're trading prop
Saturated with
firms.
individuals who
Yeah.
have exhausted their unemployment benefits.
Yeah, I
right?
know.
Their exhaustion rate
I
for
kind of got that
unemployment
feeling too. I
continuing
think,
jobless claimants
I
is
think, I think we're
39.6%.
getting
That
prepped
means
for
that
the Fed
39.6% of
announcement.
people who are among the almost 2 million continuing jobless
I think they
claimants
pushed the
haven't
market
been
down, and
informed
they're
what the
they're
states
getting
pay.
their
You better be
the
driving
big
for
money
Uber
is
or
getting
DoorDash.
their
I had this
position
exact
for the Fed
conversation at
announcement
Daniel's
because
Outlook
he may
with
come out and
Lyft
say we're
driver
cutting
in
rates.
San Diego when
If
we
that
were there,
happens,
Carol. He had
it's
been
going to blow
out
the
of work
lid off
since the
this whole thing.
pandemic. Highly qualified to work in.
All right,
I
2
believe,
minutes.
Aeronautical engineering and could not find a job.
2 minutes to the MOC.
Who would have said that 2 years ago?
Again, this is an anecdote coming from me. It's an
I'm just
anecdote.
gonna let that one get
understand,
taken out
but,
if it
you know,
does.
I have a rising college senior. I cannot tell you how many of his friends are coming to me and saying, I can't get a job, I can't get a job, I can't get a job. I couldn't get my internship was canceled. There's a hiring freeze. I mean, there's the class of 2024, the only thing that's better about it is that it's better than the class of 2025.
Yeah, I know. It's interesting anecdotal because I've seen the reporting too. And I too have a daughter who just graduated and she's got a job, thankful, and has since last fall. And all of her peers, they have gotten jobs. So it's like, I don't know. I'm trying to understand exactly where this economy is. The Atlanta Fed just coming out and upping its GDP forecast.
Yes,
Hold
I mean,
on, I'll
that
pull it up
export number
after
is
I
higher
close
than we
out of
thought
the
it was gonna
trade.
be. I mean, that's like GDP trade math. But who's not going to be paying attention to consumption when we see GDP in the morning?
But net, how do you see the Trump administration policies? Are they stimulative? They are certainly sold as being good for the U.S. economy.
Back to your
if
original
they
question.
Are,
1 minute. 1 minute to go.
Say their concern is that the Fed's
All right,
gonna
I'll
really
check it out in a
fall.
minute,
The
snooze.
assumption
Hold
is
on.
that the horse that we lead to water is going to drink.
If this
right?
takes off, I want to
Because
get in
the-
behind
the
2
thrust
weeks
of the bill
statistics
is
on that
preventing a
green
negative
trend
income
line.
shock.
So you think we're coiled and ready to go then, huh?
Such that the tax cuts do not expire at the end of this year. So you're preventing a negative income shock. You're certainly not sending money out into the economy in the sense that it was in the post-pandemic era, the CARES Act. That's not happening. So, I mean, maybe Uber and Lyft drivers are going to get a lift, right? Because they're not going to get taxed on those, on the tips that they make. But again, we are seeing consistent and
Here
persistent
we go.
declines
There it
in
is.
capital
Let's go.
expenditure plans.
Run, baby, run.
And so you can
Come
lead the
on.
horse to water, but can you make that horse drink?
So just 15 seconds.
Stop,
So
Phil.
the
Yeah, I
took that
valuations,
one
the
out.
record after record that we've seen in the S&P 500,
Up.
do you think
You're
that's not
supposed to go
warranted
up.
considering it sounds like...
I don't. Is hope a strategy?
So you would say no, we're overvalued and it's...
I would
Oh,
certainly
shit.
think so.
All right, gonna leave it there. Fun to have you here. Danielle DiMartino Booth, she's CEO and Chief Strategist of QI Research, joining us here. We
As long as it
counting you
doesn't
down to the
pop
close,
me
folks.
out,
We've
I'm
got about 11
okay.
minutes to go. We've seen stocks down for the day. Not going to be another record here for the S&P.
There we go. Come on. All right, so now we're counting down to the close. 10 minutes to the close. Don't consolidate too much. I'm up 15 points. I was up 30 though. You see how unhealthy this is? We're yelling at it like it's a racehorse. I know. This is unhealthy behavior. Oh, shit. All right, here we go. Yeah, no emotions when trading.
You're listening to Bloomberg Business Week.
I certainly do
with
better
Carol
when I don't
Nasser
use
and Tim
emotion.
Stennebeck on Bloomberg Radio.
All right, everybody.
Go to your
just under
home.
7
All right,
minutes
now
to
we're
wrap up
rolling.
The trade. We're going to head over to our TV colleagues in just a moment. We've got stocks.
All right, now we're
as you
looking
heard from
better.
the team, lower across the board. We're pretty much
tighten the screen
bumping
up.
along the bottom here. Keep in mind, we've got a bunch of earnings. We've got Mondelez.
That's our
booking,
target, way up there.
Caesars, Electronic Arts, Cheesecake Factory.
More volume. Yeah, here we go.
Visa, Starbucks, Frontier Communications.
Come
Avis,
on, let's
and
make it run.
It's 90.
There you go. All right, I got to grab my stop here.
Humidity in New York City right now.
It's not the heat, it's the humidity.
Anything over
No,
12,
it's
13 grand or
all
something, I'm okay with
It's
getting
one of
out.
those things you open, you go outside, and if you're lucky enough to have air conditioning, you're pretty comfortable in your home.
Yeah,
and
no,
then
I'm not yet. No.
like just a wall.
No, I think we break the 50 and make a run for the trend line there. I really do think we touch the 200 also.
Oh, actually, yeah, no, Path Train. It was
6
slow getting
minutes till the
into,
close. We got to get through these resistance. You know, it takes a little bit to get through the 20 and the 50 usually.
I mean, the subway platforms were so hot this morning. People were like looking at me like I had a sweating
How hot
problem.
were they,
Well,
Tim?
I don't know what I'm supposed to say there. But I mean, it's the type of thing where you have to bring a change of clothes.
Oh, no.
To the subway.
Yeah,
When you get to
What
work.
was that?
It's pretty nasty.
Yeah.
It's
Did I make it through the
It's a New
liquidation
York
candle?
City issue and other areas that are under a heat dome here. Let's move things over to California and talk.
That's
a little
good
bit
news
about
if I did. If that was the liquidation candle, we're good.
Are you talking about Nvidia?
Yep.
Yeah.
Wait, heat? You mean like heat as in wealth?
Oh yeah, I guess we could go with that. Two more
I thought
Nvidia
you were making a
executives
segue.
have
Apparently
gained
not.
10-figure fortunes as a result of the chipmaker's relentless growth, bringing the total number of billionaires of the company to half a dozen. We're talking about the CFO, Colette Kress, as well as Jay Puri, who oversees sales and marketing. Each now have net worths exceeding $1 billion. This according to the Bloomberg Billionaires Index.
I can't even get my head around that.
They say it's hard to achieve wealth without building something yourself, in the sense of like starting your own company.
Unless you work with it.
But this is a good example of, the bulk of their fortunes being tied to Nvidia stock hit a new high.
5
Monday,
minutes.
And earlier this month, it became the world's first $4 trillion company.
Got to say, Bloomberg Billionaires, they are
Oh, I
valuing
gotta
their
move my
wealth for the
stop.
first time. The chief financial officer, and Jay Puri. As you said, the company shares hitting a new high
this is
on
not good.
Monday.
Yeah,
Spokesperson,
this is not good.
spokesperson for the company not commenting, but
Yeah,
I mean,
very
it
bad.
really has to do with all of the money that is
This
going
is not
into
good.
AI and those companies that are at the forefront.
You're
the
out.
hyperscalers
Yeah,
and
it's
so
about
on and so
to
forth,
it's about to
that are
close my
providing the AI
trade.
backbone.
I can't take much
And
more of this.
Also, something like Alphabet that just
Yep.
has, I think about them.
I don't know who was sitting on the 20, but they had a shitload of
data
orders.
They have, or Meta.
Make it retarded.
And then, of course, NVIDIA just being the backbone. I mean, these are the guys.
I can't believe it didn't close my trade out.
They're the ones that have the most momentum.
Come on.
When you think about anybody
Fight.
who's associated and has shares,
Yeah.
especially their senior executives.
Or if you're
That's very true.
AI researchers. And Nvidia
Oh,
CEO
shit.
Wong
Oh,
was
well.
asked about eye-watering compensation deals being
Oh,
offered to
I'm
these
still
AI
in.
researchers. I mean, we're
Wait,
talking
let's see
about
if this
stories of $200 million
historic resistance will
and
hold
the
it
like.
up.
He said
Nope.
such enticements make sense.
It's all
given
nonsense.
The value of AI labs and what they can create. Here's
Oh
what he said,
no,
Carol.
there it goes.
I've created more billionaires on
Yeah.
my management team than any CEO in the world.
Yeah,
They're
I
doing
don't.
just
I'm not
fine.
feeling too good about this
They're
right
doing
now.
just fine. Yeah, I would say so, right?
We got 3
Get back in the
minutes
time machine
before the big show.
and go and be the 5th employee at Nvidia.
Yeah, exactly. Think it, put that. It's like a whole other scale. I mean, these
$4
whole
trillion
these companies.
company.
Yeah. Like we are just living in such a wild environment.
But 6 months ago, it was quite different. You and I were talking about DeepSeek and the challenges that NVIDIA faced there, the rocky start to
It's
the
a
year.
date
that
I
the
marked down in my
company had.
calendar because it was just one of those things that it just made us stop and say, well, wait a minute. So what if, there is another company that can do all of this less expensively and move ahead, and a Chinese company at that? And then what does it mean for all of these investments? But it seems like we're not worried right now.
Jensen's not worried. They're doing just fine, he said.
2 minutes.
Just fine. And with that, we're going to talk about a lot of earnings. We're going to cut you now to the close. We're heading over to our TV colleagues. Do not go anywhere. We've just got about 2.5 minutes to go, folks. The closing bell starts right now.
And we're going to break down
EMA.
all of today's equity market action and break down all of the earnings results coming up right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Scarlet Fu, taking you through to that closing bell with a global simulcast. Carol Massa
Just need a
and
little,
Tim Stanovic
little.
join us from the radio booth.
Come on.
Welcome to our audience.
Close those
across all of
shorts
our
out.
Bloomberg
Let's go.
platforms, including our partnership with YouTube. A rare down day for the S&P 500 after 6 straight record highs. A bit of a pullback today, down 0.3%.
Yeah, it's like we're waiting for
59.
something, maybe a Fed meeting or maybe
1 minute.
maybe an earnings palooza, as our Finley Walker, our producer, has said. We've got Booking, Mondelez, Caesars, Electronic
related to
Arts.
Luke?
What? What?
Just keep going.
You're tough, man. Visa, Starbucks, Frontier, and Avis. We've got a lot of earnings coming after the closing bell. And then, of course, we've got
Here
some
we
big
go.
trade
Come
lines
on.
tomorrow and Thursday.
After hours for the next half hour, this may move up. You know what I'm getting? I'm going to leave the trade on.
On Thursday.
If it
And we also
doesn't,
get details on how the Treasury
1 minute.
plans to issue debt over the next quarter. This
There we
as
go.
we see Treasuries extend their gains, as Romain was just pointing out. This auction was better than expected. Surprise demand for 7-year notes.
It's really crazy because we think about that Fed meeting,
Oh, I just got the green forecast cloud too.
actual hard economic data that presumably the Fed, I mean, I know it's backwards looking, but presumably they're not getting the report. And
Well, let's see if it breaks through the 20. If the 20 turns into support, then I'm feeling good for after for the next half hour. We'll drift up. I'm hoping.
Yeah, absolutely. And we've had quite a run too. Let's not forget that. And there are some folks out there that maybe think things are once again getting a little lofty.
All right, well, after 6 straight days of gains for the S&P 500, 6 straight record highs for the S&P 500.
Yeah, I wouldn't do this with real money hazard, Matt. That's why I keep saying it over and over. We're just playing around for fun because I have the extra evals and they were basically free. It was part of the package. So we're just playing around with them so that we use them for fun, you know. It's just for some fun at the end of the day after we concentrate all day on trying to make good decisions.
256 names, Scarlett, to the upside, 246 to the downside.
All right, let's take a look at the IMAP. 7 sectors in the red.
You know,
with
there's no really
industrials down by
downside. The
more than
upside is
1%.
if I hit my
Carrier
target,
and, UPS
I'll
are
probably
down
have 2
5,
more
consumer
PA
discretionary
accounts
and
this
healthcare
week.
Also weaker as well. The gainers here, real estate investment trusts and utilities, each up by more than 1%.
All right, guys.
This is
we are getting earnings.
an afternoon in the life of a prop
Maybe
firm
it's also
trader.
crossing the wire right now, but booking saying the gross bookings in the most recent quarter came in above street estimates, $46.7 billion. EBITDA.
All right, I got a call, guys. I got to write a deal. I'll be back in about 5-10 minutes.
Than what the street was looking for at 2.21 EPS. The bottom line adjusted as always 55.4. Street was looking for 50.
Yeah, but this is yeah. No, I know what you're saying.
Metrics, including on the top
But this was a longer term idea. My idea was we were going to go back to the VWAP
Take a look at Avis, the rental car
before the end of the day. So I used that idea with the free eval and got in before MOC. That was the idea. Was it a good one? No, it wasn't a good one. But it's fun to watch. All right, I'll be back, guys.
Avis down about 1% in after-hours trading.
Okay, I'm looking at what's happening with Caesars Entertainment. Second quarter net revenue coming in at $2.91 billion. Estimates for that were $2.86 billion. That's second quarter same store net revenue. Second quarter loss per share coming in at 39 cents. Overall, second quarter same store net revenue did beat estimates. Shares right now, well, they are unchanged.
All right, let's get to Corvo. That, of course, playing into the semi space and has had quite a run this year. The company, let's go right to the forecast. See second quarter revenue of about $1.025 billion plus or minus 50 million. See second quarter adjusted EPS, a range of $1.75 to $2.25. That is above what the street is expecting of $1.64. And let's go backward to the last quarter. First quarter adjusted EPS, 92 cents versus an estimate of 63 cents a share. We'll look for some color around that number because quite a gap there. And first quarter adjusted revenue of 818.8 million. Again, that seems to be a big beat. The estimate on the street was 771.1 billion. And just taking a quick look at what this company is doing here in the aftermarket as we bring it up, it's up about 14%. So I want to know a little bit more about those numbers.
Yeah, I do too. I do want to go back though to the 2 travel stocks that just actually reported, Booking and Caesars, both lower now in the after hours trade. And I am curious about this idea of kind of like where travel goes next. Booking, of course, not providing a hard forecast in the release, but when you take a look at what Caesars has to say, it gives you some sense here that while things are, I guess, stable, it does not necessarily seem to indicate that they're expecting any material growth from current levels going forward.
Yeah, absolutely. I'm just taking a look at the booking statement from the CEO, Glenn Fogel, talking about reaching a milestone with connected trip transactions. There's a 30% increase on Bookings.com's total transactions year over year, healthy growth across different verticals, especially with flight tickets up 44%. So again, it comes back to people's willingness to spend in this current environment, which, you know, is better than it was 3 months ago, but not enough necessarily for investors to feel completely comfortable with the company beating and exceeding their forecasts.
On that willingness to spend in this environment, Scarlett, we're getting some commentary from Tom Reeg, the CEO of Caesars, who says that in Las Vegas, we posted solid gaming results in the face of softer market demand in our hospitality verticals, but net revenue and segment revenue increased 4%, driven primarily by Caesars Virginia and New Orleans. So maybe people aren't necessarily trekking to Las Vegas as a result of uncertainty, but they're visiting these more regional areas and spending money there instead.
All right, I'm a little obsessed by the crypto space. I want to go back to Corvo because the company's chief financial officer, Grant Brown, saying the company's fiscal first quarter revenue and non-GAAP EPS exceeded the high end of guidance driven by broad-based demand. It made me want to go into the supply chain function of these guys. Their customers, number one customers, Apple, Samsung Electronics. I mean, it's a wide range of industries, but again, the stock up about 11.6% here in the aftermarket. And keep in mind, it's up about 21% year to date. So quite a bump to the upside here.
And just a reminder for our viewers, we're still awaiting to get earnings out of Starbucks as well as Cheesecake Factory. EA, of course, video game company, also expected to report sometime soon. But it gets to this idea, though, Carol, I mean, to your point, this idea of how these companies, the tech companies, of course, that you're referring to, how they sort of transition. Like, is this all about AI? Is this all, of course, about crypto as well? EA is out, so too is Starbucks. Where are we going, guys? Let's do Starbucks first here. Starbucks crossing the wire right now. The company saying that international comp sales, as expected, were flat, down about 0%. U.S. comp sales also were down about 2%. So a negative sign in front of that. But the good news is that comp sales were actually dropped less than what the street was looking for. The street was looking for a drop of 2.5%. Operating margin came in below expectations, 10.1%. The street was looking for 11.6% here. And the company overall basically saying that as comp sales drop on that 2% level, both in North America, the U.S., and of course flat sales over international, it is saying adjusted EPS coming in at 50 cents a share. I just wanted to double check that number. The street was looking for 65, so it looks like a miss on a lot of key metrics here. But again, this is a company where the quarter that passed is less important than the guidance that they give for the future.
All right, and to that end, let's take a look at EA Electronic Arts, the video game publisher. It has maintained its full-year net bookings forecast, sees it at around $7.6 billion to $8 billion. Analysts were looking for $7.8 billion. And then also saying that the first quarter net bookings for the quarter that ended was $1.3 billion, slightly higher than the anticipated $1.24 billion. It also sees earnings per share this quarter of about 29 cents to 46 cents and still sees a full-year EPS at about 309 to 379. Stock moving just slightly lower in after-hours trade.
Okay, let's go to Mondelez, the maker of Triscuit and Cliff Bars, among others, down about 0.3%.
That's what you picked? Not Oreos and the good stuff?
Hey, you know what? I want to do the ones that people aren't necessarily familiar with.
Bars, okay.
If you go to Mondelez's website, the first thing there is
Oreos!
Triscuits. Come on. This is a healthy world that we're living in.
Okay.
Well,
some of us, yeah.
The shares are ever so slightly lower in the after hours, down 0.4%. The company still sees fiscal year organic net revenue at about 5%. The estimate was for 4.95%. Second quarter net revenue above estimates at $8.98 billion. Second quarter adjusted operating margin 14.3%. Second quarter adjusted EPS above estimates at 73 cents. The estimate was 68 cents.
All right, we've got
they also make Chips Ahoy.
And Ritz crackers, Tate's cookies.
But that was the third thing.
You know,
good
Tate's.
All right, snack hour it is.
Tate's. You can use
Toblerone.
your Visa to buy things made by Mondelez. Visa is out with third quarter adjusted EPS, $2.98 a share. That is better than the forecast of $2.85 a share. And third quarter net revenue coming in at $10.2 billion, folks. That too is a beat. The estimate on the street was $9.87 billion. Stock's been bouncing around, but right now it's up, remain up about 0.5%.
And just real quickly, Mara Holdings, kind of, I guess you call it, I don't know, the crypto energy company, 2Q EPS, $1.84. That compares to a loss from the previous quarter of 72 cents a share. So it looks like an improvement on the bottom line. Not a lot of analysts cover this, so hard to sort of match this up with street expectations. Shares higher by about 2.6% in the after-hour trade.
All right, and don't hate on Triscuits, as Tim would probably say at this point. I'm just going to lend it there. I should point out, too, Seagate's out. Fourth quarter revenue coming in pretty much in line. Fourth quarter adjusted EPS, $2.59 versus $2.45, the estimate. Stock, though, is down about 8.3% in the aftermarket, so we'll look for some more headlines on that
Western
one.
Digital down as well on the heels of that.
So pulling down the sector. All right, whoa, that's a wrap. A lot of earnings across platform, radio, TV, YouTube, Bloomberg Originals. Scarlett and Romaine continuing there on TV. Tim and I continuing here on radio on Bloomberg Business Week Daily. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead. with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. We're just talking about Oreos in here.
I'm
Don't eat
super
on
hungry.
Triscuits, man.
I don't.
Come
I
on.
like Triscuits.
All right, that's good.
Love me some Oreos.
Hey, a lot happening in the world of pharmaceuticals today. We spoke earlier to AstraZeneca CEO Pascal Soriot. Also, Sarepta Therapeutics shares rising sharply today after a sudden turnabout from regulators on Monday. That was when they reversed course and recommended that patients who can walk be allowed to take its gene therapy again. On the other side, Novo Nordisk shares fell by a record after slumping weight loss drug sales led to a profit warning that wiped out close to $100 billion in market value. I mean, that is a huge decline. We got a great roundtable on all of this. Jerry Smith is Bloomberg News healthcare reporter. Damien Gardet is Bloomberg News health reporter. They both join us here in the Bloomberg Interactive Brokers studio. Jerry, I want to start with you in the Sarepta story, because this story has been a long time in the making. Bring us up to speed on everything that culminated in today's turnaround in its share price and the turnabout by the FDA.
Yeah, so Sarepta is a biotech company that's been really a pioneer in developing treatments for Duchenne muscular dystrophy. And they've managed to get several drugs approved. And, the latest one is a gene therapy called Elevidys. And this was a controversial drug when the FDA approved it, because the clinical trial data didn't clearly show that there was a benefit to patients. And just in the last few weeks, the company disclosed that there was a third patient to die on one of their gene therapies. There were two teenagers who had died after taking Elevidys. And so the FDA was under a lot of pressure to do something about this. And they asked the company recently to pull the drug from the market. And in a really unusual move, the company said, no, we're not going to do this. And then a few days later, they relented and they did pull shipments of Elevidys from the market. And then last night, the FDA came back and said that we are removing the hold, and patients who can walk can now get this gene therapy again. And the context here is that the FDA was getting a lot of pressure from patient advocacy groups who really felt that we want to have access to this drug. We understand the risks, and we still, want to have access to it. There was also a lot of pushback from conservative media. We saw the Wall Street Journal editorial board, criticizing Vinay Prasad, who is a top FDA official who oversees the gene therapy reviews at the FDA. So just a really fast-moving story. And with the latest development, Sarepta investors, I think, are breathing a sigh of relief that this drug is going to be on the market, at least for some patients.
I always think it's a tough balance, right? Because the FDA wants to make sure it's safe, right? And they don't want certainly anybody else to lose their life as a result, potentially, of a certain medication or treatment. But at the same time, I mean, for the patients that were taking it, was there essentially no other choice?
Yeah, I mean, there are...
In terms of treatments and stuff.
In some cases, they don't have another choice. There are a few other drugs on the market for Duchenne muscular dystrophy that Sarepta sells. But yeah, I mean, this is, these patient advocacy groups are very well organized and vocal. And, they point out that this is a condition that is fatal if you don't have any treatment. So, a lot of these patients were saying, we understand the risks and we, want to have the choice of whether to move forward with this drug or not.
How does the gene therapy work, Jerry?
So gene therapy is, it's really a new kind of cutting edge medicine where you are, in some cases, replacing a defective gene. So with Duchenne muscular dystrophy, these are patients who can't, there's a dystrophin, a protein where they don't develop enough of it. So a gene therapy is a way of delivering, a replacement gene or a working gene. And the idea is that it can help these kids and avoid what's, muscle. It's a muscle disorder where their muscles are kind of wasting away.
But a treatment that's distinct from gene editing or CRISPR technology, like we've talked about with Jennifer Doudna, for example.
Yeah, gene therapy and gene editing kind of get lumped into the same group. I mean, one thing that's unique about it is this is a one-time treatment. And Elevidys, the Sarepta treatment, costs $3.2 million. So it's one of the most expensive treatments in the world. But yeah, the idea is that it's a one-time treatment that theoretically can last for a long time. But Elevidys has been controversial just because the clinical trial data wasn't clear-cut to show that this drug works.
So is the FDA doing its job?
I think that's what is being very much discussed right now. The drug is still not on the market for older patients who can't walk, which is still a sizable part of the Duchenne population. So, the story isn't over yet. But yeah, I mean, for Sarepta, this is a company that was facing a $1.2 billion debt payment in 2 years. Also had some payments that it had to make to Arrowhead, its biotech partner. So it was facing a lot of financial pressure. And, getting this drug back on the market, I think is it's a win for the company.
It was also $119 stock back in February. So it's quite a chart. I mean, going beyond the personal story and the impact it can have on people's lives. But the stock chart is like kind of very telling of what it's been like this year.
Yeah, investors have been on a real roller coaster with this company.
All right. Well, speaking of a roller coaster, let's talk a little bit about Novo Nordisk because shares are down 62.5% from their highs back in 2024. I want to bring in Damien Gardet. He covers healthcare and pharmaceuticals for Bloomberg News. We got some news out of Novo Nordisk. They've named their head of international operations as CEO after slumping weight loss drug sales led to a profit warning, wiped close to $100 billion off its market value. Just a couple of years ago, we were talking about Novo Nordisk single-handedly lifting an entire European economy. What happened?
Well, slowly but surely did Novo, which is sort of like the Coca-Cola of these like GLP-1 weight loss drugs, cede market share to Eli Lilly, which I guess it'd be offensive to call them the Pepsi, but either way, they were the incumbent, and they basically invented this market category and watched as through a series of scientific developments, arguably missteps on Novo's behalf, or actually inarguably missteps on Novo's behalf, suddenly we get to the point where their banner drugs, Ozempic and Wegovy, are not growing at the rate that they thought they would and that obviously the market thought they would. So the news today, or one aspect of the news today, is they basically cut in half their projected revenue growth for the year, which didn't go over well, as you mentioned, and feels in many ways like Novo is kind of ripping the Band-Aid off. This has been a gradual decline, and then suddenly all at once, the company ousted its CEO back in May, and this is them, I think, trying as best they can to reset expectations. There's a new CEO, as you mentioned, whom they've promoted to lead the company forward, and I think they want to, I guess, begin anew, at least in terms of perception. Lilly is outpacing them in this market. Novo has other irons in the fire, and again, they have this, decades of expertise in this space. But I mean, I think there's no question that things have horribly gone awry for them based on where they were just a year ago.
Don't count them out, or it's just kind of an evolving market. It's now, a couple of years old, a little bit more than that, 2.5 or so.
Yeah, and I wouldn't count them out in that it has proved to be a really dynamic market. Like you said, a year ago, it just seemed like they were kings of the roost of these very much in-demand weight loss medicines. Lilly seems to be pulling into a pole position now, but things can change dramatically. There are many other competitors in this field. There are, the medicines we know, like Wegovy and Mounjaro, are injectable. There are oral medicines coming both from Lilly and from other firms. I think Novo would say they're very much in it, and they have the legacy to recapture that position.
Yeah.
But, it remains to be seen.
All right, we got to run. I feel like we've done so much on pharmaceuticals today, kind of all in a big way. Jerry Smith, healthcare reporter here at Bloomberg, and of course, Damien Gardet, health reporter as well at Bloomberg News in our studio. We're switching gear. We're talking real estate when we come back.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Among the companies reporting earnings after the close of trading, Visa out with a fiscal third quarter profit forecast that did top Wall Street estimates as the world's biggest payments network reported double-digit gains in cross-border purchases and processed transactions. After hours, we do have shares of Visa. They are trading lower. Visa down right now by just about 1%. And Starbucks sales and profit fell more than anticipated, signaling that a plan to revive growth by speeding up service and making cafes more welcoming has yet to bear fruit. But after hours, we got Starbucks up by just about 3.5%. The Dow, the S&P, and NASDAQ all ending today's session in the red. S&P 500 snapping a 6-day winning streak. S&P today was down 19, dropped there of 0.3%. Now it's 63.70. The Dow down 204, down 0.5%. NASDAQ Composite Index down by 0.4%. The 10-year ahead of the Fed decision tomorrow, 4.32%. The 2-year 3.86%. Gold up $10 the ounce, up 0.3%. And West Texas Intermediate Crude.
All right, I'm back.
Today, now with a $69 handle, 69.43 on
Oh
West
no,
Texas
it's not supposed to drop late day. It's supposed to run.
24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts.
It's usually been running up.
And that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Just last month, the team at Bloomberg Intelligence released their findings of a return-to-office survey that
I
showed
got
the state
one
of the
more chance on these.
working in the office here in the city. So among
Give
the
it,
findings,
give it more
Carol,
room. I can't.
26% of
Oh, all right,
respondents
I
are
can give
working
it
in the
some more
office
room.
5 days a week. 46% cite increased productivity as an encouragement for
It'll
working
blow
in the
me
office.
out before it
And
hits
get
that.
This is about leverage with the employer versus the employee. 75% of respondents
I got another one
prefer
for
to stay at their
tomorrow,
company,
and then I can
even
get
if
5 more for
their
$4.
employer
So I
mandated 5 days in the
think
Yeah, I mean, it's
one of
kind
these
no
will
offense,
hit. You
it's
know
kind
what
of
I'm
we're meant
saying?
to do. I mean, I think there should be
but
some flexibility.
If you look
but
at the subway data,
Yeah.
we're still not back to pre-pandemic
it's still kind of
levels. The
quiet, right?
turnstile data.
And you, especially on Mondays and Fridays, I feel like there are days where you just see nobody coming in.
Fridays for sure.
Let's see what our next guest has to say
I'll
about
be right
kind of
back.
where we are when it comes to real estate. Back with us is Jay Neveloff. He is partner and chair of real estate U.S. at Herbert Smith's, Freehills, and Kramer. He has worked on more than $100 billion in real estate deals over his career. That includes the Waldorf Astoria conversion, the Time Warner Center, a lot more. He also, for many years, and we talked about this a little bit when he was on last, was one of President Trump's real estate attorneys. They're not working together at this point, but we're delighted to have him here to kind of get a good macro snapshot of where we are. He joins us in our Bloomberg Interactive Broker studio. Welcome back. How are you?
I'm delighted to be here. Thank you.
It's good to have you here. When you do look at real estate and you're working with different investors, institutional clients, tell us kind of the level of activity that you're seeing and what kinds of deals are being done and who is doing them.
I'm seeing a tremendous amount of activity, and I'm very bullish. I think it's going to be a moment in time.
More than you saw at the beginning of the year?
Much more.
Okay.
Much more. We're a lot more stable, even though we have situations with the tariffs and that concern. The market has rationalized that. The stock market's not reacting to it. I think in real estate, there's a lot of money poised to go into real estate. It's domestic money, and it's also international money that I'm appreciating more now that I'm part of a law firm merger, and I have more of a global view. The metrics, in addition to the money being available, the metrics are that the lenders are getting more aggressive in terms of enforcing their rights. There are people in deals, investors in deals, or have deal fatigue. They want to get out of the deal. They want to have their money back and go into new deals. If private equity funds, those funds have wound down, and the funds are anxious just to finish up. So the metrics are all there to transact. We're seeing a lot of transactions, and we fully expect the transactions are going to ramp up. We're hiring more to be prepared for it.
Are the transactions happening because things are being repriced, maybe at lower valuations?
Yes. And the price is a direct relationship to the interest rates, and I know we're going to talk a little bit of interest rates, but people need to transact, and that's just happening. And it's not always publicized.
What does that mean? They need to transact because they need to move capital. Like
because the money sources need to put money to work. Number one, the people who want the money, the lenders are saying, we're going to foreclose. If we foreclose, you have a major tax impact. The lenders just want their money. They're fed up with deals that are stagnating. You still have office loans that are suffering because of people aren't coming back to work. People aren't renting offices. That's changing. The leasing activity in the market has increased dramatically. I think the one disappointing thing that I saw on Bloomberg today is that private home sales are down, and I think that's a real issue, and I think that's something that the Fed should take into consideration in looking at the rate. I think that should push them to lower the rate. I don't really believe they will lower the rate in this meeting. I believe they will in September, but they should.
But you shouldn't just lower rates to get deals done. Like monetary policy shouldn't be done just to get homes sold.
I agree with you, but I think
because everybody we talk to in real estate is like, yeah, of course we want. I mean, of course you guys want lower rates. It's better for the industry.
You have a lot of if we're talking about rates, you have a lot of competing factors. You have the stock market, which is pretty stable. Today it went down a little bit, but it's pretty stable and going up. We're at or near full employment, but interest rates are climbing a little bit. The mortgage rates for homes are climbing in the high. I'd like to see them lower. So you have competing metrics, and I do think that the Fed will lower the rates. I don't think it's going to happen this meeting.
I want to go to, I know we're talking commercial real estate here, but you mentioned residential real estate and home prices, so I want to go there for a minute. The challenge with residential real estate in the United States, as Jay Powell has talked about, isn't one of monetary policy. It's one of local zoning, and it's one of supply and demand, and we have a supply problem in this country. So in your view, would lowering rates help bring more supply on, because there would be an incentive for builders to build? Would it lower building materials or building costs?
I don't know that it's so much building materials. If the interest rates come down, when I look at the mortgage interest rates, they're at or approaching 7%, maybe even a little bit above. That's a pretty high rate historically over the past several decades. I remember when I bought my first house, I got a rate of 8.5%, and I was thrilled with that. But the world understands and expects different rates. I think that if the rates were lower, more single-family homes will be purchased.
But lower
and I think
rates,
that's a good thing.
But this hasn't happened this cycle. But higher rates are supposed to lead to lower home prices, because it is all about that monthly payment. That was supposed to happen. That didn't happen.
It didn't happen.
Why didn't that happen?
I wonder about the same thing, and I wonder whether we need to reconsider the metrics that we use in terms of evaluating all this.
Oh, we're bumping up a little. I always notice a bump the last 15, 20 minutes. Be cool if we got it today.
Yes.
So the prices will come down, and prices for single-family homes have come down in a lot of regions, but you have to find the equilibrium.
Okay, so talk to us about deals that are getting done. What types of deals are getting done, and who's doing them? So
Recapitalizations, they're existing deals that need fresh money because they need to pay down the lender, or they need to refinance, and the new lender wants to have a lower amount of the mortgage, of the debt financing, and that's where it comes in. And we don't always see those deals. Though there's, in a mortgage, in a sale, there's something that gets recorded in the public records. If it's a recapitalization where somebody's coming in with new money and it has some priorities in it, a pref equity deal, as I would refer to it, there's nothing that gets recorded. So the brokers may see it, but there's no public record of it. I could tell from the activity that we see throughout our practice that a lot of this is happening, and maybe not enough, but there's a lot of recapitalizations going on all over. That's also a way for the owner not to have a taxable loss when they sell, because the building or the property is worth less than when they financed it. So they have incentive to recapitalize, so they know how to make a sale.
What type of building? Are we talking office? What are we talking
We're
mostly?
talking office, retail, residential, rental properties.
Are you seeing any? There have been some prominent, and David Weston of Wall Street Week has done some stories about this, but there have been some prominent conversions in New York City of office to residential.
Yes.
Is that done?
No, it's not done. I don't know that it's the end all and save all, because not every office building is compatible to be residential, either because of zoning rules that are being loosened because the city understands the challenge of that. Some of the buildings are difficult because the ceiling heights don't lay out, because the core of the building is too big. but there are still a lot of office buildings that are being converted and others still that will be converted. So those office buildings aren't in areas where you're going to have easily affordable housing. I think affordable housing is going to be a real issue going forward also.
We're speaking with Jay Neveloff, partner and chair of real estate U.S. at Herbert Smith Freehills and Kramer.
You know, we teased coming into you, Jay, about the Waldorf conversion, and we've certainly talked about it here at Bloomberg. We've written a story about kind of the new Waldorf. Massive undertaking, combination of luxury residences, a smaller updated hotel. Tell us about that process.
I will tell you it's spectacular. Having been there, I went periodically throughout the renovation. I went last week, and it's just spectacular. If you walk into the Waldorf and you walk up from Park Avenue and you see the mosaic floor, which honestly, I've years and years, decades, I probably walked on and never noticed. Right now, if you walk in this afternoon, it's mind-blowing. If you look at the murals at the public areas, it took my breath away. And I've worked on it for 10 years, and it was very exciting. Among the things that we did was going...
10 years, $2 billion project.
At least it was a $2 billion purchase price, virtually.
Yeah.
The project was a lot more. If you want to go to the ballrooms, the ballroom is spectacular. The anterooms around the ballroom, they had murals. I went in and watched them restoring the murals, and it looked like Michelangelo. It looked like the Sistine Chapel. The artists were on their backs and they were finishing it. It's worth a tour. You just have to see it. And there was a need to go back to how the grandeur of what it was originally, and a lot of attention was done. We sat through a lot of meetings where the architects, who were terrific, came up with ideas. They wanted to change this, they wanted to change that, and the answer was, go back to the original, go back to the grandeur of the original. If you ask yourselves a little bit of trivia, why do you have to walk up a flight of steps from Park Avenue? And that's because when the Waldorf was built, Penn Central was there, and it wasn't totally suppressed on the ground. It was a little bit above ground, and they had to make those steps to accommodate that. There's just so many fascinating things, but it's everybody in New York, every tourist who's in New York should stop by, look at the lobby. It's just breathtaking.
I'm looking back, and I think February you saw one bedroom sold for over $3 million. One bedroom from over $3 million, another bedroom for about $2.5 million. It's interesting, to see the demand.
It's a piece of history.
We got to run. Thank you so much for coming in.
Thank you for having me.
Yeah, we really appreciate it. Jay Neveloff joining us back here on Bloomberg Business Week Daily, partner and chair of Real Estate U.S. at Herbert Smith Freehills and Kramer in our Bloomberg Interactive Broker studio.
Hey, the S&P 500 fell by 0.3% off of all-time highs, but still 6370 on the index. The NASDAQ Composite down 0.4%. The Dow down 0.5 percentage point.
I just want to mention Starbucks now up about 5% here in the aftermarket. So this is after a sales miss points to a sluggish turnaround under the new CEO, Brian Niccol, but it seems that they are liking maybe what they're hearing on the call. More to come. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. It was a down day on Wall Street with the S&P snapping a 5-day winning streak. Do want to begin, however, with Starbucks. Stock is popping after earnings, up 4.5% after hours. Starbucks saying more than 20 parties are interested in its China business. Again, after hours, we do have Starbucks shares gaining by just about 4.5%. Traders send stocks lower ahead of the Fed decision tomorrow. Concerns about high valuations overshadowing hopes for an extension of a tariff truce between the U.S. and China. The Dow, the S&P, and NASDAQ all lower today. Again, the S&P snapping a 6-day winning run. S&P down 18, now at 63.70, drop there of 0.3%. The Dow down 204, down 0.5%. NASDAQ down 80, a decline of 0.4%. 10-year 4.32% with a 2-year currently yielding 3.86%. Gold up $11.50 the ounce, now at $33.26, up by about 0.3%. And West Texas Intermediate crude up 3.8%, $69.26 a barrel. So we do have the decision coming down at 2 o'clock Wall Street time. Jay Powell's news conference at 2:30 Wall Street time. Yes, we'll have everything for you here on Bloomberg Radio. Danielle DiMartino Booth is the CEO of QI Research, and interviewed on Bloomberg Business Week Daily. She was asked what is top of mind for Federal Reserve policymakers.
There's a lot going on. I think there's probably a sense of despondency and regret right now at the Fed. I think that the full array of data would have them cutting rates, if not 4. The constancy of the humiliation coming out of the White House.
Danielle DiMartino Booth of QI Research, interviewed right here on Bloomberg Business Week Daily. JP Morgan Chase said to be nearing a deal to take over Apple's credit card program. That according to the Wall Street Journal. JP Morgan Chase down 0.4%. Apple ahead of earnings Thursday down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Walking into the office this morning here in Midtown Manhattan, there was certainly a large police presence that I noticed. Massive, like tactical officers with bulletproof vests and what appeared to be assault rifles.
Definitely an
on
impact,
Lexington Avenue.
right, from what happened yesterday.
Yeah, it follows the mass shooting at an office tower that left 4 people and the gunman dead, including a Blackstone executive and a New York City police officer. Katya Porsakansky is Bloomberg News New York bureau chief. She joins us here in the Bloomberg Interactive Brokers studio. Also here with us is Bloomberg's Matt Boyle. He's senior workplace and management reporter. He's joining us from Westchester this afternoon. Katya, just bring us up to speed on where we are at the latest with the situation.
Yeah, absolutely. This is obviously a story that has stunned the corporate world and the financial industry, which lost a key executive yesterday in Wesley LePatner, who was killed at Blackstone. Right now, the latest from the NYPD is they're trying to piece together the journey of the gunman from Nevada to here, where he got the parts of the gun, who supplied them, how he was able to carry this off, and they really want to look to see if there are any other people involved that they can be questioning and maybe pursuing charges against.
My understanding is that he had a concealed carry permit in Nevada. Would the type of weapon that was used in this be part of a concealed carry permit?
I'm not sure. I'm not a guns expert, but
like these are not weapons that are allowed in New York City. This type of
no,
weapon.
and these kinds of events very rarely happen in New York City. That's something to New York gets a bad rep, but this is the worst mass shooting event in 25 years in New York City in terms of the amount of people killed. These things don't really happen here. In terms of a random event where people don't know each other, because we do have strong gun laws here, but it's stunning in many fronts, and it actually goes to what a lot of the companies were telling us, that Matt's going to talk about, which is like it feels a little helpless in terms of what you could have really done to avoid this situation when you're confronted with that kind of a weapon. Your training only goes so far,
right?
And your security guards can only do so much.
Matt, I can't even, and come on in, the conversations that we've had certainly in the newsroom from the minute we all walked in this morning
our makeup room, like just people talking about, all right, kind of seeing how a scenario could play out, we and probably many people around the city in their own offices. What are you hearing from the security teams about what we can do? We live in an environment where we have badges and lots of security and a lot of security at different points as you come into Bloomberg offices. But what are the security experts saying in terms of what more can be done to make sure people are kept
Exactly.
secure?
I mean, I've talked to about half a dozen corporate security officers over the past 24 hours, Carol. And I mean, one thing they did raise to me is that, yes, you could do a lot inside your building, but there's also things you could do even outside your building. One gentleman suggested to me that, one idea is to have armed plainclothes patrolmen outside in the outside the lobby, and we all saw the picture of that of the shooter just strolling right up to the lobby. Perhaps if you had people outside, and again, I want to make clear, we don't know that Rudin did or did not, the landlord did or did not have those types of security people outside the building. But we've all seen this person, just sort of stroll right in. So that's one thing you can do. But I mean, at the end of the day, when someone enters a building with a high-powered assault rifle, there's not a lot you can do. You essentially go into some survival mode. And the question here for a lot of corporations, Carol, is, what is the trade-off? It's security versus cost. It's security versus convenience. Nobody wants their office to look like a jail or, a mental institution, with high bollards and huge turnstiles. And, people want offices to be welcoming. So companies sort of have to figure out what's the trade-off, what's the return on investment here for what we're spending, what are we willing to put up with from a convenience and ease point of view for our employees.
Matt, sadly, this sounds like the exact conversation we have when we talk about school shootings, in the wake of school shootings, and the conversations about fortifying schools rather than attacking this problem from where it begins, which I think many people would argue has to do with accessibility to firearms. Does it feel like to you, in the world that we live in the US, because of the widespread availability of firearms, the only thing we can do is protect ourselves rather than make these things less available to people?
Well, yeah, I mean, in my conversations, Tim, I didn't hear a lot of chatter about, solutions on the legislative or political side. It was all on the, let's say, the tactical side or the corporate policy side. We have to do a new risk assessment. We're going to have to, train up our employees again, or we're going to have to tighten restrictions on elevator access. A key question was, how this gentleman got up to the 33rd floor. Did he just sort of, hop into an elevator that was already open? Why weren't they locked down? Why weren't they all stuck in the lobby? So yeah, I'm not hearing a lot of questions. And given the political environment right now, I don't think that conversation is going to go very far in terms of looking at root causes here, or what role guns play. It's a lot of companies now figuring out, okay, what can we do here? Do we need to do some new and different things? Can we pay for them? And what are our employees willing to put up with? And I think employees today are going to be willing to put up with a little bit more than they were 24 hours ago.
Come on in, Katya.
I want to say, in the case of what happened yesterday, it's kind of like all the worst nightmares kind of combined in terms of like the speed at which it happened. Apparently, the gunman walked in and actually walked past the police officer, then only realized, turned around and shot and killed him. Then he sprayed the lobby with bullets and killed Wesley Lepatner in the lobby, and shot another man, an NFL employee, and then shot and killed the not armed security guard in front of the elevators. And you have to it's all speculation, but maybe he would have been the one who could have stopped the elevator from going up. And it's one of those things. I just think it's hard to imagine these things happening until they happen, and then you start to assess, okay, what could we have done differently, or what kind of protocols could be in place for
Right, and there were several levels there, right?
This is an unprecedented situation.
Yeah, exactly. It's a tough story for all of us, and we're certainly thinking about their families. Katya and Matt, thank you so much. We really appreciate your time today. All right, everyone, this is Bloomberg.
Base news. No, I haven't closed it yet. It keeps getting these weird little pops. You know what? I might re-enter this trade. I might close it at 5 and re-enter it at 6 and see where it goes. You know what I'm saying? Yeah. And just let it run. If it blows me out, I don't, it don't matter.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stenbeck on Bloomberg Radio.
All right, just a reminder of how we wrapped up on this Fed decision eve this Tuesday. Of course, we get that Fed decision tomorrow. Down 18 points on the S&P 500, no new record. After we've seen quite a record run. Dow Jones Industrial Average was down about 204 points.
You get a little bump and get up to 58. I'm going to close it right here.
A loss just shy of 50 points.
Let's take a look at some stocks on the move today. I'm Tim Stenbeck.
And I'm gonna re-enter the long.
We're joined by Bloomberg.
I'll just
News
I'll leave it
reporter
on and go
Natalia
eat and come back and
Kunijevic.
re-enter at 6.
The company makes Oreos,
Yum, yum, yum.
Cliff Bar. That was a recent purchase.
Mhm.
Okay. Toblerone? Is that an okay one?
My husband loves
This is the best one.
I agree
I
with you.
usually get it too when I travel. I buy it in duty free.
Oh, right, because it's
It's everywhere.
We're talking about Mondelez.
Yes, Mondelez. The ticker is MDLZ. The stock is down actually by 3.2%. It was a mixed earnings report. So on the one hand, we do see that adjusted EPS and net revenue came above expectations. However, gross margin was slightly lower. To me, the most interesting thing was global breakdown of organic revenue. So it looks like North American customers. So North America as a region took the hardest hit. Organic revenue was down by 3.4%. Expectations were for a decline of 1.8%. Latin America, slight miss on expectations. However, Europe, Asia, Middle East, Africa, sales came much better than expected. So it all comes down to U.S. consumers. We know that Mondelez has already increased prices, and they already said during the last earnings season that U.S. consumers prioritize essentials over cookies and sweets. I don't know if it's a long-term trend. Maybe it's something for just like this quarter, and then the situation will improve, but I was really surprised.
What do you consider an essential, Carol? Chocolate?
I like a little piece of good chocolate. It's funny that you say that because I had some last night. But I don't eat a lot, but I'm very picky.
The reason I bring this up,
shocking.
and Natalia mentioned this, adjusted gross profit margin rather fell 80 basis points. There were higher raw material costs and transportation costs.
Higher raw material, cocoa, exactly.
Cocoa costs are so high now.
It's actually high, but we do see that there was a decline today. We also saw that Citi analyst said that he expects prices could continue to fall in the next 3 to 6 months on lower demand.
And I will say the commentary, strong pricing execution in our chocolate business and robust growth across the vast majority of our geographies. So the company seemed like they were kind of upbeat.
Yeah.
Okay.
Now I'm really hungry.
Well, why don't you get on a plane
There's a
or
chocolate
book
store
a trip?
as soon as you come out of
There
our
is.
building.
There is.
And they give out samples.
And they're open early and late.
And they give out samples.
Okay. Booking Holdings.
Even at 9 or 10 in the morning.
BKNG moving in the after hours.
Yes, it is a slight move, but I feel it's important to talk about this company because it delivered a really disappointing forecast for the third quarter. They say, of course, they see increased uncertainty, both in terms of geopolitics and macroeconomy. However, so they expect room nights growth. This is a really important indicator to be somewhere around 4.5% in the period. Analysts had expected 5.5% increase. However, the overall report again was really strong. When I looked at room nights sold, rental car days sold, airline tickets, everything beat expectations. So as of now, at least when we look at the second quarter, results are strong. People travel. And even when I look at some booking site, everything is so expensive, everything is sold out. It's really not easy, you know, to travel now.
Stocks up almost 13% year to date, but so interesting to see. We'll see how, like, maybe some more commentary maybe after the call, because the stock dipped, I think, initially after earnings, but you're right, kind of flat here in the aftermarket.
It recovered a little bit.
All right.
Chart Industries.
Yes.
What is
so
that?
This is a company, the ticker is GTLC. So this is an industrial equipment maker. The reason why the stock was up by 15.8% is because Baker Hughes, this oil services giant, agreed to buy this company for $9.6 billion in cash. And this move, of course, will allow Baker Hughes to expand
All right, I
into
gotta close this.
LNG sector, nuclear power. And this is your AI play because Baker Hughes is trying to diversify its business, not to be just pure oil player, but to benefit from this rising demand on energy coming from AI infrastructure, data centers, etc. Also, it's really important to highlight that this is one of the biggest deals since 2016 in the oil field services sector.
Yeah, not bad, huh?
And Charts really has a lot of assets. It operates in 65 manufacturing locations and has over 50 service centers globally. So it's a really strong asset for Baker Hughes.
So ticker again, GTLS, Chart Industries up about almost 16%, right, in today's
Stop,
session.
Phil.
Wow. How did we miss that today?
I don't know.
There's
All right,
so
I'm
many
out.
things
This is
going on.
why it's so great when Natalia Kunijevic joins us. She's Bloomberg News
Agreed.
equities reporter. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5 minutes.
All right, I'm gonna sign off,
Snooze. In the stock market, listen to Stock
I'm
Movers
gonna
on
let it
Apple,
run.
Spotify,
I may hop back in it
Hey, before we wrap up,
once
I do
it
want to mention Starbucks.
once it
because they're up
resets and
3% here in
6
the
o'clock
aftermarket.
hits.
This despite a sales miss.
I really think
According
it's
to
gonna
US
run to the
sellers
View
turning
app
in under the new
overnight.
CEO,
I may
Brian
just
Nichols.
set it
Sales
and leave
profit
it
fell more than
and see if I
anticipated.
hit it
Comp sales dropped by
overnight.
2% in the third quarter. CEO kind of betting that it can give the U.S. business a jolt by
But-
cutting down.
all right,
rent,
brother.
rent,
I'll talk to you
reducing
tomorrow.
menu, remodeling
Bye.
stores. To restore seating, he said that the company's turnaround, quote, is ahead of schedule and vowed to unleash, quote, a wave of innovation in 2026 with a new program resulting in faster service, stronger sales, and a better customer experience. Investors are buying it in the aftermarket.
Okay, look at that.
Hungry. Oreos? What are you going to get on your way out? Do you even like grab anything on your way out?
Yeah, the plums are really good. They're organic and they're in season.
Plums. I make a great peach plum pie with my sister
Okay, I
Great.
eat
Jimmy-
that stuff.
all the time. Balance of Power starts now.
This is Balance of Power, live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
Tonight, the U.S. and China end trade talks in Stockholm, awaiting President Trump's sign-off on an extension of their tariff truce.
We're going to head back to Washington, D.C., and we're going to talk to the president about whether that's something that he wants to do. It's certainly something that's been under discussion, and so we'll brief the president on the outcome of this.
We'll have more on that outcome of 2 days of negotiations and the next steps ahead.
Plus, as the Federal Reserve kicks off its two-day policy meeting today, the expectations going in as the world looks to Jay Powell for any sign of buckling under the president's political pressure. We'll discuss that and more when Massachusetts Senator and Senate Banking Committee ranking member Elizabeth Warren joins us.
Also tonight, an ultimatum for Israel from the United Kingdom.
I've always said that we will recognize a Palestinian state as a contribution to a proper peace process at the moment of maximum impact for the two-state solution.
Downing Street joins France in threatening to recognize the state of Palestine in September as a result of the situation in Gaza, as President Trump breaks with Benjamin Netanyahu on the issue. That plus the new 10-day deadline the president just issued for a Russia-Ukraine truce, when former Deputy Defense Secretary for Russia and Ukraine Evelyn Farkas joins us.
And the deadly shooting spree in a midtown Manhattan office left 4 dead, spawning fear in New York City. The details of the suspected gunman tonight and those killed as the mayor takes steps to reassure the city and the business world on edge.
But we begin tonight with the latest coming out of the trade discussions between the U.S. and China. Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer addressing reporters shortly after wrapping negotiations with their Chinese counterparts in Stockholm today, with talks over maintaining a tariff truce beyond the current August 12th deadline to continue, pending President Trump's final call.
I think it was the level of momentum and the entire reordering that President Trump has done of the global trading system. So now here you have the two largest economies in negotiation. And as I've said before, and we reiterated to them, we don't want to decouple. We just need to de-risk with certain strategic industries.
Joining us now for more, Bloomberg's Michelle Jamrisko. Michelle, it's great to have you back. De-risk versus decouple brings us back to the old days a little bit with the Biden administration. But I'm curious here, did China jump the gun? And is there any doubt that Donald Trump will sign off on this extension?
Yeah, it was interesting that he adopted the language of the previous administration, the Treasury Secretary there. But what is an important difference in what we're seeing in all these trade deals is it ain't over until the big guy weighs in. And they both made very clear, both Jameson Greer and the Treasury Secretary, that they still need to give the full presentation to Trump tomorrow, they say, in the Oval Office before he signs off on these things. So they didn't move the needle that much in all today, but we are waiting on, a number of things to come out of those negotiations, including that tariff top line rate, but also a lot of the non-tariff stuff on export restrictions and the like that we've been talking about for quite some time with the U.S. and China.
Well, and on that point, Michelle, Jameson Greer suggested that the only export restrictions were discussed were China's on rare earths, not necessarily the export restrictions the U.S. has in place on critical technology. Do we really buy that?
That's right. Well, we are hearing one side of the story, of course, today.
Yeah.
We did hear some from the Chinese side as we saw, the Secretary walking back what they said was already an extension of the truce. So we're not quite sure that that's going to be delivered on. But yes, there are other matters, I'm sure, from the Chinese side that they'd be willing to sound off on. I think one thing that Bessent and Greer were mentioning in their availability today was the Chinese seem very concerned about the sectoral tariffs that the U.S. is applying. The U.S., they suggested that they were reassuring the Chinese officials that those would be applied globally, so at least they aren't targeting country-specific and targeting China specifically. So remains to be seen if that eased their concerns at all on the Chinese side.
Yeah, as we await the actual Section 232 investigation outcomes into things like semiconductors and pharmaceuticals. Bloomberg's Michelle Jamrisko. Thank you so much. And we'll have more on that news from Stockholm later in the program. But just a few blocks from our studio here in Washington is another series of meetings that the president is sure to comment on. The FOMC kicking off its two-day policy session, expected to hold interest rates steady tomorrow, even in the face of growing pressure President Trump is putting onto the Fed, particularly the Fed's chair, Jerome Powell. And joining us live here on Balance of Power on Bloomberg TV and radio on that and much more is Democratic Senator Elizabeth Warren of Massachusetts, the ranking member of the Senate Banking Committee. Senator, welcome back. We appreciate you joining us as we look ahead to the decision tomorrow, knowing the next opportunity the Fed would have to cut rates is in September. What would the economic consequence be if they wait that long?
Well, look, I want to see interest rates come down because when interest rates stay high, families pay more on their credit cards, they pay more on their car loans, mortgage rates stay higher, and that's a problem. But there is exactly one person who is responsible for keeping those interest rates high, and that's Donald Trump. Jerome Powell said last month that he would have urged the Fed to lower interest rates last February, but for the chaos that Donald Trump has been causing over tariffs and the kind of fallout that that's going to create in the economy. So if Donald Trump really wants to see interest rates come down, then stop creating so much chaos around tariffs. And I hope the Fed could get it done.
That said, Senator, realizing you prefer lower interest rates, does Jay Powell deserve some credit for holding steady in the face of this pressure from President Trump?
Look, now it's like an upside down world. I want to see Fed Chair Powell lower interest rates. I think that's good for families. I think it's the right thing to do in the economy. But I also want to see an independent Fed. And when Donald Trump simply tries to persuade, he says, here are the arguments in favor, here's why I think you should do it, I get that. But when he threatens to fire Powell, when he blows up this whole pretext of trying to fire him for cause. When he does that kind of thing, now he threatens the independence of the Fed. And there's a real cost to that, not for Jerome Powell personally, but a real cost for our economy. We have built much of our economic foundation on the notion that the Fed makes its decisions independent of political pressure, and that they are a group of people who are economically informed, follow the data, and they make those decisions on monetary policy based on what they think the data are telling them about inflation and jobs. And when Donald Trump blows through all that, he undermines confidence in the Fed and in our entire financial system. That's a real problem.
Well, of course, part of what President Trump and others in the administration argue is that if the Fed lowers interest rates, it will help to ease the issue we have in this country with housing in particular, at least on the interest rate side. But I know you and your colleagues in the Banking Committee are also trying to do things about that on the supply side. As the measure you co-sponsored with Chairman Scott, the Renewing Opportunity in the American Dream to Housing Act, passed unanimously through the committee, quite the bipartisan feat in today's political environment. Yep. Senator, my question is, when we look at the contents of that bill, knowing that part of it is asking HUD to establish new things like loan and grant programs for qualified homeowners or landlords, knowing at the same time the administration is actually trying to reduce HUD as we speak, do these things run into conflict with each other? Can both be done at the same time?
So if I can, let me back up just a tiny little bit. We have a housing crisis in America. Prices are up, and for decades now, officials have just stood by policymakers and said, wow, prices just keep going up. That's a real problem. The real problem is we don't have enough housing. It is a supply problem. So what we have done with this bill is that we are pushing toward more supply. We need about 7 million more housing units in America. This bill has 29 different provisions to it that mostly all row in the same direction. Some involve HUD, and many of them do not involve HUD. But the whole point here is to put the federal government in the position of saying it is a matter of federal policy that we want to encourage more housing development. We want more of it in Massachusetts, in South Carolina. We want more of it out west, down south, up north. We want it in urban areas, in rural areas, and every member of the Banking Committee, all 24 of us, have provisions in there to help make that happen. Yes, we need a functional HUD to help on parts of that, but I do want to underline here, some of the provisions in this bill are about cutting red tape and slimming down some of the programs that HUD works on. Other parts are about we're gonna give some trial runs to some ideas and try a few things that haven't been tried before. We even have an innovation fund in this for cities and towns that are trying to build more housing. There are a lot of good ideas in this bill because the housing problem we have right now wasn't caused by one thing going wrong. It was caused by a lot of things going wrong. So it's going to take a lot of things to help fix it. And I'm excited. Say it again. It was bipartisan, unanimous in the United States Senate. That's pretty amazing.
Yeah. Well, it is duly noted, unanimously passed out of committee. That means every Democrat and Republican voted for this, suggesting there could be some momentum on the floor. If we get that far, Senator, there were a lot of questions about the interference that you could bump into when lawmakers return to town following the August recess, assuming you get there. One of those distractions is the Jeffrey Epstein story. And I have to ask you about this, not that we're featuring this in our interviews, but it is apparently impacting the agenda. House lawmakers went home early because of this. The President of the United States has been talking about, or certainly asked about, a pardon repeatedly when it comes to Ghislaine Maxwell. And I'd like for you to hear what he's said about this most recently, and we'll ask you about it. Here's President Trump.
Mr. President, the President completely ruled out a pardon for Ghislaine Maxwell when you landed. Is that something you would ever consider, and why?
Pardon for who?
For Ghislaine Maxwell.
Well, I'm allowed to give her a pardon, but nobody's approached me with it. Nobody's asked me about it. And by the way, I never went to the island. I never had the privilege of going to his island, and I did turn it down.
I don't know what we're calling a privilege here, Senator, but I'm just wondering your thoughts on this. What do you think is more likely, Ghislaine Maxwell testifying before Congress or getting a pardon from Donald Trump?
I don't know what's more likely, and I'm not good at anticipating this, but I just want to be clear. The only way that this thing resolves itself is to be completely transparent. Put out all of the records, all the testimony, whatever it is that she has told the lawyers down in Florida just earlier in the week. Get all that information out there. Let everybody look at it. And let people evaluate what they think is true, what they think is not true, what they think is credible. But this idea of holding back information and kind of sorting through it, a little piece here and a little piece there, boy, I got to tell you, that is keeping everybody in churn over on the Republican side, sucking up a lot of oxygen that we could be using to do things like work on a housing bill to bring down the cost of housing for every family across this country.
Will Congress push these files out in September when everybody's back?
Well, the House has already moved in that direction. If we need to, we have raised the issue now in the Senate. Look, this is one of the things that Congress does. It's part of our oversight. And that is to say, when it's time to make these records public, let everybody see what's in the whole file. Because there have been a lot of contradictory statements here. Remember, it was the Attorney General of the United States who says at one point, yes, that she has the Epstein files on her desk. She's talking about backing up, what was it, a truckload of documents and files, and then turns around and says nothing to see here. Well, you know, that doesn't have much credibility for anyone. I think the only way out of this mess is just to be totally transparent, just put it all out there, let the American people sort through it. You know, Americans are pretty smart, and they'll figure out what it is that's happened if they can see all of the pieces together.
Well, I'm glad we could talk about all of these issues today, Senator. Welcome back. Democratic Senator Elizabeth Warren of Massachusetts, ranking member, Senate Banking Committee. We thank you, as always. Back in New York, the city's Midtown area, full of some of the world's largest banks and skyscrapers, on edge, following what is now the deadliest mass shooting in the city in 25 years. Tighter security can be seen throughout the area after a 27-year-old gunman wearing body armor and carrying a high-powered M4 rifle opened fire at 345 Park Avenue, home of Blackstone, the NFL, KPMG, and other organizations. Less than 24 hours ago, the gunman ultimately killing 4 before turning the gun on himself. Among those killed were Wesley LaPartner, who ran Blackstone's real estate fund for wealthy individuals, Diderol Islam, NYPD officer, security guard Alan Etienne, and Julia Hyman, an associate at Rudin Management.
Officials are investigating the suspect's motive for the attack. The law enforcement says the gunman targeted the NFL. A manifesto and notes found indicated a fixation with chronic traumatic encephalopathy, or CTE, caused by head trauma. The New York Governor, Kathy Hochul, has ordered flags throughout the state to be flown at half staff in mourning of those lost. Last night's shooting was the 253rd mass shooting in the U.S. so far this year, according to the Gun Violence Archive. And we'll be back with more Balance of Power after the break.
medium-term growth has been relatively weak in the recent years, and it's expected to continue being weak. We have much lower long-term, medium-term growth than we used to have, let's say, 10, 15 years ago. And so that's a concern here, is that the tariffs are actually going to add to that tepid, mediocre medium-term growth and may not necessarily be reverted anytime soon.
IMF chief economist Pierre-Olivier Garancha this morning on Bloomberg discussing the impact of tariffs on the global economy. This comes as President Trump wraps up his trip to Scotland, where he announced that the U.S. had reached a trade deal with the EU. This afternoon on Bloomberg, Jovita Nalupšiana, EU ambassador to the U.S., discussed the fine points of this trade framework and the parts of the deal that still need to be ironed out.
It brings stability and predictability for their markets. This is what all the business we were engaged on both sides of Atlantic, be it in Europe, be it in the United States, were actually asking and craving for. So I think this is one of the positive sides. Another thing, we have to think what would be the alternative. And we had received the President Trump letter, which actually indicated that the tariffs could be 30% and not 15%. So I think that going into the trade war will be probably the worst possible situation. So having a deal, we can really work through the details. Having a political deal, we can work through the concrete details and get it done, and then focus on what we know best, transatlantic cooperation.
Now, what happens next, of course, depends on how European multinationals and industries respond, whether they will absorb the tariff impact or do what, say, LVMH has been doing, which has promised to build new factories in the U.S. in hopes of mitigating the tariff impact. How are they coming to the EU to ask for guidance, or how are you guiding companies?
Well, I think, first of all, we have to finalize the paperwork. We have to finalize the statement, so it will bring even more clarity when we have it written down. It will be clear what kind of the tariffs we are talking about, because there will be a specific treatment for the strategic sectors such as aircraft, certain chemicals, certain drugs, where the tariffs will come back actually to the pre-January level. There will be definitely products which will be charged 15% of tariffs. What is important, it will include most favored nation status tariffs, which we already have. We still have to work out on steel and aluminum. So there are a lot of elements which are not yet written down, and we have to work through those details. So my advice, if it would be given, would definitely be really let's patiently wait when we have the finalized deal.
I am curious, though, and I know it's going to take a long time before we get there, Ambassador. Were there any sort of requests by the U.S. that the EU avoid any deals with other nations or regions that could potentially be in conflict with whatever you've agreed to with the United States?
Well, look, we have more than 60 deals around the world, and we are continuing negotiating other trade deals. We just finalized the deal with Indonesia 2 weeks ago. We finalized the deal with Mercosur, and the negotiations with India are ongoing. So we have our own deals and our own commitments. I think that what happened over the last 3 months, I have to admit, we focused on EU-US deals and conditions in which the trade could be possible, and that we can come back to those predictable, stable trade relations.
You can find the full conversation with Jovita Nalupšiana, the EU ambassador to the U.S., on the terminal or online. And now for insight into that interview and more, our latest edition of Power Moves with Bloomberg's Romain Bostic, who's joining us live from World Headquarters in New York. So, Romain, to what extent is this market focused on tariffs, or at this point is it more about things like earnings and the Fed decision tomorrow?
Well, I mean, honestly, the Venn diagram on that is kind of looking like one big black circle these days, Kayleigh. And I think there was some optimism when we saw the contours of what an EU deal looks like. I think we saw some optimism when we started to get some headlines with regards to the Chinese negotiations that there was progress there. But of course, that was overshadowed by the idea of the actual economic impact of all of this. Yeah, we know the economic impact is going to be much more severe on Europe than it is here in the U.S., but that doesn't mean the U.S. is off the hook. You had 6 days of gains on the S&P 500, Kayleigh, 6 straight record highs, and that is a big part of the reason why you saw the pullback today. Not because people are pessimistic, but when you have a market that's already topped out, the big question is, are there going to be the fundamental conditions to support further gains? That means in terms of corporate profitability, and it also means, of course, in terms of economic conditions. And Exhibit A of that is something that we got just a few minutes ago. We got some earnings out of 2 big travel companies, Caesars Entertainment, which is a huge casino company, and Booking.com, which of course is a big travel agency. And they both talked about this idea of global geopolitical uncertainty. Now, none of them specifically singled out the tariffs. Nobody named the U.S. or Trump by name, but it was very clear what they were talking about. The idea is that the level of travel and the quality of travel, meaning the quality to them in terms of how much people are spending, has been on the downtrend. And there's a big question as to whether that gets worse once we actually start to see the tariffs really start to kick in. And I think some of the anecdotal evidence that we're getting out of the casino companies, there's been so many videos online, Joe and Kayleigh, showing casinos, big casinos over there, Caesars, the Venetian, basically empty, devoid of all those travelers that you would normally see this time of year. And I caught up with Clinton Henderson over at the Point Sky on the close just a little while ago, and he said that anecdotal evidence is real, and it's supported by the data. There has been a huge drop in inbound travel to the United States by foreign travelers, and the big question is whether that continues going forward.
A lot of people are staying home, Romaine. Pretty interesting, having talked about export controls so much recently, including today with this latest round of talks with China. NVIDIA is not waiting around to find out what the final version of this deal looks like. They just placed a massive order for these M20 chips with Taiwan Semiconductor.
Yeah, several 100,000 of them, which would add to, I think, 600,000 to 700,000 in inventory already sitting there. These are the H2O chips, Joe. And of course, there's been a lot of talk about NVIDIA's sort of high-level Blackwell chips. Well, the H2O chip is kind of a step down from that, and it was deliberately made that way in order to appease the Biden administration, which had raised some concerns about national security and export controls. NVIDIA developed this chip, and then the Trump administration came in and basically said, well, that's all well and good, but you still can't sell this to China. Of course, we learned a couple of weeks ago about a reprieve that will potentially allow them to start selling those chips. But right now, they still do not have the authorization. They still need that sign-off, that letter, that official letter from the State Department, from the Trade Representative's office in order to actually move these chips into Chinese hands. Right now, in theory, they're sitting somewhere in a warehouse somewhere. Taiwan Semi, NVIDIA, they can continue to sort of order these things, call them up, make them, but at some point, they still need the sign-off by the U.S. to actually sell those and actually collect revenue from them.
Fascinating. Bloomberg's Romaine Bostick with the readout here on the markets. Romaine, thank you so much for all the info and the analysis. Coming up on Balance of Power, President Trump announcing a shortened deadline for Russia to reach a ceasefire agreement with Ukraine. It's now 10 days. We'll discuss what the threat of a secondary sanctions mean for Vladimir Putin's next move. With Evelyn Farkas, Executive Director of the McCain Institute, next on Balance of Power, only on Bloomberg TV and radio.